right? So guys, how should an investor look at what's happened?
So seemingly, and this is not official yet because there's a meeting, as our viewers will know, of the group of ministers, and the finance minister has been presenting the proposals that the government has had on GST. Yesterday, the conversation was about the proposals on insurance, and this is both health insurance and life insurance premia that are paid by individuals. The proposal was to exempt the GST that is payable on this premium. The other conversation, we'll get back to that in just a bit, the other conversation had to do with the compensation cess which is going away, and the conversation about how to fill that gap, if at all, because ultimately the states were receiving a portion of this, and to fill that gap in collection of revenues, there might just be something else. But there was no decision on that yet. The most important thing to understand, Neeraj, is, and we'll get a few brokerage notes on this, we'll be speaking with a company as well, and Hiral, is the input tax credit which companies were receiving and making use of because there was a charge on GST. If there is an exemption of GST, they will no longer be able to claim that. And so the price of the base policies going forward might just go up to that extent. So the full benefit of the cut from 18% or whatever it is to zero may not go through to the customer.
And one aspect is, from a consumer perspective, you're talking of a discount of nearly 15%.
Yes.
Because if you talk about the calculation as well, on 100 rupees insurance, the customer is paying 118, taking the 18% GST into consideration. So if you get away with all of this, it's a 15% discount in terms of the policy premium that you pay. As of now, that's the back of the envelope, calculation that everyone's looking at. So maybe an uptick in terms of, people buying insurance, because, we are underpenetrated as a country. So I think that's the reason why this move as well.
And important also because premia have been going up in the recent past. And so if there's a pause or there's a reduction even in the premia, that might just prove to be interesting to consider. But let's talk about...
So just before we get to the global piece, so viewers, part one of this, and we're going to take this story up ahead in greater detail, is that there is a big development that is possibly happened on insurance. The extent of the benefit unclear, but it has an impact on your life, on my life, and everybody else in India who's doing insurance. 100%. Part one. And part two, guys, just this thing that we're looking at central banking meetings.
Yes.
And I don't know, what did you guys think of the RBI minutes that came in? Because a lot of brokerages are saying that the minutes notwithstanding, what seems clear to them is that growth projections will go down. And therefore, the Reserve Bank of India may go ahead and cut rates. So that becomes the other big story for the day.
100%. And there could be another 2 rate cuts. In fact, Nomura, a couple of others had projected it already, that the culmination of this current cycle of rate cuts will bring it to 5%.
Terminal rate.
And we're at 5.5% right now. The next 2 policies in October and December could see 2 cuts back to back. And that's notwithstanding already the September incidence of the CRR cut, which will come into play. So the system will be flush with liquidity at the festive season, which is good news for the economy.
It is good news, but your external uncertainty and tariff risks, these are the 2 that they have pointed out in the minutes as well. So I think that could be something why the policymakers are also flagging that caution so far right now.
100%. And let's talk about what's happened across the globe. In our eye on the globe, we've got US equity markets that ended mostly lower, led by that tech sell-off, which continues. There seems to be a rotation into energy, healthcare, consumer staples. And this is understandable considering the kind of run-up that you saw in tech stocks over the course of the last several weeks and months. Take a look at the ticker. You have the Dow that ended flat, the S&P 500 that dropped about 0.25%, and the Nasdaq that dropped the most, and that is the tech-heavy Nasdaq, which dropped about 0.7%. At this point, there are a few things that are worrying Wall Street, and what are they? First up, you have more signs of the Trump administration's involvement in independent policymaking and private business. A couple of instances of that. The latest salvo is a call by Trump for the resignation of Fed Governor Lisa Cook. And allegations have been made against Cook about mortgage fraud. Cook responded saying that she had no intention of being bullied to step down. Now, the other piece is the fact that Howard Lutnick is considering government taking stake in Intel and other chip companies, and that stake would be in exchange for grants under the CHIPS Act. So Intel prices have been under a little bit of pressure, to say the very least, in the recent past. Now, we discussed the minutes of the RBI policy. There were also minutes of the last Fed meeting, and it turns out that there were only 2 dissenters to the Fed's rate decision, which was to keep it on pause, and almost all participants voted to keep the rate unchanged. And this is perhaps more than the street might have anticipated, which indicates that the rate cuts may not be as quick in the offing. Of course, this is Powell's last Jackson Hole symposium, and everybody is also watching out for what he will say in that final speech, which comes out at the end of the week. Why is this important? It's because in the past 7 speeches that he has made in his term, there has been a move in the market. The 10-year Treasury yield has, on average, in the month that followed that speech, risen by an average of 21 basis points. The dollar has risen by an average 1.4%, and the S&P 500 has dropped nearly 2%. That's according to a Reuters report. So there is a very large amount of attention that will go towards this speech. Bear that in mind. In geopolitics, a couple of headlines stand out. Russia has said that attempts to resolve security issues relating to Ukraine without Moscow's participation were a road to nowhere. And this is amidst this entire conversation between the US and Ukraine, between European countries and Ukraine about security guarantees and the like. The second headline has to do with Israel. Israel's military has announced the first steps of an operation to take over Gaza City. It has called up thousands of reservists, even as a new ceasefire proposal is considered. A statement signal that Israel is moving up timelines to seize Gaza's biggest urban center. This was supposed to happen much later in the year. So that's how it stands. Oh, let's also pull up Asia and see where it's at right now. And just to take the tone and tenor, you have, a bit of a modest start for the Chinese benchmark and declines for the Nikkei as well as the Hang Seng at this point.
Pretty mixed right now in terms of where global markets go. But in terms of Indian markets, it's interesting to see because if you look at the FI numbers, there have been net sellers to the tune of almost around 1100 odd crores in yesterday's session, and the DIs have bought around 1800 odd crores, and this is yesterday's number. But categorically, from an FI and DI perspective, if you have to see why to date, almost 4.8 lakh crores is what they have actually even bought in terms of DIIs. If you talk about benchmarks, the bullish trajectory has actually continued for a 5th consecutive session. We did open on a slightly muted note in yesterday's session, but that upward momentum is what was gathered in the latter half as well. An intraday high of around 25,088 is what Nifty clocked, and this is after or before settling at around 25,050 in yesterday's session. So this is a positive sign as well. From a sectoral perspective, it was pretty mixed because you had Nifty IT, which actually outperformed with a robust uptick of around 2.5%, which was then followed by FMCG and the real estate pack. Sectors like Nifty Metal, Energy, Infra, Auto, all of these actually ended with marginal gains. Though profit booking weighed on sectors like media, that was the worst performing sector in yesterday's session. Pharma and the PSU indices also shed to the tune of almost around 0.3% to 0.5% in trade. Talking about where broader markets were concerned, it actually mirrored the kind of resilience that we saw in the benchmark indices on the benchmark space as well. 0.5% up move is what you saw on that front. If you talk about losers and gainers, Infosys, TCS, Nestle, HUL, NTPC, these were the top gaining stocks in terms of yesterday's session, whereas what was losing was a BEL. Shriram Finance also has been an interesting one because since July, that stock is down nearly 14 to 15%. In fact, we will get you a deep dive in terms of what's actually not working for a Shriram Finance and what is expected going ahead. So watch out for this one. Harsh will be getting us more details. Bajaj Finance, Tata Motors and IndusInd Bank. These were the other ones which were down in trade. So it's an interesting day, but the question today is going to be, Neeraj, if it is going to be a day of insurance, are the banking counters also going to participate? Because probably that rotation could mean some bit of an upside today.
Yeah, I mean, well,
it's
anybody's guess, right? Yeah. So you said it. You just told the exact words. But no, I mean, Hiral, just broadly, I think, like I said, there's this wonderful chart and a wonderful set of data points that Mahima gave me. And I just start with that before we get to the trade setup. 13th August, the Nifty highs were 24665. We moved on to 24674, then 25022, then 25013. Yesterday, 25089. So in some sense, while these bar charts don't look as impressive because it's a very small, it's a high base and a small change, but there is a perceptible uptick that has happened ever since this close happened on the 13th of August, which was also, by the way, remember, a not a bad day. 14th August and 13th August were not bad days per se. They ended reasonably okay, if you will, before PM Modi made that big bang announcement on the 15th of August. So I think things are fine on that front. So, I mean, markets yesterday broke out of that psychological 25,000 barrier. It's only 50 points and that may come off today as well, never know. But at least that happened. And therefore, the follow-up today is very, very crucial. I mean, which I think that's, you can't emphasize more on this, the necessity of the follow-up today from a bull's perspective. And then you think of pockets, like insurance is an obvious pocket. But if you clearly see what's happening in the last 3 or 4 days, rare earth related themes are coming to the fore. I mean, yesterday, and we talk about the mining bill, but what was that doing? Private mining. For one of the key reasons, rare earths. So I think that is something you want to keep an eye out for as well, and potential beneficiaries out of that. Whether mining, whether end users, etc., that remains a big theme. And I think strong breakouts on specific stocks will very, very likely continue. I was amazed to see yesterday, while the markets were not bad, but the kind of price volume breakouts that happen on specific stocks. Second day on a trot, Ola Electric, and yesterday it outdid itself, right? 18.69%. But that was not all. Mahindra EPC, 17.78%. Zuari Industries, 20%. Everest Industry, 13%. And multiple other names which had phenomenal uptakes on very strong volumes. I think that's the point I'm trying to make. And just before we move on to the derivative piece, something that Alex briefly spoke about, I just want to highlight what the Nomura view on India economics is. They are saying that Trump tariffs should trigger the next leg of rate cuts. They believe that August MPC meeting minutes show that the rate cut cycle is highly sensitive to ongoing trade tensions. They believe that RBI will lower the growth forecast and CPI inflation in the coming policy meetings, and therefore 25 basis points cuts each in October and December meetings, taking the terminal rate to 5%. If this is the view, then I don't know about banks, but NBFCs certainly come in the thick of things.
Yeah, and you said it. In fact, also, let's not forget that if insurance becomes more attractive, the banks also become more attractive because they derive quite a bit of revenue from sales of insurance policies, particularly life insurance policies. So watch out for that as well. Let's look at what the cues are heading into expiry day, and we've got Puneet joining in to tell you about that. Puneet, Neeraj spoke about the necessity for bulls to take a stand. How does the derivative picture look?
Well, thank you for that. Definitely, it's been a market where the broader markets have actually been driving the positive momentum. For the Nifty, we have seen the psychological 25,000 level being met yesterday, and we closed above that level. Hopefully, going forward, we will be able to sustain that. It is, of course, expiry day, so we might see a narrow trading session. At the start, we might see some action, but then definitely we've seen the pattern with the expiry day at least till 1:30 p.m. We see some action coming in there as well. Open interest largely, has been down 2% for the Nifty Bank. We'll have to see, because within Nifty Bank, there's no pure play insurance company, while something like the Nifty Financial Services has stocks like Bajaj Finserv and SBI Life as well. So we might see some action on that index. But Nifty Bank, we spoke about it yesterday, that it is up from about 700 to 800 points from the August 8th to 12th levels as well. So we're seeing some kind of positive action on that index. We'll need another couple of positive triggers, and we have Fed Powell speaking tomorrow at the Jackson Hole Symposium. So that index might be in focus again on Monday. Across the board, fund flow picture has been negative by foreign investors, largely could be driven by expiry as well. The index long because of that is now at 9.9% and continues to be subdued for the foreign investors, maintaining largely a short position in the market. In terms of open interest distribution, both for calls and puts, we've seen 25,500 as a level for the calls, while 25,000 is now starting to see increased put writing levels as well at that level. So that'll be the other one to watch out for. Open interest gainers and losers both in terms of stocks. We've seen some kind of long build up in stocks like Dabur India yesterday at 18.9%. PG Electroplast is the other one, seeing some kind of short build up after a couple of days of positive rally because of GST, while something like a Sona BLW is also seeing continuous short build-up at a time where actually the rare earth magnet plays is in focus. So this, while the open interest change isn't material, this position is surprising to say the least. And open interest losers, we've seen short covering across a bunch of stocks like Kalyan Jewellers, which was impacted after Q1 results. Colgate is the other one, and something like LIC Housing as well. But we've seen maximum open interest change seen at Kalyan Jewellers. So again, a day where we could see a positive action on insurance. We could see, a lot of broader marketplace continue to be in focus, and the implied open currently indicating a 24-point open on the positive side for the Nifty.
All right, thanks so much for that, Puneet. Let's talk about stocks, and quite a few to talk about, but not as many as last week, I will say that. First on my list is Shree Cement. This is a thumbs up because the Income Tax Department has revised its demand for the fiscal year 2021-22 and reduced its demand from 558.65 crore to 221.7 crore following a rectification order. Should be a shot in the arm for the company. The second one is Prostam Info Systems. This is also a thumbs up. It has emerged as a lowest bidder to set up a 150 megawatt to 300 megawatt hour standalone battery energy storage system. This is the business that it currently operates in. It is a battery storage system operator and a person that, or rather a company that is involved in setting these up. The stock was already up about 8% in trade yesterday. This is going to be for quite a considerable period of maintenance as well. So bear that in mind. It will be in focus in trade today. The period is for 12 years and the yearly rental is going to be 45.72 crore rupees. India Cements, the last one. This is just an update. I won't really give it a rating either up or down. The company's MPS committee, which is the committee that sets the floor price for an offer for sale, was for a subsidiary company. In this case, you're talking about Ultratech setting the price for India Cements, has set the OFS price at 368 rupees per share, the floor price, and this is for a stake of 6.49%. If it is fully utilized or subscribed, this will help Ultratech meet the minimum shareholding norms. As of the end of June, Ultratech had 81.49% stake in India Cements, and this would neatly bring it down to 75%.
So that's India Cements. 3 stocks on my watch list. You have Jupiter Wagons. This is going to be interesting because they've secured an order worth around 215 odd crores, and this is for wheel sets for Vande Bharat trains. Now, what's interesting is that the stock was under pressure after the first quarter earnings because the earnings were weak. In fact, they've said that they are also looking to launch, 2 EVs in FY26, and they're expanding their dealership network for the same. Around 8 to 10 new outlets across India in the next 2 months. And apart from that, the deliveries that they got from railways in terms of the rigs, they were delayed, and that's the reason for the weakness in terms of the earnings. Now, with an additional order, how will they manage this kind of a supply chain constraint is what we need to wait and watch and see. But clearly, a thumbs up on the Jupiter Wagons on the order win. Vedanta also will be in focus today because today is the board meeting to consider the second interim dividend. And to be noted that Vedanta as a company has been known as well as a clear dividend play. Last financial year, they've announced 4 interim dividends and that amounted to around 43.5 rupees per share. In fact, the first interim dividend for the current financial year was declared in June, and that was around 7 rupees per share. Total 45 dividends is what Vedanta has declared since 2003. And in totality, so far, we're talking about a number of close to almost 94,650 odd crores that Vedanta has paid in the last 10 years. This is up till FY24. And yesterday as well, on the back of the negative news, the fall was not warranted is what one of the brokerages that Mama highlighted, and the stock did see a recovery. The stock ended with cuts of nearly 1%. You could see some bit of a positive momentum in today's session. Very lastly, IT has been in focus as well. What's interesting is, in fact, yesterday post-market, a Phillip Capital note that did come in which said that IT is about timing. It's probably time for bottom fishing. And this is because it's the lowest ownership across institutions, that is foreign as well as domestic. And to add to that, you have a Nuvama which has come up with a note on Hexaware. They've initiated a buy with a target price of 950, and they've said that the counter is in a sweet spot of growth and value. So probably some momentum in IT.
We've been waiting for that, haven't we?
No, but yesterday
we saw
some
2.8
decent
crore.
momentum.
Yeah.
So
We did.
kind of happened. Let's see if that continues. Okay, 3 stocks on my list. The first one is Clean Science. Now, optically, if you look at it, the promoters going to sell 24% stake. Block deal worth about 2,600 crore rupees, so not a small one at that. And the floor price of the stake sale is at 1,030 per share, which is about a 13% discount to the current market price. To the pessimists, this looks yet another bad news. Now, the flip side of this, they had mentioned about this in the last call as well. I think Clean Science is managed by 2 promoter families and one of them is selling the stake. The other side may maintain the stake. And look at what the stock has done in the last 6 months. I mean, frankly, I mean, not exactly point to point in the last 6 months, but it's declined 30-40% from the highs, right, ahead of this event, because they had telegraphed this particular event well in advance. Is this actually a clean out trade and an opportunity? That's the other way to look at it. If indeed there are, they've sorted out the buyers. So I think keep an eye out for Clean Science. Much as there's a large discount and it may open with that bit of a gap down, it may get absorbed quickly as well, depending on the demand. I confess we do not have idea about the demand. At 8:45 though, what we will do is tell Somit to do his channel checks and figure out if there is enough demand for Clean Science paper or no, because it's a lot of paper coming on the stream. Just an add-on to this, viewers, is that there are promoter stake sales and mutual funds buyings happening at a very frequent basis, like yesterday's trade as well. For example, you saw this happening. V-Guard, ICICI Prudential bought about 41 lakh shares at 370. HCG or Healthcare Global, Axis Mutual Fund bought about 13.92 lakh shares at 660. And both of these were bought by promoters. So promoters are selling, but mutual funds are out there buying these shares. Let's see if the same happens with Clean Science or no. Very quickly, a couple of other stocks on my list. NMDC, GMDC, Adani Enterprises, because the Indian Parliament has passed the Mines and Minerals Bill, presumably advances the case for private companies mining. Watch out for some benefits maybe on these stocks as well. Standard disclosure, the Adani Group owns NDTV and you're watching NDTV Profit, so keep that in mind. And lastly, JP Morgan on Surma. They've come out with a note, they've maintained the overweight and they've hiked the target price to 950 from 800. They are baking in a QIP in estimates. They say proceeds will be used for mergers and acquisitions. They do not think mobile segment would be an area for M&A given low margins, and that would help Surma live up to its claims or live up to its guidance of higher margins in the quarters to come. So they are overweight, they have hiked the target price. If there is a reaction, you should know why that reaction is happening. Guys.
Absolutely, yeah. And there are a couple more stocks. We will speak about them in just a short while. But before we do, let's talk about this big story heading into trade today. And this is the fact that a big tax relief is on the horizon as the group of ministers is set to recommend exempting GST on life and health insurance premiums for individuals. Now, on day one, which was yesterday of their crucial 2-day meeting, the GOM, which is a group of ministers, discussed tax relief on insurance premiums and the future of the compensation cess as part of a wider GST overhaul. Shrimi is joining us because she was speaking to state finance ministers as they exited that meeting and she got a sense of what was discussed. Shrimi, can you tell us what was covered yesterday?
Well, absolutely big cheers for individual policyholder as insurance premium likely to be exempted from GST under the revamped regime expected around Diwali. Now, the move could lower premium by about 15% as GOM set to recommend scrapping the current 18% GST. However, the premium amount varies based on the age and policy type, and that is something we need to keep in mind. As we know, ministers from various states gather in New Delhi on Wednesday for a crucial 2-day meeting as the center broader GST overhaul. And on the day one itself, which concluded on Wednesday, they discussed 2 key issues. One with respect to, of course, the taxation on the insurance premium, and second one on the future of compensation cess. Now, Bihar Deputy Chief Minister Samrat Chaudhary, who is also the convener of one of the GOM, said that most of the states are in favor of this exemption. And in fact, they are ready to, take up the matter in the GST Council. However, some state did raise concern on the fiscal impact, on whether the insurer will pass on the benefit to consumer or not, and that is something we need to, see how this will pan out and how insurer will treat, because some of the industry player cautioning about exempting GST without input tax credit, which let insurer recover tax paid on all those services, which could raise their operational cost if ITC is not given, leaving very little room to actually reduce the premium, and that is something they have been raising. So we need to see that. On the compensation cess regime, no alternative mechanism have been discussed, and perhaps GOM will hold a separate discussion later on whether there could be additional levy on some demerit goods post the cess regime ends. Now, today's State Minister will discuss inverted duty structure and rate rationalization. Remember, the centre has proposed two slab structure, 5% and 18%, with a special 40% rate for sin goods like tobacco. And sources, in fact, indicated that FN's Nirmala Sitharaman urged GOM to back the two slab GST model, calling it economically beneficial and key to boosting compliance and reducing litigation. So we are, tracking the story closely and keep you updated.
Thanks so much for that, Shrimi. We'll come back to you over the course of the day to get more details on that. But this morning, on this big story on health insurance and life insurance premiums, we're joined by Babatosh Mishra, who's the Chief Operating Officer at Niva Bupa Health Insurance, to give us a perspective on health insurance companies, as well as Nilesh Sathe, who you will all recognize from his time at the IRDAI, to give us some perspective on how the industry as a whole should look at this. I do want to start by asking you, Mr. Mishra, about how the calculation will work. And of course, at this point, we're talking about it in hypotheticals, but the sense that we got from the GOM meeting yesterday is that there is consensus in moving towards an exemption. Would this be complicated, particularly because of that input tax credit issue?
No, I don't think it will be as complicated. Of course, what it means is simply if there is a waiver exemption of 18%, the entire benefit of any waiver exemption or reduction in the taxes go to the consumer, that is sure. But it may not be equivalent to the entire 18% simply because the input tax credit won't apply in that case. So that's an important element. So the net of the GST rate cut or exemption and the input credit would pass on to the consumer. Nevertheless, there will be a substantial drop in premium that is anticipated because of this very welcome move by the not a move as of now, but a recommendation, and if should this materialize, will definitively benefit the consumers by reducing premium significantly.
Babatosh, good morning. Hiral on this side. Stay with us. In fact, let me also get in Mr. Sathe to speak to us. Mr. Sathe, insurance as an industry has been absolutely underpenetrated in the country. And I think this is a move towards increasing penetration, because the moment it gets cheaper, the volumes will increase. Your initial comments with, one, a complete waiver in terms of taxes, and two, the impact on the industry as a whole, because you're talking about two aspects. One, where you're not able to claim the input tax credit. So even if it goes slightly lower for the consumers, there could be some hit in terms of insurance players.
The first comment is I am extremely happy that the group of ministers have recommended complete exemption for life and health premiums. It's a necessity of life. Life insurance and health insurance are equal necessities, as we have got necessities of food, clothing and shelter. So there was no reason for government to charge exorbitantly at 18% GST. But as he said, der aaye durust aaye. There is a possibility, because after a group of ministers have recommended, it will go to GST Council, and GST Council will take a call as recommended, generally as recommended by a group of ministers. It is recommended that it should be totally exempt. So this is one part. To what extent the consumers will be benefited? Initially, the premium, suppose, was 1,000 rupees for 1 crore term insurance premium. 1,000 per month, let us say. Now, premium was 1,000, but 18 rupees was going from his pocket towards GST. So indirectly, he had to shell out 1,180 rupees for the cover per month. Now, what will happen? This 180 he doesn't have to pay, so the premium will be 1,000. But the insurance companies used to get input tax credit on this 180 rupees. Now, what is input tax credit? The expenses which are incurred by insurance companies, they have to pay GST on services, while they receive GST on account of premiums that they receive. Let us work out to what extent the premium will go up. Insurance companies have been saying that premiums have to go up because we had factored in the input tax credit while arriving at premium of say 1,000 rupees. Now they are not going to get. So let us see to what extent the premium may go up. How 1,000 is calculated? There are three assumptions, basic assumptions. One is mortality, which is a major assumption. On 1,000 rupees, if the premium is 1,000, the mortality assumption may be about 700 rupees because that is a major assumption. The second is expenses. Third is for solvency margin, for profit and all that. Now, for expenses, suppose the provision is for 100 rupees.
Got it.
On 100 rupees, they used to get 18 rupees as input tax credit, which they had factored in. Now they are not going to get this 18 rupees. So on 1,000 rupees premium, there is a possibility that premium may go up by 18 rupees, which will be hardly 1.8%. Bear it in mind. It's not going to be that significant that if 18% GST is reduced, the premium will go up by 18%. No, premium may go up by 1.8 to 2%, not more than that, as per the calculations, rough estimates.
Understood.
So there is nothing to worry.
Mr. Sati, stay with us. So yes, what we are saying over here is, if GST is removed, your increased operational costs, as well as on the back of the loss of input tax credit, there is a potential for premiums to go up from here on. Ms. Babatosh, then come in on this front. Do you think this will then put pressure in terms of profitability as well? How would this entire calculation work from a company perspective?
No, Hiral, there could be a short, medium, or a long-term impact. Short-term, there could be a nominal or minor premium enhancement impact, and especially talking from health insurance point of view, the major cost is essentially the claim cost, which is the healthcare cost, right? So there, which will see no impact. In the medium to long term, in a price-sensitive market, for such an important essential thing like health insurance, where medical inflationary trend in India is mid to high double digits, in such an environment, it will just enhance the wider scope of insurability, affordability, and then much larger base seeking insurance. So penetration going up is a major benefit, both for the insurers themselves and the country overall, because health protection, it is known that GDP growth in some way or other, directly, indirectly, is related to protection, health protection, that leading to better health, GDP growth. So I think overall, the medium to long term impact looks very positive of this, which is going to be achieved through much higher penetration in a price sensitive market.
And of course, this effect is going to be cumulative down the line also, because we're talking about this as a percentage of premia which are heading higher. Let's face it. Mr. Mishra, can you give us a sense of that? We've seen a lot of people talking about health insurance premia going up, particularly in certain age categories. Can you give us a sense of what the trends have been, not just for your company, but I'm talking about the industry as a whole?
See, when we talk of health insurance, unlike life insurance deals with only one variable factor, which is mortality, which is continuously reducing. And health deals with morbidity, which is continuously increasing, because if you live longer, morbidity goes up. Plus, we deal with medical inflation, which life payout are practically capped, whereas this is lifelong policies. So whatever happens in healthcare from a cost standpoint influences the premium, because the major cost, let's say 65, 70, 75% of this, perhaps 80% in some cases, is just the healthcare cost or the claim cost, right? So we need to really look at what is driving this premium. What is driving the premium is absolutely high, much higher than general inflation, and perhaps among the highest in the globe. Medical inflation that we are seeing, especially post-COVID era, in the healthcare cost in the country. And that is giving rise to a situation where health insurance premium becoming unviable. By the way, we must recall and keep it in mind, health insurance as a business in India is not greatly profitable even today. There is no cumulative profit. So the premium is a reaction to what is happening in the inherent 75-80% of the claim cost, which is healthcare cost, right? As far, I cannot comment on the industry, but as far as Nivapa, we are concerned, we try to pass only the inflationary adjustment, which is single digit inflation periodically to customer to smoothen out any cost increase that could go higher.
Got it. Absolutely. Thank you so much, Mr. Mishra, and also Mr. Sathe, for that lovely explanation as to what could occur if this is passed through. Let's talk about this in a little more detail, because a question that you probably have as a consumer is how much you're going to pay, and effectively you're going to be paying less. Mr. Sathe explained that. And if you do get this benefit passed on to you, what will be the quantum? That is also something that we should discuss. And we gave you a little bit of a sense, but Harsh is joining in to tell you about how this math will stack up. And also, where does India stand in the larger scheme of things? Is it the only country that is going to be offering an exempt tax structure on insurance? Harsh?
Well, yes, let me first start off with what is in it for you, the customer. So on 100 rupees of insurance premium that you pay today, you actually pay 118 rupees, because there's obviously a GST which is saddled on top of the 100 rupees. Now, given that this 18 rupees will likely not be levied anymore, that gives the customers a straight discount of 15%. But that may not entirely translate, and I'll come to that. First, let me come to the countries which actually have a levy on insurance, and the EU, certain countries of the EU also levy a 15 to 20%, 5 to 20%, apologies, on general insurance, which is an indirect tax levy. Outside of that, those are some of the other developing countries which levy those indirect taxes on general insurance payments. Could be health and could be others. Argentina is the largest with a 21% GST levy. Brazil, of course, it varies state by state. So that is the broad picture. Now let me talk about this input tax credit. What exactly is it? In terms of what is it, it's companies which pay GST on their input services, like for example commission payments, like for example consultancy fees which they incur. There is an offset available on the GST they charge to their customers versus the GST they pay on the input services that they utilize for providing the insurance service. That offset will likely not happen because they are not going to charge their customers GST anymore, and therefore that differential will actually be saddled as an overhead cost over and above the OPEX that they incur. Now this overhead cost will likely be translated straight to the customer in their insurance premiums, which is why there is a certain segment which says that a certain increase in the absolute premium amount could well occur. That's broadly the take. Now, in terms of how MK is seeing this, they are saying that there is a GST exemption on retail life and health insurance, which is a positive. The scope for the exemption remains unclear is what they are saying. So they are waiting and watching on the language of that. The ITC, which is the input tax credit benefit, is likely to go away, which is what they are saying. The price for end consumer will certainly go down, is what they're saying, but by how much is still unclear. That's because of that ITC, which will likely reverse. Removal of ITC will bring into focus commissions and other non-salary OPEX of each insurer, and that will determine how much your premiums will go down by.
Thank you, Harsh, so much for that. In fact, premiums will go down or not is the question over here, because as Mr. Sathe also explained, there is a possibility that you could see a premium hike of around 1% to 1.5%, right? So that's going to be the caveat over here that we need to all take into consideration. But let's quickly slip into a short break. On the other side, we'll get you top trading strategies for today as well, and lots more interesting conversations. Stay tuned to NDTV Profit.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
Welcome back. You're watching India Market Open. Take a look at the implied open and see where it's at. 31 points, 32 points or thereabouts in the green for the Nifty 50. What's heartening is that it is likely that we're going to stay above the 25,000 mark at the start. Let's see how long we can hold and if we can. But for now, let me introduce our guests for the morning. Our next guest, we've got Bhavin Mehta of Dolat Capital and in studio, Parag Thakkar of Fort Capital. Thank you so much, gentlemen, as always, for taking the time. Since we're talking about... actually, let me go to Bhavin first. Bhavin, 25,000 was captured yesterday after quite a bit of a fight. The question is, do we sustain above that today? Could be volatile on account of expiry. What are the key trends to watch for?
Good morning. Thank you for having me on the show. Quick update with regards to markets are that, we have seen a very good amount of consolidation post that run up. We have seen some amount of unwind on the call strike around 25,000 for the monthly expiry. Now today, given that it's going to be a weekly expiry, we all know that it's kind of a volatility that will continue to rule. However, there are promising trend that is emerging from few of the stocks and the sectors. We have seen a very strong recovery in IT. We have seen a strong move for FMCG. Banking continues to witness good amount of traction. So overall, it seems that the setup for market continues to remain on the positive side. There are key supply zone around level of 25,200, 25,500. But we believe that till the time Nifty holds on to level of 24,800 on downside, high probability that we are in for a break about 25,200, and that could potentially, given that it's going to be the monthly expiry post today that participants will be focusing on, the momentum can pick up. We may see a move getting extended towards level of 25,500 on upside.
So that's what, the levels are looking like in terms of Nifty and Bank Nifty as well. Bhavin, what would your top picks be today?
Yeah, so given the fact that we have seen a very strong move in some of the sectors, one of them was FMCG per se. We are looking out for Varun Beverages. Now the stock has been consolidating beautifully above level of 20 as well as 50-day simple exponential moving average. If you look at 20-day EMA, it's currently at 501. We believe one should look to long the stock, currently quoting somewhere around 518 for a potential move towards level of 550 on upside. Stop loss for all the long positions should be kept around level of 500. Second stock on our radar is from Cement Pack. So if you look at Ambuja Cement, multiple times we have seen a very good amount of reversal from below 50-day EMA. In recent move, we have seen a very aggressive delivery markup as well as volumes when it broke above level of 50 EMA. Our sense is that stock is placed for a move possibly towards level of 620 on upside, currently quoting somewhere around level of 590, 592. We recommend long on this particular stock with a stop loss of 578.
Okay, well, Parag Bhai is with us as well. Bhavin, thank you for those ideas. Parag Bhai will get to you in just a moment because it's 8:45 and a clutch of our viewers want to know what is it that dealing rooms are thinking about in the session today. So as is the norm, Samit Sarkar joins in with all the chatter from the dealing room. Samit, good morning. What are you finding out today?
Well, good morning, Neeraj. Firstly, it's Patanjali that has been in focus. Now, dealers are indicating that there are strong buy flows that are seen at lower level on anticipation for potential fundraise announcement that is expected to come in from Patanjali's side. Dealers are also indicating that a foreign investor might be keen in infusing funds or in putting in or looking to buy a stake in Patanjali. When it comes to Shriram Finance, the stock has been under pressure of late. It's been down around 13% since July and it's one of the top losers among large NBFCs, and dealers are now indicating that the selling will get over soon for Shriram Finance. So keep an eye out for that counter. For Paytm, there are buy flows at large HNI desk on anticipation of another positive regulatory announcement that is expected to come in soon. And when it comes to Godavari Power, Monarch Net Worth and now a bunch of cash stocks that remain in focus as per dealers because large HNIs have started to accumulate these counters at lower levels. So keep an eye out for all these three cash counters. And lastly, when it comes to VGuard, we did indicate yesterday that there was a block deal that happened around 1% 1% of the equity changed hands, and we did indicate that promoter has sold a stake and a large mutual fund has bought it, and the bulk deal data that came in post market does indicate that one of the promoters sold around 1% stake and ICICI Pru mutual fund was the buyer in trade for this stake that was sold.
Samit, any word on Clean Science at all? Because we were wondering 24% stake being sold or on the block 2,626 crore, pretty large amount, and generally you've seen promoters' stakes being bought by mutual funds.
Well, yes, what I'm understanding so far is that around 80% of the offer that has been that is on table has been subscribed by long only funds. So that's quite a promising sign coming in for Clean Science, given the fact that it's a large chunk.
That's interesting.
That's interesting. Okay, Samit, thanks so much for that. And let's get in Parag Bhai into this conversation. Parag Bhai, maybe we'll start with some of these. The promoter selling that we are again starting to see. It's a bit like August, September last year, right? Suddenly promoters come out and sell, mutual funds buy. What followed scared me then. Is it scaring you now?
No. So as I keep saying from last 6 months only, that this will be a new trend. Where promoters will sell. They might need money for buying some property or whatever for family internal some arrangement. I will not say that promoters selling in all the stocks is a negative thing. It will be a selective phenomena. Plus, we have to also understand that domestic mutual funds are getting so much of money in mid cap and small cap funds. They have to park it somewhere. So if there is a block in a good quality company, a good mutual fund will buy because they'll have patience. For example, just give me one. For example, this VGuard block. Now ICICI Prudential AMC's AUM is so much, right? And they don't mind buying a good company with a clean corporate governance. With a stock which has not done well from last so many, I would say, quarters because of the overhang. So I would say that it's not a problem now. If there is a shady company where promoter is selling and somebody is getting so that is the problem. Otherwise it is, I would not say that, I'll say that because in this particular company the promoter is sold, so the peak is made.
I was just speaking about this yesterday. It was just a quick point. Parag Bhai mentioned mid-cap and small-cap funds. So the top three in both the categories, you were talking about maneuverability for them, right? So you have Nippon small-cap that has 63,000 crore. You have HDFC mid-cap that has 80,000+ crore. So you're talking about 1% also, which they have to deploy. It is enough to mop up the entire block of a promoter.
It is going to happen. So this is very natural, I would say. And so I would restrict my comments on this to say company to company. It is not that.
That's what I wanted to ask.
Yeah.
So 2 years. Clean Science, say for example. Just asking you. Because it's a large block, Parag Bhai.
I don't track that company. I have very limited understanding of what they make, what is the Chinese competition in that particular business. Because in chemicals, you have to understand that most of the companies, people say that it is specialty, but many of the times, it is, that China also makes it and so there is dumping, and there are so many factors you should watch out for.
So,
and fortunately for us, we have kept away from this space, and the space has corrected a lot.
And staying with this topic, GE, Vernova, Indus Tower and Emphasis. These are the three companies which have seen the highest promoter selling in the last 1 year. I think it's ranged between almost 15 to 24%. Any views on any of these companies?
Emphasis, we booked some profits, and IT as a space, as we have discussed, I was always equal weight from last 2-3 months. Now that the prices have corrected, and luckily yesterday there was a good move in IT. Infosys went up by 3.5%. But still, I would say that 4%. What excites me in IT is quality of cash flows, high ROIC businesses, 4% dividend yield, 5 to 6% free cash flow yield. Now today you saw a report coming out in Hexaware by. So I think IT is a space where it's a contra thing right now. You can also say that this is just a tactical move and not a fundamental move, because globally what I'm seeing is last 2-3 days, if you see, Nasdaq is falling while IT services is going up. So if you are saying Nvidia falling, Accenture going up in US also. So that entire trade by AI and sell IT services is reversing in my view.
But if that is reversing, if you see the ownership by FIs and DIs well in terms of IT as a sector, that is at a historical low right now.
Absolutely, yeah.
So do you think it's timing with regards to IT, number one, and this probably will be the time for bottom fishing IT if you have to look at valuations and the trajectory forward?
Yeah, so I maintain that view. At least I maintain that view.
What would you buy?
So as I told you last time on the show also, that my priorities list of stocks are Infosys, LTI Mindtree, Wipro, HCL Tech, and might be up till now I am not, but I will consider Hexaware after having a discussion. But I would say that this is my, and see, one of the things, basic worry, fundamental, forget about tactical trades which are going on in the market, earlier it was buy AI, sell IT, now it is reverse. Forget about the tactical things. The fundamental problem in IT, which people observed, which was right in a view, is that the AI is going to be disinflationary for the IT companies. Right, that is what Salil Parekh also alluded to in his interview. Right, so that because you are now hiring lesser people, so clients are saying that okay, you charge me less. Right, so that is a disinflationary phenomena which market is worried about. Apart from the thing that deals are getting delayed and due to this tariff uncertainty, right? So I am saying that if Infosys is coming out and saying that now that worry is reducing and customers are becoming realistic about how much cost cutting they can do, Indian IT services. If that margin worry is going away, then sector is set for a re-rating, and this cannot be just tactical re-rating then. But that we'll have to see. For example, LTI Mindtree on the call has said that their margins can only improve from here.
Got it. Bhavin, haven't come to you in a while. I just want to get your sense on IT in the near term, because yesterday you saw pop in quite a few of these stocks. Does that continue today or in the near term?
So yes, we have seen a very strong move in IT yesterday. In fact, both IT and FMCG were in limelight over last couple of trading sessions. What we are anticipating is that continuation of this move probably towards level of 36,500 to 36,800 on upside. Some interesting stocks that we have on radar is the stocks like HCL Tech, wherein we have seen a very strong OI development, very strong volume surge, delivery marking was on the higher side. So believe that continuation of this move is very much likely for few of these names, which ideally should see IT index moving higher from current levels. As far as two of the large caps are concerned, TCS and Infosys, we have seen very good amount of short side development earlier, and probably the short covering laterally. Even if you look at the data yesterday, we have seen OI unwind in both these names. So high probability that short covering in this particular names could continue, and that move on upside could get aggressive if there is a meaningful shorts getting closed out.
Okay, by the way, remember, Parag Thakur spoke about Hexaware. Nuvama has a call to report today, initiating with the buy rating and a target price of 950. We'll talk about that a bit later on. Let's move tracks. Ultratech is another stock we are tracking today after the company set to divest stake in India Cements. Puneet Johnson with more details on this deal. Puneet.
Well, thank you for that. So Ultratech is looking to, sell roughly about 2.01 crore shares. That indicates to about 6.49% of the total equity that they hold in the company currently. Now, their stake is going to come through, of course, offer for sale to the stock exchange mechanism, and this is largely because they hold roughly about 81.49% stake in the company. So they need to meet the minimum shareholding norms from SEBI. This will get their stake down to exactly 75% and will be compliant with the norms going forward. Now, Ultratech had acquired roughly about 32.7% stake in India Cement back in July of 2024, and they did have to have an open offer of 26%. So with subsequent acquisitions, their stake has now reached 81%, and that's why they're coming out with this offer for sale of 6.49% stake. The price is roughly at about 368 rupees per share for India Cement. So this is a key transaction. We'll get this out of the way and Ultratech can move into integration, because India Cement has started to see a turnaround essentially from Q1 itself in terms of EBITDA per ton. So this is one to watch out for.
Wonder, Bhavin, if there's a trade here, if there's a dramatic move in either one of these two stocks. You've already given us a call on Ambuja Cement. What's the view on Ultratech and India Cements?
Yeah, so even the setup for Ultratech Cement, if you look, continues to remain on the positive side. We have seen a very strong move over last couple of trading sessions. In fact, this counter has been witnessing a very good amount of consolidation just about 12,000 levels. So 12,200 to 12,500 earlier, we have seen good amount of consolidation, followed by breakout just 3 days back. Stock is now trading somewhere around 12,880 to 12,890 kind of a range. Our sense is that 13,000 remains kind of psychological mark. If that level is crossed, high probability of continuation of upside. At the same time, if we are not able to see a breakout above 13,000 in an immediate term, I think that anything towards level of 12,500 should be looked as a buying opportunity. A good amount of consolidation base. Do not see a risk of major downside below 12,200 in an immediate term. So that should be ideally stop loss in case you are accumulating around level of 12,500 or 12,400 odd. So remain constructive on Ultratech Cement. No particular view on India Cements for the timing. Stock has been very volatile. So we'll wait and watch for some amount of consolidation before, giving any particular call on India Cements.
All right, Bhavin, thanks so much for joining us this morning. Pleasure speaking with you as always. We will speak to Parag Bhai about his call on the cement space and specifically about this deal as well, if any opportunities exist. But we'll do that after a very quick break. Do stay tuned.
Thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom.
Welcome back. You're watching India Market Open. We're minutes away from the start of trade and the indicative opening is pointing to a bit of an uptick for the benchmark Nifty 50 above the 25,000 mark. We have been in conversation with Parag Thakkar of Fort Capital, but joined on this side of the break by Shrikant Chauhan of Kotak Securities as well. Shrikant, very good morning to you. I will come to you in just a minute or two because we intended to speak to Parag Bhai about the latest developments in cement. Parag Bhai, you saw pop in some of these names after this GST update, right? Yeah. And that was the latest trigger. And seemingly the worries about the early monsoon have dissipated very nicely over the course of the last couple of months.
Sure.
So what would you say? Have you changed your call? I know that you booked profit in some of these names.
Yeah.
How does it look right now?
So basically, I would say that second half looks better. There are some capacity additions which are happening in some part of the, for example, south and east and all. That's why I'm little bit cautious after such a big rally. But of course, as I said, you know, I made 25-30% return luckily in a very short frame of time because I thought that cement prices were at the bottom. So that rally has played out. That cement prices have moved up and the stock prices have responded to that. So now we have to see, what lies ahead, because if suppose if in a particular region, if a new capacity starts, then definitely there will be some pricing pressure for one particular quarter or 2 quarters. So those kind of things we'll have to see how it goes.
On India Cements, any opinion? Because if you have this public shareholding that is met after this OFS,
sure,
would you say that there is now, as Puneet was talking about, integration that will take place?
So, just to tell you with a disclaimer, we already own India Cement in our portfolio. We bought it around 310, 320 and some quantity, not much. But I would like to say that this is part of Ultratech had to do this.
Sure.
So, they are doing this. So, it's okay. In my view, good mutual funds will participate and buy the block out because whatever Ultratech has said on India Cement on their calls, if you just they are very, very optimistic. Sure. They are confident of making 1,000 rupees EBITDA per ton by FY29, if I remember correctly. And the capacity is around 15.5 million tons. So I think it's headed for 1,000 crore above EBITDA by FY28-29. So I would say that Ultratech had to do this, so they are doing it. But I think there will be enough buyers.
Okay. Okay, Parag bhai, stay on. Let's get in Shrikant Chauhan in the conversation, but just before that I want to mark, because the pre-open session has started off, just to see what an India Cements or a Clean Science or the market itself is doing, by the way. A bit of a build-up, let's see if this lasts. India Cements, actually starting off okay. Clean Science, 4.5%, not dramatically lower. Insurance stock should also be at the top of the list, so watch out for ICICI Lombard, LIC, HDFC Life, etc. And let's see if there are some reactions there. And there are some smaller names. Healthcare Global, Neopo is doing well. SBI Life about 1.16. Brokerage Properties is the highest bidder for 8 acres of land in Hyderabad. Maybe that stock is doing well. So a lot of stocks to monitor. But just as we take Shrikant Chauhan's call on the Nifty, I want to revisit that graphic that our producers had pulled out, which is the trend that we've seen in the index in the last 4 or 5 sessions, and how we've slowly inched higher from the 13th August levels all the way to the levels that we clocked in yesterday. That's a very interesting one. And Shrikant, does this give the ammo to the bulls for creating fresh longs at these levels, or are these levels from where you would start booking profits if you were long?
Good morning, Dheeraj. Yeah, I think there is no need at all to take profit on long positions because the markets have now started the gradual upward activity. It has crossed the level of 25,000. And if we compare our markets with global markets, then we are like still underperforming. So the catch-up rally is not ruled out. And whenever there is underperformance, most of the time the rally comes very gradually to catch up that particular losses that the index has made. Broadly, I am of the view that the market has seen its worst at 24,500 and gradually we are moving towards 26,000 sort of levels. In between 25,000, 25,200 going to act as major resistance for the market as FIs are heavily short. Today, it's an unusual day because on the day of weekly expiry, we are seeing put call ratio close to 1.35 for the same expiry. Most of the time we see put call ratios somewhere close to 0.7, 0.65. That means there was in the past, most of the time we saw a good amount of call writing. But this time the picture is completely different. So I am of the view that in the second half, we may see upward activity in the market. But broadly, I am of the view that in case if there is any correction because of any reason today, we should look for adding some long positions. And now the supports have shifted from 24,500 to 24,800. So that should be the final stop loss for holding any positional long on the in the system. And on the higher side, on immediate basis, 25,250, and later we may see the levels of 26,000.
So probably adding long positions that should be watched out for at current levels. But moving on, Shrikant, what would your top picks be for trade today? We are just pretty close to opening. What should someone buy?
See, as the market is still struggling to cross the important levels, but because there is good amount of call writing at 25,100, 25,200, I'm of the view that we need to be stick to value buying. We should look for adding those stocks where there is very clear cut upside in terms of fundamentals, and technically also they are turning bullish. So in that space specifically, we like Castrol, which is around 208, 209. There we have a target of 235 based on fundamentals. But based on technicals, we can see the levels of 220. We can keep a stop loss at 204 for the same. The other stock on which we are bullish is Tech Mahindra, and this time this company reported little bit better number as compared to other stocks in the same basket. Because there is like some rally that we saw in technology companies, and whenever there is a Fed meeting, most of the time we see buying activity in tech companies. So with a very short-term view, we should look for adding Tech Mahindra to the position to the short-term portfolio. We can expect target of 1575 or 1590 on the higher side. In the best case scenario, we can keep a stop loss at 1500 for the same.
Okay, we are a minute late on to our signature segment of the top brokerage call for the day, and today it's Jeffrey's note on Bajaj Finserv. Somit Johnson again to talk about that. Somit, what are they saying?
Well, yes, Jeffries has initiated coverage on Bajaj Finserv with a buy rating and a target price of 2,420, which is a return potential of more than 20% from the current odd levels. Now, what the brokerage is saying is that Bajaj Finserv is the holding company of group's financial businesses and is poised to benefit from multiple tailwinds. First is the lower rates, which will benefit Bajaj Finance, and then there is improving profitability when it comes to the life insurance business and profitable growth, and third-party motor insurance price hike is something that will also benefit the general insurance business. When it comes to Bajaj, now Bajaj Finserv owns around 51% stake in Bajaj Finance, which is among the best run NBFC in India, and this business contributes nearly 73% to the target price of Bajaj Finserv. Now Bajaj Finserv also owns around 75% stake in the general insurance business, which again is among the best or the most profitable general insurance company, and has been agile when it comes to moving in and out of segments to deliver growth and profitability as per the brokerage. And this general insurance business contributes around 16% to the top line or to the target price of Bajaj Finserv. When it comes to the life insurance business, they are saying that the business is taking steps to improve profitability through a combination of portfolio changes, better pricing when it comes to the ULIPs, and more protection attachment and cost controls. And the life insurance business contributes around 11% to the target price of Bajaj Finserv. Apart from this, the broker is also saying that the new ventures like mutual fund, healthcare, tech and other ventures can add option value for Bajaj Finserv going forward. They also expect that there would be limited impact of the Alliance exit and entry of Jio Financial, and they're expecting Bajaj Finserv's core income to grow at a CAGR of around 22% from FY25 to FY28.
Right, so that's with regards to Bajaj Finserv. The stock probably in pre-open 1.8% is the kind of up move that you're seeing. Shrikant, any technical call in terms of Bajaj Finserv as well as any of the other NBFCs?
Yeah, for Bajaj Finserv, I think it is very clear that the stock is forming higher top, higher bottom series. It is in the range for last almost 15-20 days, and now it is on the verge of crossing its upward boundary. So at current levels, the risk reward ratio is quite favorable for creating any long positions, because I am also of the view that if there is any particular activity in the insurance basket, then we can expect activity in Bajaj Finserv. Currently it is around 1985. We can again expect minimum 2050, maximum 2150 could be possible. From the NBFC space, yes, we like Bajaj Finance, but broadly we are bullish on Shriram Finance as well as Chola Finance. There we have a bullish view, and we are expecting Chola Finance to move towards the levels of 1650 again, which is its all-time high. Currently it is around 1525. So Chola Finance, Shriram Finance, Bajaj Finserv should be on the watch list, and we should look for adding them.
Okay. I have a specific question for Parag Bhai, guys. 3 days ago, Parag Bhai was in the studio and he said, okay, there is a unheard of name that I want to buy, but I'll not say right now because I want to buy it. I want to know if Parag Bhai has bought it now and therefore he's willing to discuss that.
Yeah, so it was, frankly speaking, it was Bajaj Finserv only. Yeah, because
I didn't know that. I didn't know that.
I was also not. So this is actually, I was not expecting this question. But see, the point is that, see, on one hand, you have a NBFC Bajaj Finance, which will benefit from the reduction in GST on consumer durables, especially before Diwali. So Bajaj Finance will have that tailwind, right? And large part of Bajaj Finserv valuation comes from its 51% stake in Bajaj Finance also.
Right.
Plus this whatever we are, of course, right now there is some confusion on insurance regarding this input tax credit. But I would say that overall, if you take a slightly longer term view, health insurance and life insurance, where Bajaj Finserv now has 75% stake because they have bought that alliance stake out. So I think over a longer term, it looks like a good compounder.
Okay.
A good 15-20% compounder. Risk reward is favorable. Stock has also not done that great up till now. So I would say that, and see, I'll tell you, my thing is that you have to buy good quality stocks when they are out of fashion, right? So, or nobody is looking at that. Like we discussed Hyundai in the past, when the rates were cut.
Yes.
So basically FMCG, as you know, I have HUL, Dabur, Marico in my portfolio, Infosys, so all this. So whenever they fall due to some bad reason or due to when they go out of fashion, you have to keep buying them. And keep some cash in the portfolios just to as a buffer. So on a
Which
bad
is why
day.
you had bought IT as well.
Yeah, IT also I'm equal weight.
What are you saying now? I mean, Bajaj Finserv is one. Is there something else which is out of favor?
So basically, one thing which I am seeing is that PVC pipe companies reported very bad numbers because of the inventory loss, because they were carrying the inventory, and PVC prices have crashed. Now with this duty talks coming in, anti-dumping duty on various countries, and PVC prices actually in the market has also started moving up. So that destocking, which was done by distributors or dealers, will stop. Plus, good monsoon will trigger a demand. So I would say that I think things can turn from this PVC pipe. This is a sector where I feel that we can say that there is some kind of a bottom formation happening, and from here on you will see good numbers. And the companies generally. So basically, I would not like to specific companies, but Supreme, Astral kind of companies are good corporate governance, decent, very well-run companies. So I think that this is where I think I see a next bottom of the earnings, if you can, like we discussed Siemens several months ago, that there was a earning bottom in place. Here PVC pipe I think is another sector where there is a earning bottom in place.
Okay. So that's with regards to pipe companies. How are you looking at railway companies? Because in the last couple of weeks, you are seeing small orders that are coming in. Jupiter Wagons has got an order today. Railtel is another one, which is seeing some orders as well. Do you think probably railways could be out of the woods because last couple of quarters have been weak? Is this the time to look at railways?
Frankly speaking, I have not looked at railway companies very much in depth, because when I was looking at it, they were very, very cheap. So, there is a bias in mind that you cannot buy at this price. So, railway is something where I have not actually done a lot of work. So, I am not in a position to comment with a very high confidence on railway space.
Okay, so that's with regards to railway. Railtel is up 1.5% in pre-open. Jupiter Wagons as well. Shrikant, any calls on any of the railway counters?
Yeah, most of these counters, they were showing some signs of activity. They have been consolidating at their lowest levels, but most of these stocks started recovering from their lows, and with a very short-term view, again we can expect activity in stocks like RVNL, IRCON, IRFC. These are the stocks where we see good amount of activity whenever there is a upward activity in the railway stocks, and these stocks prominently actually manages to perform better than other stocks. But in that specifically, we are bullish on IRCON, which is currently around 172, 174 sort of levels. If there is any upward activity, then there is a possibility that 190, 192 can be achievable for IRCON. And these stocks, I would say most of these railway stocks have corrected sharply from their highs. So there is good amount of possibility that we can see some pullback in railway stocks.
Okay, Shrikant, I have 30 seconds. Your top call for the morning.
Yeah, I think Bajaj Finserv looks really good. There we have a potential of moving upward towards 2050 sort of levels, and the upside is quite limited. Also, there is news flow, so Bajaj Finserv should be buy at current levels.
Because remember, I think Shrikant meant to say that the downside is quite limited. So just bear that in mind. It is his top call. So the and the risk reward seems very well. Parag Thakkar likes Bajaj Finserv as well. Maybe, just maybe, that could be a stock that you might want to look at from a trade perspective as well as an investment perspective. But here's how the markets are starting off this Thursday morning. Remember, it's expiry day, but it's a positive start, unequivocally positive, with the Bank Nifty being 0.33% higher, IT in the green. It's not bad at all. 25,100 now taken out. We're still in that range, but good start really. Mid caps 0.2%, small caps 0.28%. Now, can this cool off? Yes, it can. But for now, there's a lot of green on the screen. Let's get the heat map. I suspect more green than red. Yes, indeed. No surprise there. Nothing dramatic out there. Let's start with the winners. Bajaj Finserv, 1.74% higher. We'll ask Shrikant immediately if he'll still buy it or no. But SBI Life, HDFC Life, so essentially, insurance a good move. Reliance Industries a good move as well. Kotak Bank about 0.75% higher. There is strength in iShares, Tata Motors, a lot of financials and autos, so rate sensitives right up there. ICICI Bank in the green too. We're not seeing a smattering of IT names, which is the big winner yesterday, but TCS finds its place in the top 15. Small gains. What's losing out? Coal India. I don't know if this is a result of the mining thing, that private mining now gets activity. Does Coal India suffer as a result of that? Maybe. HUL down, Tata Consumer down. So consumption is taking a back seat. So that's the sum and substance, Alex. Insurance ruling the roost today. Consumption on the back foot.
Yeah, absolutely. You said it. VIX still looks pretty benign at that below 12 mark, despite it being derivative weekly expiry. Let's also take a look at the sectoral heat map and see what's happening there, just to see whether this is reflected in that as well. And indeed it is. More green on the screen, but no massive winners. Realty as a pack gaining about 0.5% and is one of the top two gainers. Oil and gas also reasonably good, and I would hazard a guess to say that Reliance Industries is contributing quite a bit of that. IT flat in trade today after yesterday's bumper 2.7% move. FMCG and the consumption pack, as Neeraj pointed out in the sectoral piece as well, is not doing too much in trade. I wonder whether individual stocks are moving, and the initial reaction seems to be that this GST move to exempt the premia on health insurance and life insurance premia to individuals is not having too much of an impact, at least on the big life insurance companies. All green, but measured moves from all of them, and I wonder whether this is an opportunity to buy, and we'll speak to Parag Bhai about it in just a bit. But also pull up the health insurance company. Something like a Niva Bupa is doing particularly well. It's up about 3%. ICICI Lombard measured response. ICICI Pru Life is of course a life insurance company, and we'll take a look at some of the other. Star Health, for example, is something that we should look at. There is an order win, and a pretty large one at that, for Jupiter Wagons. More than anything else, it's significant for what it indicates. This is a Vande Bharat order, 215 crore rupees, and the stock is up and about. Hiral pointed this out today in the morning. 7% or thereabouts is up right now. Clean Sciences, this is a big trade that we told you about, and the promoters, a significant stake being sold by them, over 2,000 crore rupees. Somit indicated that that is being mopped up, but the discount to the current market of the previous close was 13%. So that's having a bearing on the share price. It's down about 6% in trade today. Godrej Properties has emerged as the highest bidder for 8 acres of land in Hyderabad, a pretty substantial amount of development value that is likely to be unlocked there. It's up about 1% or thereabouts. And Hexaware Technologies, lastly, Nuvama has initiated a buy. It's up and about in trade today. Interestingly, two brokerage calls stand out. One, the Nuvama buy call on Hexaware Technologies, and also the Jeffries buy call on Bajaj Finserv. The stock is up and about. So I wonder whether Shrikant would go out and buy Hiral.
Absolutely. Whether the buy at current levels is warranted or not is what we need to see. But before we go to Shrikant, NMDC, GMDC as well as Adani Enterprises, as Neeraj pointed out, where the Parliament has passed the Mines and Minerals Bill, and that's the reason why you're seeing these counters also which are trading in the positive. So good moves on NMDC as well as GMDC in trade. Sirma was another one on the back of the target price hike that we've seen from a JP Morgan. Let's pull up that one, 0.3% higher. Nazara continues the downward pressure today as well. That stock is down, I think, 8% in today's session. And finally, you've seen a Ola Electric that has started to see profit booking. After those 2 consecutive sessions of gains, 4 to 5% is the downtick in terms of Ola Electric. And let's pull up a Ather on the screens as well, because this is with regards to the Vahan data that has come in. It seems that Ather will become number 2 position in terms of electric vehicles. So Ather is going to be another one to watch out for. So interesting moves in few of the names. But Shrikant, let us come back to you with regards to where a Bajaj Finserv goes. Would you still be a buyer at current levels? Shrikant, you're on mute.
Sorry. Yeah, definitely, because the stock is again very close to its previous close, and its entire formation is suggesting us that it is heading higher. We are particularly bullish on number of stocks from the insurance basket. In that, we like HDFC Life, we like ICICI Prudential. So I think Bajaj Finserv should also do well. And also Parag Bhai said, and most of the time I have seen that his calls are bang on the target. So most of the time he tries to pick the stock when it is into pain and it recovers very well. So broadly, I'm bullish on the stock, and whenever there is a combination of fundamentals plus technicals, it rewards very well to traders.
Well, Shrikant, I can assure you, Parag Thakkar has the same regard and respect for you as well, and your calls.
Sure. I reciprocate the same.
So no surprise there. Parag bhai, very quickly, pipe companies, you mentioned briefly, are you constructive there?
Yeah, I'm very constructive on, because now it is part of my portfolio, I can say Astral is something which I'm looking at very seriously. See, I'll tell you, this is a perfect case, like Asian Paints was at 2,200, where, the numbers were bad and they're losing market share and all that. Here, again, PVC prices drop has caused us temporary loss, and so the EBITDA has dropped significantly. From here on, I think if you listen to their call, from July onwards, things are looking very good. They are still guiding for double-digit volume growth, margin recovery because PVC prices have already started moving up. Plus, they are entering into new segments like bathware and paints and adhesives in India, adhesives in UK. So I would say they have done a capex of 1,500 crores in last 3 years, which will give them a revenue of another 4,000 crores in next 2 to 3 years. And current revenue is 5,000 crores. So I think everything is falling in place as the stock looks like to be in a complete inflection point, and that is reflected in what promoters have also done.
Interesting. Certainly one to track. Parag bhai, thanks so much for joining in. A pleasure having you.
And
as
disclaimer,
always.
I would like to say, because all the stocks we discussed, which I liked, apart from railway stocks, I think I own in the portfolio in PMS. There is no personal holding, and your viewers should take the financial advisors.
As always, take advice and bear that in mind. Shrikant as well, thanks so much for joining us this morning. Pleasure having the both of you, and look forward to our next chat. Now, our next guest is Nilesh Shah, the founder of Envision Capital. Nilesh, thanks so much for taking the time and speaking to us this morning, and good morning to you. We're speaking a day after there is this conversation that seems to be emerging, not in our market, but in the US market, about rotation out of artificial intelligence companies and into maybe consumer staples, even IT services companies or thereabouts. And the question therefore is, do we see a rotation out of the US as well and back into India? We've seen FIs selling consistently over the course of the last several weeks.
Oh, absolutely. I'm not too sure about rotation out of US equities or out of developed markets, but clearly I think the case for India is getting stronger. Emerging markets have been underperforming for a very, very long time. It's not just about the last 1 year, or probably it's a story of the last decade as well. But clearly believe that the era for emerging markets is now arriving. And emerging markets are expected to have a very, very strong outperformance going forward. And within that,
India, on which foreign investors have been so underweight and have been net sellers for the last few years, I clearly believe that a change in stance could kind of be around the corner, given the kind of various developments that are happening. And based on that, I expect India to kind of get into a very, very strong mode of outperformance.
Nilesh, good morning. Neeraj here. And what is the linchpin of this outperformance? Is it earnings wherein the first quarter was slightly better than maybe what people anticipated, and does it set the stage for higher numbers, or is it a slew of reforms that the government and the monetary policy committee have taken which drives growth and subsequently ushers in earnings?
A bunch of things, Neeraj. I mean, firstly, I clearly believe that something which has been less celebrated over the years is essentially the inflation targeting and the inflation management. And I have never seen India's inflation levels so low, and especially the inflation differential between, say, India and the developed world has narrowed down quite significantly. And to me, that's essentially a very, very long catalyst, a very strong trigger. So that's first. Second is the current developments that we are seeing on the tariff front, I think is definitely basically going to not just nudge, but push our policymakers into kind of taking some really more aggressive, more bold measures, which is essentially going to further drive growth. So I think that's the second big thing, which I think is going to be a very, very key catalyst. So I think a combination of these two strong developments, one on the monetary side and the other on the fiscal and on the rest of the other initiatives, I think are going to create very, very strong tailwinds for India and ensure that we not just sustain at maybe the 6.5% growth rate, but we probably nudge well past 7% and sustain there. I think that essentially is something which probably is getting overlooked by international investors and foreign investors in the current environment.
Right. Nilesh, good morning. Hiral this side. So with all of this said and done, what is the return expectation that an investor should keep? Because you've always been of the opinion that the investors need to moderate their return expectations. So what should that realistic expectation be for the next 1.5 year? And where should they look at in terms of investments?
So clearly, I mean, over the very long term, the returns on, say, the Nifty have been around more like in a band of 10 to 14%, depending upon what you take as your base. So it really depends on that. But the broad band has been 10 to 15%, which is pretty much well above what a fixed income product offers you or what a bank deposit offers you. So I probably think that that's a very kind of a reasonable set of expectations. Now, on top of that, you could have alpha being generated based on some of your thematic calls, sectoral calls, or even based on the stock picking that one does. So that I would probably think is basically a kind of a fair expectation to have. Though it's obviously very difficult to really pinpoint a specific expectation for just a year and a half. But I think over a 3 to 5 year kind of rolling basis, that's a kind of fair expectation to have.
Okay, so I want to get your sense, and Nilesh, I've completely on board with what you're saying about the uptick in GDP that will take place. But there are some arguments that have said that perhaps that increase in consumption may not be as imminent as some might think. We might have to wait for some time to get this. And of course, there will be a diverse set of opinions on this, and no one can predict it exactly. But do you think that in the worst case scenario, it will take about a year, or do you think that it'll definitely be faster than that?
Well, it's reasonable to kind of peg in a 1 year kind of an outlook by which consumption comes in with a bang. It's a separate kind of topic in terms of what within the consumption basket starts to fire and fire more. Clearly believe that areas like consumer staples are relatively mature categories, the basic consumer staples, and it's more going to be the aspirational stuff, which essentially is going to basically witness much stronger growth. That's pretty much been the story over the last 3 to 4 years. And I don't see that to be anything different, because that's more a function of something very structural happening, that as we cross certain per capita income levels, you tend to basically change what you consume. So I think what's going to really fire within the consumption space are categories where there's potential for penetration and there's potential for premiumization. So it's a combination of both penetration and premiumization, which is going to basically drive growth. In the very short term, it's going to be a combination of these various monetary and fiscal measures, like lower interest rates, the expected cut on GST, and the hike in tax exemption limits for the middle class, which is going to drive consumption. But over the very long term, it's going to be rising incomes, rising aspirations, and rising affordability, which is going to essentially create structural tailwinds for the consumption pack to kind of keep growing. So clearly, from a very medium to long-term perspective, consumption will remain an extremely attractive investment opportunity for investors.
So Nilesh, let's kind of narrow it down a bit. So because consumption is so wide, right? I mean, when you think of consumption, do you think of discretionary, non-discretionary? If it's non-discretionary, I mean, that bucket is also very wide and various ways to play it, right? How and also is the government move leading you to make that call right now? Because consumption has always been there, right? So is the government move recently because of GST otherwise, and the RBI moves which are making you do that? And therefore within the bucket, what is it that you will kind of do your pecking order as 1, 2, 3?
Well, some of the recent initiatives of both the government, the RBI, and the policy makers have been supportive of consumption, and to that extent, they basically are creating a floor and a cushion to drive consumption. So I think that's basically policy measures at the first level. But I still believe that it is rising affordability, rising aspirations, which is going to drive consumption. And within that, what we like, I think it's a combination of both discretionary, non-discretionary. And clearly, I think demand for homes, demand for consumer appliances, I think should witness a very, very strong impetus. It's just a question of what you play within that. There are different ways to kind of do it. One is, of course, is to really buy into people who make these products. The other is to essentially buy into businesses which sell these products, which typically are platforms. And these platforms could be digital online platforms. These could essentially be offline stores-led platforms. That to me is a more attractive kind of a proposition versus the guys who make these products. And lastly is the guys who fund the acquisition or the buying of these products. So in the case of homes, I clearly believe that the affordable home financiers are a better bet to play on real estate versus actually just owning pure home developers. So I think there's a variety of choice. It's going to be between discretionary and non-discretionary. And within that, the big question is, do you buy the product companies, do you buy the platform companies, and do you buy the financiers? I think in the context in which we are today, I clearly believe that platforms and the financiers are a better way to play the consumption basket versus pure product companies.
Better way. That's interesting. Your Swiggy itself is seeing smart gains in today's session. Paytm also trading in the positive. Nilesh, when it comes to defense, you've categorically always maintained it's a long-term sector. Buy on dips should be the strategy for this one. Taking into consideration the kind of performance defense has given right now, it's been one of the laggards, major downtick in terms of companies. Do you think valuations do support the current juncture, and would you say this would be a sector one should start looking at now?
Absolutely. I mean, defense is again an absolutely long-term structural opportunity that investors have. It's driven by two things. One is basically the drive towards indigenization or import substitution or building self-reliance, and the whole Atmanirbharta kind of drive which essentially is there. So clearly that's one. And two is, of course, now a lot of countries globally are looking at essentially trying to kind of have their own spending on defense. I think Europe has gone on record to basically, the European Union has gone on record to say that defense spending is going to kind of be significantly higher, which creates export-led opportunities for Indian defense companies. So clearly believe that defense is one of the most attractive investment opportunities. The fact that the space has pretty much kind of been in a consolidation or a corrective phase for maybe a few quarters now. It has had bouts of ups and downs, but it's been relatively in a consolidation phase. I think the best way to really look at it is to look at which of these companies have the capabilities and which companies have a very strong growth pipeline from, say, a 5-year perspective, and then see whether they are attractive enough. So I think if one is looking at defense in the very short term, given that it's largely a B2G business, an order-driven business, it's going to be very, very difficult to take a very short-term call. The best way to really look at this is to look at a 3 to 5 year horizon, initiate positions in the ones you like, the companies you like, and obviously if market volatility offers you even a better entry opportunity, that would be a great time to load up on the pack.
Got it. Nilesh, absolute pleasure having you on the show as always, and great speaking with you.
Thank you. Thank you so much.
Right, now, GST on dairy has been slashed from 12% to 5%, or at least that is the proposal. Before we speak to the management of Hatsun Agro about the implications, let's go across to Mahima to set things up for us and talk about the context a little bit. Mahima?
Right, Alex. So as you rightly mentioned, dairy products where GST was earlier charged at 12% will now, the proposed GST rate will go down to around 5%, and this will overall boost demand for GST products as well. In terms of, how quarters have panned out for Hatsun Agro specifically in Q1, it was a weak set of numbers versus what was guided, because revenue was guided at 15%, which came at around 9%. Plus, in terms of the overall volume growth as well, which was expected to be around 14 to 15%. Not the volumes, in fact margins which were expected to be around 14 to 15% came in at 13.9%. Even in terms of where the debt position stands as of FY25 is more than what the management guided. Even the capex that they had guided for, they've done more in FY25. So we'll have to see as to how this overall boosts demands. Because of that, their capacity utilizations will also go up, and that will probably help them ease their overall operating leverage as well. In terms of the cash flow position as well, excluding the dividend factor, once the dividend factor is accounted for, that is a concerning factor right now. So all this taken into consideration, we have to see as to how this entire new GST reform will help the dairy sector and Hatsun Agro as a whole. So these are the few questions that I would want to know as to how GST will help solve these problems for the company as well.
Thank you so much, Mahima, for getting us this setup in terms of the expectation from the GST perspective and the outlook for the company. In fact, let's get in Mr. R.G. Chandramogan, Chairman at Hatsun Agro, to talk to us on NDTV Profit. Mr. Chandramogan, good morning and welcome to the show, and always a pleasure to speak to you. The first question coming to you is, the anticipation is from the GST reforms that the rate would be cut from 12% to 5% for dairy. And this is something that you have been absolutely vocal about, that GST reduction on dairy as an industry is an absolute necessity. Your initial comments, and how do you think will this really aid the industry from here on?
See, GST reduction will help in a big way to the industry for growth for two reasons. India is a country with 240 million tons of production, but still our exports are hardly 1 million ton versus 20 million tons of New Zealand. New Zealand accounts for 35%. World trade is only 60 million tons, and this is only 25% of India's production. The biggest problem what we have been facing is we are heavily taxed. For example, 12% ghee. It has been it is finally ultimately preventing better payment to the farmer. It is almost 108 rupees for a liter of, 108 rupees tax versus 888 the farmer gets if you are converting it to ghee and also SMP. If you take ice cream, for example, If we are paying about 888, almost 73% is paid as GST to the government. If we are reducing it, we can be a world power in exports, and farmer will also be benefited, and the urban-rural gap will be bridged in a big way. And farmer ultimately will start spending on other commodities once when the cash flow improves. That is my working. And in my opinion, all dairy products have to be considered at 5% instead of the slab of 5, 12, 18 and all that, including ice cream. That's my opinion.
So, Mr. Chandramohan, net, would you expect this to spur demand meaningfully?
100% meaningfully, it will just increase. Because today, as I said, if 100 rupees a farmer is getting 73 rupees, taxation goes for ice cream. And this is hurting the payment to the farmer. A better payment can be definitely given to the farmer. This will initiate him to do better production. And we can be a powerhouse on exports. We were importing French fries. We are now exporters. We have been exporting basmati rice. We can also do it in dairy in a big way. And the country has got all the scope.
Sir, in effect, what you are saying, that there is at least a three-pronged effect, in that it is better for the consumer, it is better for the farmer, and probability of having exports as well going higher.
100%.
Okay, would you believe for Hatsun Agro, sir, that if this is how it turns out, then the export opportunity starts in the second half itself, or could it be, or is it difficult to call that right now?
No, second half itself, the export will start happening because we are already exporting our own ice cream to about 8 countries and we are gaining momentum. And you are talking about the growth of 9%. We will end up at 15% for the half year without any difficulty.
Mr. Chandramohan,
this half itself, next half can be better. Yeah.
Okay. So you're saying next half will be better. But, one question I have is, when the government is considering a GST rate reduction in terms of dairy, do you think this is coming in wake of the negotiations that India is having with the US on the tariffs? Because dairy as a sector is something that India does not want to really look at. If anything opens up from an export perspective for India, do you think this could be a positive and in that direction?
Definitely, it will be a positive in that direction. Actually, in India, we have a sizable vegetarian population. We require animal fat in any way. This consumption locally will also stimulate better production with GST cuts. This will give more money to the farmer's hand and the farmer will be benefited to produce more. Ultimately, we can be cost-effective producer in the world and we can keep on exporting in a big way and we can be a powerhouse in the near future. The second half can be better and the next year can be glorious, I can say.
No, so would you say that if, India opens up the dairy sector for the US markets, for US to come in and take imports from there, would this GST cut actually negate that impact of the dairy sector being opened up to the US markets?
I am doubtful about the US entry of dairy products into India. The type of feeding what they do is different and the consumer here is vegetarian and they have their own reservation for any US product. It is not the case with New Zealand. New Zealand will be a bigger threat if imports are going to take place. I don't expect the US to be that. But even US, they are into dairy products and probably definitely this will be hurting the local farmer in a big way. And we are having farmers who are sizable in numbers and we have to protect the interest of the farmers.
Okay, Mr. Chandramohan, we'll leave it at that. Thank you so much. We hope that we start seeing a lot of positive commentary around exports when we talk to you post-October, sir. But thank you so much for joining us today.
Yes, sir. Thank you.
That's Hatsun Agro and one of the most entrenched players in the dairy sector. So when he's talking about things, you want to hear up and stand up and listen about the impact that they believe could come in onto this sector because of the GST. So keep that in mind. Okay, Zydus is the next business in focus. They've reported, the Q1 is one thing, of course, that what they've done. Revenue increase of slight revenue increase, if you will, but a profit drop as well. Unseasonal rains hit seasonal brands like Nycil and Glucon-D. Before we get in, Tarun Arora, CEO and Director of Zydus Wellness on board. Let's get in Mahima to give us more details about this. Mahima.
Right, so in terms of Q1, overall, as you rightly mentioned, unseasonal monsoons have impacted their seasonal portfolio, that is Glucon-D and Nycil specifically. They've said that rural has once again outpaced the urban demand. That's the overall demand scenario. In terms of the nutrition drinks, that still remains under pressure because people are now going out and exploring more things in the nutrition space. In terms of the new acquisition, that is the Right Bite and Max Protein, that's outperforming versus what the management was earlier expecting. So that's a positive. In terms of the overall numbers, revenue was up 2.4%, EBITDA up hardly 0.2%, margins at 18.1%. They've sustained margins in that 18% mark, and net profit was down by around 13.4%. In terms of the overall management commentary coming in, they've said that unseasonal rains has adversely impacted, but there are signs of input cost that is coming down, so that will probably going forward aid margins as well, and they're confident of sustaining double-digit growth, that is ex-seasonal brand. And lastly, in terms of where the trade channels stand, organized trade saw a growth of around 30.9%, and e-commerce also saw a good growth of around 14.5%. So this is the overall view of how Q1 has panned out for Zydus Wellness. But the key question here would be as to how the competition is picking up, because quick commerce is where the competition is coming in from, and a lot of unorganized players are actually picking up pace. And of course, what is the demand scenario looking like?
Yeah. Thanks for that, Mahima. And Hiral, when I just saw everything that Zydus and its portfolio, I thought I could do a conversation for half an hour, right? I mean, nutrition, drinks, Right Bite, Max Protein, and a clutch of other things, of course. So, well, let's welcome in Tarun Arora, CEO and Director of Zydus Wellness, on the show to talk about all of this and more. Tarun, great having you. Thanks so much for taking the time out and speaking to us. A broad 50,000 feet question first. Is your opinion on demand in general, urban versus rural, and what happens to demand post this GST cuts, differing from what the consensus is? The consensus seems to be that rural is difficult to predict, urban hopefully will pick up, and post GST there will be a demand spurt.
That's a lot of questions, but first of all, thank you for having me on the show. Pleasure to be here and share my perspectives. So first of all, I think from a GST point of view, I mean, I don't see it as a one-off thing. If you look at it, there has been an interest rate cut. There's been a reduction in income tax, especially on the lower income bracket, the starting income bracket, and now this GST cut. So the government has, over the initial part of their term, was focusing on the supply side of economics. In last 1 year, this is the third, I would say, consistent effort to support the demand. So obviously government is pushing pretty hard that the demand picks up. India is a consumption economy. The private final consumption contributes. India is one of the highest of the GDP from a PFC point of view. So obviously, I'm quite hopeful, like many others, that this will play out an important role. Now, how long will it take to fully impact? Only time will tell, but clearly this is a good intention to move the consumption up. So I'm quite excited about the possibilities, and it takes care of, and probably the government revenues will get taken care of by the increased consumption and hopefully some compliance improvements also, which may be on the periphery missing. Okay. So overall, a great move by the government.
Okay, so strong move by the government in terms of GST cuts. So Tarun, good morning. Hiral on this side. Now, if you have to look at Zydus Wellness's portfolio as well, and the way the demand scenario has panned out between rural and urban, where do you think the boost could come in from here on? And do you think this is something which will help the company ease the margin pressures as well?
So just to break down the urban and rural for us, we've seen, or not just for us, for the entire businesses, there were almost a couple of years when rural was really struggling, but over last 4-5 quarters, we've seen rural improve bit by bit. And with this actually extraordinary rains this year, it should only get better. So unless some crops are impacted, but overall, I think it's good news for rural. Overall, things should get better. Government is also very committed to supporting rural income, so it will only get better. The good thing is the urban, which has been under pressure and been taken for granted at many times. So several of these actions which have happened should also aid urban consumption. Urban economy was under a lot more pressure because it is the largest part of the organized consumption that happens. And I mean, for years I've seen 30% of consumers contributing to 70% of the packaged products, as reported by likes of Nielsen and other formats. So clearly that is a piece which has been under pressure. That's going through a lot of churn because of consumer behavior shifts, channel shifts, and several other challenges of inflation going up. And this is something which should directly get aided by some of these actions. So for us, we've got our selves into a multiple pies. So whether it's rural part of the economy, which we believe will continue to improve because most of our brands are leaders and we want to increase penetration, rural plays an important role. Similarly in urban, and where the new age consumers are seeking newer experiences, newer benefits. So our innovation engine, our new acquired products have a good opportunity of growing in the urban space as well. Max Protein, you guys just talked about. I think we are quite excited about it. Every youth. So, I mean, these are brands which are actually reaching out to young audience.
But
and
Tarun, I get your point with rural, urban. You're saying there's a lot of potential. But if you talk about the food and nutrition segment of Zydus, that has actually showed a slower growth as compared to personal care, right? And secondly, the acquisition of Max Protein, which you mentioned about as well, that has been performing well. With all of this said and done, if you're expecting the urban population to really pick up in terms of consumption, that's the one which will support your food and nutrition division as well versus the rural right now. What is the strategy to grow that business? And secondly, you have mentioned earlier as well with regards to new product development and launches in the next 12 to 18 months. So what is that combination going to look like? What are the spends you're going to do and how much will it contribute?
So if I were to break down my food and nutrition portfolio, it's a large part of our business. Now, there are two categories which have a little bit sluggishness involved in it, and it's quite well known. The nutritional drinks overall category has been relatively slower because of the substitution that has happened over the years and concerns about it. So that category stress has been there, but that grows in the top quick commerce, e-commerce spaces. It also has grown over the last few years and more rural. So there is that also will play out a bit of role. Second piece, which has been a little bit of concern, was the sweeteners, which grows less than our total average because there were concerns on WHO coming back saying that aspartame. So we've exited out of aspartame, but those are the things which really impacted us. Having said this, there are very valuable parts in food and nutrition which continue to play out both in urban rural space. So, for example, we've extended sugar-free into sugar-free foods with chocolates, which is only on e-commerce. We've got cookies in place. So they should meaningfully add. The sugar-free green, our stevia product, that's been growing at a consistent high double digits over a longer period of time. So there is a mix which is changing because the consumers are making choices which are different than what they were making earlier. Therefore, there is a bit of churn, but I'm quite excited about the fact that some of these things will settle and make a larger impact in terms of growth. Similarly, if I look at Nutralite, that's been a largely urban business and has been growing both in food service as well as in retail. And there we had converged the dairy business, which was the back end of Heinz that we had acquired, into Nutralite Doodh Shakti, where we've got ghee, butter, and now we've also launched cheese. We also have our base business of fat spreads and mayonnaise. So all these are adding up to a positive momentum. Obviously, personal care has been leading. We've really got that right, and that's helped us drive the momentum. But I'm quite confident that our bulk of our business, food and nutrition, where now with the new formats, the protein bars, protein cookies and protein chips coming in, will only aid to the overall positive momentum on food and nutrition side. And that's where the urban growth will contribute to as well.
Tarun, I just have one question. I mean, it happened with the big FMCG that regional brands on bhujia, on chips, etc., chipped away at the dominant market shares. Now, when I think of my behavior, or I mean, I'm still too old, but a lot of younger behavior which buy on an ad on Instagram, etc. and stuff like that, there are a lot of local, not even regional brands, local brands in Mumbai specific brands, in Delhi specific brands, which are very focused on health, nutrition, bars, drinks, dehydration drinks, so on and so forth. Is that a market that is getting added to the existing market, or is it chipping away at market of leaders like yours?
So the interesting thing is that in today's age, where the knowledge, the information is getting far more democratized, it's becoming, I wouldn't say what economists will call a perfect competition. It's not really there, but the information is far more democratically available. The price discovery, the product discovery is far more easier than earlier. And therefore, some of the new innovations, some of the local formats will have, and with the organized formats, you can quickly, get access. So obviously, the local players, the smaller innovations will get a quicker platform to reach to consumers. It's actually a good news from a consumer point of view. It puts a pressure on people like us to maintain our leadership, and therefore we have to innovate faster. Fortunately, we have seen that while there have been, the market is expanding by these guys because consumers are seeking these new experiences. We've been able to keep pace with it so far, but the pressure is pretty high, and we have to innovate at a much faster pace to ensure that our market shares are protected. But the good news is that if they keep building on, there's going to be a long tail, there's going to be a stiffer competition. But the consumers will be spoiled for choice. We will have to ensure that we are able to deliver a better value to the consumers and make it more accessible in various ways. There is a behavior where there are some consumers which are seeking existing legacy products, market leaders, they're buying the bigger packs. And there is a behavior where they're buying smaller packs in the rural or in the urban space where they're seeking day-to-day choices. But this in-between market which is opened up, which is these new brands, new formats, local and with new innovations, I think that's a piece which each one of us could learn from and also participate more consciously with. And I see it as an opportunity. Of course, it's challenging, but it's also an opportunity for larger players like us to participate and show our agility to respond to this market.
All right. Well, we wish you all the best for that and more. Tarun, thank you so much for taking the time out and speaking with us today. Really appreciate your time.
Thank you. My pleasure.
As we speak, a bit of a spike in the price for Zydus Wellness, but I mean that's a small one. Anyways, we take a break. On the other side, we speak to Manoj Verma of Bikaji Foods. Palm oil prices have risen. What's the impact? Stay tuned. We'll be right back.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गैराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Manish.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
Welcome back to India Market Open. The markets seem to be in a good mood today as well because 25,000 is something which we are holding on to. In fact, 25,100. We are trying to inch higher as we opened up. Let's quickly pull up Bank Nifty on the screens as well and see what that is doing in trade. That is also seeing some positive momentum. And you have FMCG, which is one of the sector which has been losing out. Majority of your FMCG players were trading under pressure on opening. One aspect we need to consider right now is the Malaysian crude palm oil prices. They've actually risen 16% since May 2025. And this is mainly driven by weak Indonesian production and rising demand. And this is something that would squeeze the FMCG companies' margins. Companies like HUL, Nestle, Britannia are all reliant on palm oil for at least 15 to 20% of their raw materials. And the price hike could actually impact them. Mahima is joining us to tell us how the FMCG companies could navigate pricing pressures from here on. Mahima, over to you.
Right, so Hiral, as you rightly mentioned, in 2024, palm oil did rise significantly, and post December 2024, there was a sharp fall as well of around 30% in palm oil prices. But since May, since its lows, it's still risen 16% from there. So that's a concerning factor for both FMCG companies as well as your snacking companies, your FMCG staples and snacking, of course. Now, overall, there's surge in demand, but in terms of the production in Indonesia, that is weak right now, and that is leading to lower inventory levels and leading to overall price hikes in palm oil. In terms of both the Malaysian as well as the Indonesian palm oil prices, there is a contrasting supply view because Indonesian production is weak, but the inventory levels in Malaysia are right now improving. So that's something that one needs to keep an eye out for because that will overall decide the prices in terms of how it will pan out going forward. In terms of the snacking industry, it almost constitutes 40 to 50% of their overall raw materials because they use it to fry the snacks, and this could overall impact their margins going forward. Now, there are two ways in which they can probably help curb this, either do a price hike or maybe reduce the grammage, and we'll have to see as to what strategy something like a BKG Foods is adopting, because they've already taken around 2.5% price hikes in the past 2 odd quarters. So that's going to be a key question to ask the management as well.
Right, key questions to ask the management with regards to where palm oil price hikes go and what it could mean. In fact, thank you, Mahima, for that. Joining us on the show to discuss further on this is Manoj Verma, CEO at BKG Foods International, because this is one of the raw materials for him. And we have Mr. B.V. Mehta, Executive Director at the Solvent Extractors Association of India, to talk to us about the price trends that could be expected from here on. But first, let me get in Manoj Verma. Mr. Verma, good morning and welcome to the show, and a pleasure to speak to you at NDTV Profit as always. My first question coming to you is the increase that has already happened so far in terms of palm oil prices. What is the impact that you've already seen, and how are you looking at mitigating this?
So, in fact, the worst was Q3 of last year, and that's when prices went on and on. And then on top of it was the import duty, which moved up from 5 to 20%. So that again was an unexpected move. So what we as an organization did, and the industry did, was we were prepared for the worst, and we have seen the worst times, which actually now has passed by. So going forward, we don't see much of price increase on on account of this oil prices. They are pretty much stable, in fact, down with what the worst was, and is trading at around 130 plus minus.
Okay, so how are you seeing the trend from here on, Mr. Verma?
So in terms of trends, what we feel is that it should get stabilized here. See, currently, when the duties were reduced from 20 to 10%, the entire benefit has not gone to the trade, perhaps because of the high demand season. And also what we expect is that post-season, the festive season and all, we expect some slowdown or some improvement in the prices as well.
Okay. Stay with us. In fact, let me also get in Mr. B.V. Mehta. Mr. Mehta, welcome to the show. We're talking about the way prices have gone up right now. Representing the Solvent Extractors Association, how are you seeing the trend from here on? What is it that you're picking up?
Madam, let me examine first why the price has gone up. One, Indonesia has decided to go from B40 to B50. That's one part. Second part, American biodiesel policy. They said they are going to use about 6 million tons of the soybean oil for the biodiesel. Third, the sunflower yield in Ukraine, Russia is lower than what was expected. And fourth is a hedging. The Chinese hedging fund is buying in a big way the palm oil. These are the four factors which has taken the market up in the last 1 month. If you look at palm has gone up by $80 to $90. Yeah, CPO gone by 85. Soybean about lowest was at 25, and the sunflower has gone by 50. This is the four reason which has taken the market up. But what personally I feel, if we have reached at the saturated level, market may not go up from this level, maybe on sideline. But I'm not expecting market to go further. And another thing, to look at the demand for the world produce about 260 million tons of the vegetable oil. Out of that, about 60 million is being used as a biodiesel. So from food is moving to the energy. And that's the reason availability of the oil is reducing. And that is also one of the factors why the prices are going up.
Okay. So, Mr. Mehta, would it be right to say that from here on, you're expecting palm oil prices to stabilize at current levels? Are you seeing any correction that could come in the near future?
No, madam, it will be sideline. Maybe $30, $40 up or down it can go. But I'm not expecting much there. Unless something happens in the international market, it's a different story.
Okay.
War or something, that's a different story. Otherwise, looking to the situation, market is likely to remain more or less stable with a minor $30, $40 up or down.
Understood. Understood. Thank you, Mr. Mehta, for that. In fact, Mr. Verma, let me come to you. Now, taking the impact into consideration currently, normalization probably from here on, do you consider a reduction in grammage, or would you take any price hikes? Because in the last 2.5 quarters, it's approximately 2.5% approximately in terms of price hikes. So what's the trajectory there?
So, in fact, over last 2 quarters, we've already taken a price increase upwards of 3.5–4%. That's the price increase from Q3 to Q1, and which brings us home. So we don't expect any further price increases. That's what we are looking at. Crops have been very good. Oil prices, what we feel should get stabilized at this price, and therefore, I think we are in a comfortable state to manage with this.
Apart from that, Mr. Verma, now we've spoken about the way palm oil prices will have an impact as well. Let's talk about the fire accident at the Bihar contract manufacturing unit. Any losses that could impact, see the PNL, any losses that we could see on the PNL in the second quarter on the back of this?
Not really. Actually, see, most of it is we have the biggest plants capacities in Bikaner. And more importantly, we have our manufacturing units at a different strategic units. So our dependence on one particular plant is not as much. This any which way was a new plant. And yes, there are some losses in terms of, but that should not impact our overall as a company performance in any way.
And apart from that, with regards to where capacity utilization goes now, where does that stand? What is the expansion plan from here on? Because you have executed a JV with Chaudhary Group to expand your brand presence in Nepal food market as well. So taking all of this into consideration, will you see capacity expansion?
So JV is not on account of enhancing our capacity expansion. That's because of to have our product manufactured in Nepal itself, and which saves us from a lot of the customs duty which currently is being levied. So to be competitive with the local players there, that was the strategic call which we took. On the other side, if you look at our capacity utilization is around 47-48%. So we are ahead of, so in that terms, we are pretty much future ready.
Thank you, Mr. Verma, so much for joining us on the show, and Mr. Mehta for joining us on the show and giving us that perspective with regards to where palm oil prices go, the impact a company could see as well. So that's one of the stories that we are tracking. But Neeraj, the big story right now which is developing is the clean science large trade that has happened. What have you picked up so far?
So we've gotten officially from the management, Hiral, that they maintain that they have sold only the extent of the shares which were to be sold. The remaining is a fat finger error, syndrome error, whatever you call it, from the banker involved in the deal. And they say that it is now the broker's headache to figure out how to make do the quantities that were sold in excess. It is not the promoter's lookout. The promoter entity, the
mandate was for a different amount,
and that's
the broker has gone ahead and
by error.
But what's interesting is the stock is resilient and not seeing that kind of pressure.
Yeah, Hiral, I would think it wouldn't, because now you know that because the stock has corrected so much since the last 2 or 3 months, when they made it open in an exchange filing that they're going to go out and sell that 24% equity, right? So they've made it evident, known then. Since then, the stock has been under pressure. This is virtually a clean out trade. I think the street was nervous that kya promoter ne zyada mal bech diya, while they're wanting to sell only 24%, have they sold more? Now we have clarity that that is not what has happened. It is an error from the broking party, and the promoter stake still stays as it was after that 24% was sold, which is what I think gains that confidence for the street.
Absolutely. I think that's what will given confidence. We will try getting you more details as things develop as to what happens post this. But moving on, the Lok Sabha has passed the promotion and regulation of online gaming bill, in fact, NDTV Profits. Delhi Bureau Chief Shrimi spoke to the Minister of Information and Broadcasting, Ashwini Vaishnav, where he said that online money gaming is negatively impacting people. For context, the bill cracks down on real money-based gaming while supporting esports and online social games. The legislation also prohibits advertising or endorsements of platforms facilitating online games that involve monetary transactions. The reason why we bring this up right now is because Nazara Technologies, if you pull up that counter on the screens, continues to trade under pressure. Last 2 trading sessions, I think 20-21% is the kind of downtick that you've seen on the stock, 7.5% right now as well. Let's quickly listen in to what he had to say.
Well, a landmark bill has been passed in the Lok Sabha today, aiming to curb, very harmful practices from the online gaming sector. And to talk about it, joining us, Union IT and Railway Minister Ashwini Vaishnav. Thank you so much, sir, talking to NDTV Profit. I'd like to start by asking you that, this bill considered as a death knell for, online gaming sector. So is there a way to sort of make them also survive when it comes into force?
First of all, I would like to point out that this bill basically promotes 2 out of 3 sectors within the online gaming universe. Esports and online social gaming will be promoted, they will be encouraged, there will be schemes and programs to encourage that sector, which is very important part of the online gaming sector, right? These 2 segments. The discouragement is for only one segment out of the 3 segments, which is online money gaming. Online money gaming has been very clearly observed over the last few years that the impact on society is very significant. There are families which are losing their entire life's earnings. There are extreme cases where the people who have lost money, they commit suicides. And the significant psychological disorder which is happening because of this is very important. WHO has actually even classified it as a separate public health disease, ICD-11 they've called it. So that's a very significant thing for which society has to be protected. If you have to look at what is the interest of the entire society and what is the interest of a segment of the industry, then we have to weigh it, and the interest of society interest of the middle class families has to be paramount.
All right. Well, it's a day of some serious news flow today, and amidst that, it's good to get a calm mind to try and talk about how to look at the markets in the current scenario. His data points are amazing, and I always found that I learned something when I talked to Samit Vartak. He's founding partner and CIO of Sage One Investment Managers, joins us right now on the show. Samit, great having you as always. Thanks for taking the time out.
No, it's my absolute pleasure, Neeraj. After a long time.
Yeah, it's been a long time, and both Hiral and me look forward to talk to you. Samit, are you calm right now? Because I think it's difficult with the extent of news flow. When it comes to investing, is it calmness, or are you also a bit anxious about what is the impact of the various developments happening around us?
Yeah, I mean, it's not that easy to be calm in this environment, but I think the good thing is, it's always a good time when there are so many worries around. I think the kind of worries that we have is, in terms of earnings slowdown, there are uncertainties related to tariff and then geopolitics, so India is sort of bombarded with so many of these worries, and we have underperformed. I mean, last 1 year, we underperformed some 26% compared to the emerging market. I mean, so that's always a good time to find opportunities. And I think, there is no dearth of opportunities, maybe some concern about valuations. But if you're looking for great businesses, high growth businesses, I think there are plenty available. So, that always keeps you excited.
Right, Samit. Good morning, Hiral on this side. Plenty of opportunities, as you say, that are available in the market right now. The way we've seen markets now starting to probably see some bit of sunshine, yet again, where would you start looking at? I mean, which sectors would be on your priority list?
Right. So, again, I think if you start looking at top down, it's very difficult to find, broad opportunities across all these sectors. I think that time is over. If you see the last, 4 years or 4 or 5 years post-COVID, there has been indiscriminate rally across many sectors, so whether it's cap goods or defense, PSUs, anything to do with government. And which is also reflected, in the broad basedness of the rally. I think last year or so has been very different, where there are only few pockets which are doing well. So I think this is a time for, anyways, I am a bottoms up stock picker. Very difficult to find sectors, but there are opportunities in data centers. There are opportunities in battery storage. There are opportunities in smaller defense companies which are emerging. Right now, there are niche building materials which are emerging, and these are not probably in the large cap space that you are able to find, because large caps are so well found and already tracked so well. What has happened in the last few years is that for the first time, a lot of really talented entrepreneurs have received risk capital, which wasn't available for a lot of Indian entrepreneurs, right? So there are entrepreneurs who come in for the right reasons. Some come in for just taking advantage of the equity flow. But as an investor, it's your job to identify those entrepreneurs who are sort of getting the risk capital, and then they have this opportunity to build a great business. So there are many of such businesses available in the spaces that I spoke about, which are newer emerging spaces. These managed spaces or
Samit, who have you identified right now in the last couple of months who you would look at? Because your strategy has been clear, 20% plus earnings growth potential. You're talking about 25% plus compounded earnings growth is what you focused on as well in the past. What is who have you picked right now?
Right. There are many of these, and unfortunately, I can't go to because talking about a specific promoter means talking about that specific company. I'd avoid that, but some of the data is available in the public market. The kind of investments that we have done in the the office spaces space, or the data center space, or the defense space. I also have done an interview, with the promoter on this channel, and I think these are the businesses which have great opportunities. And again, I may give you a certain name, but again, by that, and then people blindly buy it, and if I exit, there is no way I can communicate to the investor. So generally, it's not that great an experience for myself as well as an investor. But I think investors who really follow closely probably at least can identify few of the smaller opportunities that we are able to find.
Samit, is the portfolio largely tilted towards domestic exposed businesses because of all that's happening globally, or are you now sensing an opportunity in the globally exposed sectors? Because some of them, because of this whole tariff tantrum, have come off over the last 6 months.
Yeah, see, we haven't really taken any top-down call of staying away from export-oriented companies. It's completely bottoms up, So, but yes, you are right. I think almost 90% plus is domestic oriented. There are one-off export oriented companies which are more into CDMO or chemical space, where we are comfortable, because their exposure to US is limited, but also that we would believe that those smaller niche opportunities would never be manufactured in the US. So I think they will have minimal. But yes, Neeraj, overall it's completely dominated by domestic themes, because that's where the earnings growth is coming through.
Okay. Samit, there is a emergence in the last 4 or 5 days, and I literally mean 4 or 5 days, of this whole rare earth opportunity. And I call it a rare earth opportunity because there is a mining bill that has been passed which will allow private mining, and I would presume some bit of it has also been done to explore the rare earth opportunity at a fast pace. China has opened up some of those curbs, presumably. That might help some of the end users as well. So therefore, in that whole gamut, have you guys done any work? And do you believe that there could be potential beneficiaries, because that road was closed until a few weeks ago?
To be frank, we haven't really done too much work.
I hear you.
But it's an exciting space, and I think there will be a big time gap between now and when really things start happening. And we would rather be a little more sure, because there are too many uncertainties right now regarding that. There would be uncertainties related to sort of the tariff, geopolitics, and also the probability of we really commercially mining those rare earths. We don't know a lot of those things, and taking a bet at this moment probably is a little too premature.
Okay, the other thing, Samit, that I have in mind is that because the government has done this whole GST cuts, we already know that the Reserve Bank of India cut rates. That helps buying as well. What within the consumption basket would you be most constructive on, if you are constructive on consumption?
Yeah, see, I'm not 100% convinced on whether these kind of boosts will really make a, huge difference to consumption. Yes, of course, there would be some, like for example, if there is, GST cut on the auto side or two-wheeler side, I'm sure there will be a big boost. We are playing that through auto ancillaries, especially EV-related auto ancillaries, something that we really like. Overall consumption, I think, depends on the product life cycle too. So, for example, if post-COVID, because of working from home, if people have already bought, say, dishwashers or, ACs, they do last for, 10, 15 years. And just because the prices have come down, is not people are not going to rush to buy those. And anyways, we don't know. I mean, whatever savings, whether they, because of the tax cuts or because of RBI sort of loosening the policy, whether they will spend it on consumption, whether they will come to the stock market, whether they will go somewhere else outside of India. We don't know about that. Because in the last post-COVID era, there has been huge wealth which has been built, across investors, and I don't think we have seen that big a boost on consumption at all. So just because there is more money flowing into people's hand, it's too uncertain to know. I mean, the if you look at the last quarter, the retail growth was low single digit. The FMCG was low single digit.
Correct.
So even if the low single digit comes to high single digit, that's not good enough.
Absolutely. The base is low and growth from there. In fact, your second quarter itself potentially could be weak, taking into consideration the purchases that could be deferred, from a consumer durables or even the auto consumption pack as well, because the GST announcement is only expected in October. So the high value purchases probably could be deferred as well. So this is going to be a space we should be watching out for pretty closely. But thank you so much, Vartak, for joining us, Samit Vartak, for joining us on the show and sharing your views and the way you're looking at, building materials is one of the sectors, Neeraj, that he spoke about. And I think Shankara Building Products is a company that Sage One has invested in as well. I think another multi-bagger that he's been talking about is a Deepak Nitrite and a Bajaj Finance, if I'm not mistaken, where they've invested long ago. So probably these could be companies you should be looking out.
Yeah, I confess ignorance to knowing about the portfolio inside out, but Hiral, but great points mentioned out here. Okay, the other company in focus is a railway company. You've been talking about it since morning.
Jupiter Wagons, smart moves near today's session, because 5,376, that's the order worth around 215 odd crores. The stock trading at the day's highest levels, 12% up move coming in on Jupiter Wagons. Joining us on the show to discuss more, we have Vivek Lohia, MD at Jupiter Wagons. Vivek, firstly, congratulations on the order win. Orders do come in, but there are supply side constraints, right? And that is what...
I can't get the anchor audio.
Can you hear me, Vivek? Okay, stay with us.
I was wondering if you can hear my audio, but
probably
it won't be the same. It'll be the same thing. But it's interesting that people haven't quite warmed up, Hiral, to the railway theme now. It enjoyed a great run. And since then, I think the last 12 months maybe.
Yeah,
right?
I think the capex announcements or the government announcements in terms of allocation to railway has been a downer, right? I think that is one of the major reasons. And the second aspect is the supplies that they were supposed to get from the government in terms of rakes. That has seen a slowdown.
The orders, you mean?
No. So the government, so they take some inputs from the government in terms of rakes to deliver on their orders. So what comes in from the government, that is not coming in on time, and that has been one of the reasons why even Jupiter Wagons did suffer in the first quarter. I think I remember speaking to Vivek about it as well. I think we have Vivek back with us. Vivek, firstly, hope you can hear me, and congratulations on the order win. If you could help us understand the timelines in terms of these order deliveries, and overall, how much is your dependency on the government from a supply chain perspective as well?
Yeah, thank you for getting me to the channel. So this order we have to execute over the next 2 years. And on the wheel side of the business, again, the first quarter, as you rightly said, that the supply of wheel sets was a challenge for us. So we are now trying to ensure that, we put in a lot of investments in the wheel facility. So we are ramping up the production there itself. Next year, we are taking the production up to 20,000 wheel sets, and by the end of next year, we'll have our integrated facility in Bhubaneswar completely up and running in Orissa. So that will help us produce close to about 1 lakh wheel sets annually, and that will not only be for the Indian market, but it will be largely exported also to the European market. So we are very, very bullish on that product. And for us right now, supply chain management is the crucial factor.
Okay, so Vivek, where does it stand right now? Apologies, what's the delay that you're seeing?
So so now supplies from the government, also from the railways on the wheels has improved. We are now looking forward to the new round of wagon orders from the railways, which we are expecting before end of this year. I think on the private side, our order books are very healthy. We recently got an order of close to about 300 crores from GATX. We expect further strong order book on the private side, and execution there is also very strong. So going forward, now since the wheel set discussions have sorted out, we expect our revenue numbers to be strong going forward. And as and when the orders from Indian Railway comes in, we are all set to ramp up our production. Because overall supply chains now, we have put in a lot of investments over the last 2 years. On the wheat project, we are investing close to about 2,500 crores. So, all the bottlenecks which we have now, we are trying to ensure that those will not remain in future.
Vivek, is it that small news these days are also getting rewarded because they are few and far in between? But Neeraj here, thanks for speaking to us. And I wonder, what's your view on the trajectory over the course of the next 6 to 9 months? Because I know that companies like yours decided to do backward forward integration as well in order to increase the size of the pool, right? Because the basic spend, at least for the current financial year, came off. Now, what happens? I remember the reason I asked this to you is because end FY23, beginning FY24, the street believed that a compounded annual growth rate of an XX%, whatever the assumption is, might last for the next 5-7 years. There is a bit of a rude shock to that. What happens here on?
So no, definitely, as you rightly said, that the expectations were much bigger, but I believe that the story is very much intact, because if you still if you look at the entire logistics sector, the sector is growing still at a very healthy pace at about 5 to 7%. And railway share of that sector is still very small. It's about close to only 20%. And railway is making a very, very concerted effort in terms of the infrastructure build-up. So there has not been any let-up from the railway in terms of infrastructure build-up. And now, in the next 6 months to 1 year, you will see the, Honorable PM's Gati Shakti scheme, which he has introduced, that will start playing out, because a lot of new private siding connectivity has taken place. A lot of private terminals are now up and coming. The container side of the business has really picked up. We have now developed a new wagon for carrying auto cars. We have a very strong, healthy order book there. And we expect, in terms of the demand side there itself is also very strong. So I expect that given that railway share is still very small and the overall logistics space is still growing at a healthy rate. So this hiccup is a very short-term hiccup. I expect in the next 2-3 years, I think the business outlook is going to be quite strong. And, you need to get your infrastructure ready. So our idea is that when the next round of big order books happen, at that time we are fully prepared, so we can take best advantage of that.
Okay, well, and you're bringing in good news, Vivek, because as we speak, the HSBC India manufacturing PMI and the PMI data is out. Services PMI has gone up, manufacturing PMI is higher, and the overall PMI is the record high level as well. So maybe activity in India has certainly picked up. Services PMI is record high, manufacturing PMI at 59.8 versus 59.1. This is, remember viewers, a bit of an advance estimate of sorts, not quite cast in stone, but Pranjal and team do a good job out there, and I reckon that this should be construed positively. Vivek Lohia, thank you so much. We're out of time on the show completely, but congratulations on this order and all the best for the quarters ahead.
Thank you very much.
Right, that's Jupiter Wagons. The stock is up 12%, and it's been that kind of a show today. We've had some bumper conversations, some great market opinion. It continues during the day, Hiral, because in about half an hour from now, we'll have a conversation with Ramdev Agarwal coming up as well. And in the ensuing period, our show Ask Profit gives the viewers what they want, which is answers to their queries.
Correct, whether it's going to be time to book profits or look at investments at this current point in time. But completely out of time. With that, it's a wrap on this edition of India Market Open. From the team that put the show together, Neeraj and myself. Lots more lined up on the other side. Please stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिताई, ऐसे बॉय मिलते मुंबई में चांस ही नहीं।
एसआईपी करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. With me is Mahima Machra. I got this all wrong. My name is Alex Matthew. That's Mahima Vajrajani. And we'll take you through the next 45 minutes or so of trade. And let's take a look at where the markets are right now. You have gains for a third day in a row, and you have about 0.33% higher for the Nifty 50 or thereabouts, and trading at the high point of the day and well above 25,000. So that's a good sign. The broader markets, let's pull them up as well, and they're looking reasonably good. If anything, they're looking better than the benchmark. That has been the case for the last couple of days. 0.6% higher for the small cap index, and the advance decline ratio in favor of the advances at this juncture. I wonder whether that will hold through the rest of the expiry day session. Now, it's been a day that is packed with news flow all the way from yesterday, and let's take a look at the insurance pack, because that really is the big story of the day. The group of ministers meeting yesterday to talk about what to do with insurance premium in both health insurance as well as life insurance, and the consensus is that they want to exempt GST. The implication is that your policies could get cheaper down the road. The expectation is that it could be around 15%, 13 to 15%, but we don't know all of the details at this point. So it's a measured response. You have a few health insurance players that are doing reasonably well. Something like a Niva Bupa, for example, was looking good. I wonder if it's still holding on to gains. It is up about 2.4%. Star Health as well was one of the stocks that we were looking at this morning. And really, I think a lot of people want to know whether this will relate to existing policies as well and future policies. And some people are saying maybe it won't have too much of a bearing on premium for now. At least that's the reading right now. So, right. But there are more stocks as well. We were speaking to Jupiter Wagons just before Ask Profit started, and that's why Ask Profit got delayed a little bit. It's a big order that they've gotten, and the stock is up as much as 11%. And well, if you thought that you were having a bad day, it can't be worse than the dealer at Avendus Spark, right, Mahima?
100%. I mean, if you're having a bad day, like you mentioned, I mean, it cannot get worse. Yeah. I mean, selling Clean Life Science 2x of what they were expecting. The expectation was selling off around 25 million shares, but they sold, I mean, right now, they sold around 60 million and bought back another 30 million, so 90 million in terms of volumes. Yeah. And that's the kind of move that we've seen in the stock. But we were in fact just trying to calculate as to how much they'll have have to probably go ahead and pay
Yeah,
just to cover
like
up
150
the kind of
crore or thereabouts, right? So,
yes.
So you don't see this very often. It's called fat finger, or it's called a freak
Buckley
trade, or
fingers.
whatever you want to call it. Unfortunately, it's not a good thing to happen for Vendes Spark or the person who actually punched the deal. So our thoughts go to him or her. We've got Lancelot Dikuna, who's a CIO of ValueX Wealth Connect, joining us, and Kush Bora, the founder of kushbora.com as well. Gentlemen, thanks so much for taking the time and for speaking to us. Kush, I'll come to you first on a query that we've got on IRB infrastructure, and a very large quantity has been bought by Mithun Kumar, who's writing in from Varanasi, and 67 rupees is where he's bought it at. 10,000 shares is what he has, and so therefore he's incurring a pretty hefty loss at this point. What would you do with this in the near term?
I'll express a very good morning to you, Mahima, and all the viewers. I think I would hold it, but with a tight stop loss near the 38 to 40 zone. I know he's in a bit of a loss. While there are no immediate signs of a recovery, the stock did see some sort of a rebound in the last couple of sessions, but has now given way once again from the 20-day moving average, which the stock has actually failed to cross since mid-June. So up until that happens, I think the near-term consolidation with this negative bias could well continue. To give himself any kind of chance or a hope for a rebound and exit at a lesser loss, I think he should continue holding on, but keep a tight stop loss within this 38 to about 40 band. If it slips below this, I think you're better off exiting, even if the loss is slightly deeper than where you are at currently.
Okay, all right. So that's with regards to where IB Infra stands. Hold on with a strict stop loss at 38 is what Kush is indicating. All right, we've got our first caller for the day. Dheeraj is calling us from Hyderabad. Dheeraj, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. Yesterday I bought actually Sula Vineyard shares, ma'am, at 267 rupees. 650 shares. The stock corrected from its peak, ma'am, like around 450 rupees. It has already almost bottomed out.
Correct.
There is a news that it is gonna enter into premium spirits, like different types of spirits.
Right.
So is this going to be fetching the counter? If I hold it, I would like to know both short-term and long-term outlook regarding this stock, ma'am. And some trading ideas from Kushbora sir also, sir, ma'am.
Okay, Dheeraj, I'll take your question on Sula Vineyards for sure with Lancelot. Lancelot, hi, very good morning to you. So there has been news floating around about what Dheeraj mentioned, but in terms of where the core business of Sula Vineyards stands, the wine business, that's not been picking up in the past few quarters. I mean, considering the way Q1 has panned out, probably they'll slip into losses as well in Q2. What is your view with regards to this counter? And if you want to play this alcohol space or segment, which one would your pick be?
So I think, in this business, a lot depends on customer preferences and the ability to spend money. And there's also this concept about, the health aspects of drinking. So given all the background, Sula is presently also trading at about 38, 40 times, its earnings, which is an expensive proposition. And unless you start to see demand grow as well as earnings grow, it is going to be a really difficult task for Sula, because presently even its net profit margin is about just 1.7%. So it's always better to be with the larger players if you want to take exposure in the space. And United Spirits is probably the better option at this point in time.
All right, so that's a view on Sula. Let's see when it does come about, because it's not uncompetitive, right? It's ultimately you're talking about price sensitivity, you're talking about various other factors that go into the selection of whatever you choose to consume over the weekend. And so therefore, let's see the proof of the pudding, so to speak. We've got Sarath, who's writing in from Dubai, and HBL Power Systems is the name of the counter that he's talking about. He's bought at levels of 685. He's looking for a short-term view, which he's defined as a period of 1 month. Let's pull that up, HBL Power Systems, and he's in the green to the extent of close to 20,000 rupees. Kush, should he book out or hold for another month?
He should book partially, for sure. The stock's actually had a very, very, very interesting run on the back of good volumes, but now it's gone into overheated territories on the daily setup and very close to those on the weekly setup. but I like to hold on to momentum stocks. So what I would suggest is, book it 50% right now, hold the rest of the quantity with a stop loss and a very tight one at the 775 mark. If that is broken, the stock could actually retrace lower. So hold, book partially and hold the rest with a TSL at 775.
Okay. You know what? There was a sneaky question that was pushed in by the last caller. I can't remember who it was, but he asked Dheeraj asked at the end of it for trading ideas from Kush, and I'm inclined to allow that, though we don't do it very often. Are there any that stand out to you at this point, Kush?
And I thought you'd never ask. No, I would suggest for Dheeraj, first off, thank you for directing directly at that question at me. I would suggest GMDC. This is one stock that we do. We've discussed multiple times, on the channel as well. If Dheeraj is a regular viewer, he'll recall that Monday morning I give a weekly pick, and off late it's had a very good track record. GMDC also has done well this week. I think going forward also it could do well. You're seeing good accumulation. So I think for targets of 444 and 465 with the stop loss around the 405 mark, you could hold. That was the initial call. Maybe he can now bump the stop loss up to about 415, 420, that zone. So GMDC good accumulation, can still consider on the long side.
Okay, all right. We've got a next caller from Vijayawada. Bindu is calling us. Bindu, hi. If I'm not mistaken, you're calling us again. You've called us in the past.
Yeah,
so good morning to you.
Yeah,
how can we help you today?
You about NSDL.
Yes. Please go ahead.
Yeah. So I want to know about ProStar Infosystems.
Okay.
Like 1 month back, I have purchased it around 225, 500 shares.
Yeah.
So I want to know the both short and long term point of view. I want to ask this question particularly with the Kush because I follow him very
closely.
Often.
Yes.
Yeah,
I got it. You know what? I want to make an exception and take a question with Lancelot on this if he has a view, because Bindu, I don't know if you've seen the latest stock exchange notifications from this company, and this is ProStar Infosystems. It is in the business of battery storage, and it has just announced that it has emerged as lowest bidder to set up 300 megawatt per hour standalone battery energy storage system, in which the yearly rental is going to be 45.7 crore and the contract is for a period of 12 years. Notwithstanding the latest order win or the contract that it seems to be getting into, do you have a view on this one, Lancelot? Would you hold for the long term?
I think it's a relatively small cap company, and it's trading at almost 37 times earnings. So I think a lot of the positives have got already factored in, and these are longer term contracts. 12 years is a long period of time. And profitability of these contracts would depend on how cost management is being undertaken. So I think I would wait for a little bit more confirmation about the sustainability of profits in this business, and then take a call as to whether to invest or not.
Yeah, it's moved up quite substantially over the last 3 months. Bindu, very quickly, where did you buy? What price did you buy at?
225. Should I exit or hold?
Got it. Kush, what's the view on the technicals? She's bought at slightly elevated levels, so it's above the current market price. What would you say?
Sure. First of all, Bindu, thank you for the kind words, and was saying that you've been following following me on the channel for some time now. Thank you so much for that. Very limited data, Bindu, on this stock because it's a recently listed one, but I would suggest a hold because for the last 4 sessions you're seeing a good volume back up move. So with a stop loss on the 198 mark, continue to hold. But my suggestion would be, as long as you, as in when you see your buying price or maybe just over, exit. The momentum right now seems missing on this one. So hold with a stop loss of 198 and exit at cost.
Okay, all right. So that's the view with regards to where ProStar Infosystems stands. We've got our next question on the stock that's zooming in trade today, and that's Jupiter Wagons. And Natarajan from Chennai is writing in. He's bought 500 shares at 407 a piece, so at elevated levels for sure. So he's still sitting on a loss of around 20,000 odd rupees, and wants to know if he can continue to hold this counter from a longer term perspective. Lancelot, I'll come to you on this one. The recent news about Jupiter Wagons is that they've acquired an order for Vande Bharat coaches, and that'll give them a revenue potential of over 250 crores. Do you think this is the right way to play the railway theme and continue holding it for the next 3 years?
So I think, given the current, run up that this stock has seen over the last, 2-3 years, it sort of has really risen significantly on the back of, interest in the PSU space, and especially those companies which are getting orders from the railways. But if you look at profitability, it hasn't kept pace with its price, with its share price, and it still is struggling in a sense. So I think I would sort of stay away from the stock till it actually generates enough profitability to justify a decent return on its investment, and then only one should look at it.
Okay, all right. So that's with regards to where Jupiter Wagon stands. We've got our next caller. Ravi is calling us from Hyderabad. Ravi, hi, a very good morning to you. How can we help you today?
Yeah, hi, very good morning. I have query on PNB Housing Finance.
Okay.
So I'm holding 50 shares bought at 1064.
Okay.
So just want to know, is it a good time to average the stock, or else, and also want to know, could the stock move upwards in next 3 to 6 months?
Okay, Ravi, got your question. I'll take this up with Kush. Kush, I was listening to Nilesh Shah today, and he said that the best way to play the realty theme is not going and buying stocks of developers, but going ahead and buying housing finances is what he said, and that was very interesting for me. But with respect to where PNB Housing stands, do you think the charts are indicating towards a positive momentum for the next 3 to 6 months?
So yes, I do agree with Nilesh's view to some degree. Also, maybe the housing development or the ancillaries that go into the housing construction could also be one area that you could look at. As far as PNB Housing goes, again, as you would already know, not a big fan of averaging, but this time around, yes, I would suggest it's a good idea perhaps to buy some more of PNB Housing, considering he's got some at elevated levels. But more importantly, from here on, the risk-reward ratio on PNB Housing looks extremely attractive. With the fall, the stock actually took support at its long-term averages or long-term support zones of 755. Is seeing good volume accumulation this week. And we all know that this stock has done well in the past, so risk reward ratio is fairly favorable. So yes, you could accumulate some more at this level. 750 is a very hard stop, so keep that one very closely for the entire position. On the way up, the stock has potential to go to about 900, maybe even 970, 980 levels in the couple of months. Maybe with the average, he could see his cost price come about, or maybe even some profits in the coming months.
Okay. All right. On that note, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
There They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask, decide.
Welcome back. You're watching Ask Profit and we're in the midst of taking all of your questions. By the way, if you're tuning in for the first time, there are two ways that you can get in touch with us. Either you can message us on the number on the top of the screen or you can call us on the landline number that is at the bottom of the screen. Our next caller is Gautam, who's calling us from New Delhi. Gautam, very good morning to you. How can we help you today?
Hi Alex and Maima, good morning.
Good morning.
Good morning.
Sure. This is about D-Link India.
Okay.
I have around 75 shares, bought at a price of 530 rupees.
Okay.
So at a loss of 2600 or so.
Right.
This was supposed to be a short-term, trade. Now I am stuck and the stock is not moving much and the Q1 results is not that exciting. I'd like to know the short-term. I really don't want to hold it for too long to get
recover as much as you can. I got it. So therefore, Kush, on the charts, what levels would you suggest exiting at? Is there a possibility of getting back to that 530 mark? It's currently trading at 490 or thereabouts.
Alex, I would suggest an exit at the current juncture for Gautam because he's rightly identified that the stock hasn't really done much. In fact, if you see for the last about 10 odd sessions, the stock is hovering around the 200-day moving average, and today it's broken below that and heading lower. The supply pressure has been immense, for the last 2.5-3 months. Very close to support zones, but with the lack of volumes on the upside and the stock continuing to see pressure, I would give it a very low probability of a sharp rebound from here on. So it will not be a bad idea to perhaps switch out of D-Link at the current level.
That's with regards to where dealing stands. But we've got our next question, which is probably the story of the day. That's Clean Science. Story of the week. Probably more than a week as well.
No, I thought I thought you were going to take Nazara.
No, I was talking about Clean Science because
both are stories.
Both are stories, and I think we should take view on both of these. Make an exception here and take a view on both of these. Ashok is asking this question and saying if it's the right time to make an entry into something like a Clean Science and Nazara from a shorter term perspective. Kush, I'll take this up with you, both Clean Science as well as Nazara, and of course you being on the trading side, if you can give us some perspective as to to help viewers understand as to what's happened there and how big of an error this is.
I can tell you someone's going to have a really, really bad appraisal this time around, right? So
that's the least of it. Yeah, that's the least of it.
I
can hope that is the case.
That's the only thing. Yeah,
I can hope that it's a bad appraisal.
The person doesn't lose his job.
Yeah.
I'm just being kind to whoever they are.
Yeah.
So on coming back to Clean Science, I would actually wait on this one because, and not just because of what's happened today. Irrespective of that, if you see the structure, the long-term structure, ever since it made those highs in 2022 around about 2700, 2800, 2600 mark, it's been on the sell. While now it is close to those medium-term support zones of about 1100. There isn't a real uptick, that's coming about in terms of volumes. First come the volumes and then the price action. So I'm not seeing that. What I could suggest is wait up and see if the stock crosses above 1200, 1210, that zone. That's the first hurdle, 20-day moving average.
Yes.
A close above that would perhaps turn the tide for Clean Science, not right now.
Got it. Okay, we'll circle back to you to ask about Nazara, but we've got a very special guest speaking to NDTV Profit. Ramdev Agarwal, who's a chairman and co-founder of Motilal Oswal Financial Services, is speaking to Neeraj Shah, and I'm very excited to hear what he had to say. Neeraj, over to you.
Well, thanks everybody for tuning in to yet another episode of Profit Insights, and it's absolute delight to have Mr. Ramdev Agarwal speak to us today. And not for any other reason, it's always a delight to talk to him, but I think we are talking to him after a week of a lot of developments. And Mr. Agarwal, it's great to talk to you because until, let's say, until the 13th or the 14th of August, the markets and the hopes were looking in a bit of a disarray. And then the S&P upgrade happened. 15th August, Prime Minister Modi unleashed those GST reform conversations. And today we just learned that the HSBC manufacturing PMI numbers are at record high levels for services, and manufacturing too has inched up. My question to you, sir, were those reforms and that upgrade and the global peace talks, are they the much needed necessities in a currently growth-starved world and a slowing down Indian economy?
Yeah, Neeraj, good morning. I think Indian economy itself is slowing down in relation to what it was doing last year. If you look at the lot of high-frequency data, there is a slowdown in the economy, and it needed to be kind of brought back into the right track. So I think it started with the monetary policy. Sorry, it started with fiscal, with the budget giving a bit of a boost. Then monetary policy, where credit flow became better. Then came the rate cuts. And now comes the GST, Diwali Dhamaka, and I don't know what all is there, but I think these are all leading to copper performance picking up maybe in second half, and then from there I think it will be full blast maybe next year.
Got it, sir. Is this enough, Mr. Agarwal, or do you think we need to do more? Because we've always been, as a country, spoken about as a policy environment which does incremental reforms, not big bang reforms. There have been some attempts made. Was this the first of the big bang reforms that is needed?
Yes, I think by Indian standards, it looks to be pretty good. And it all depends on how much ifs and buts we put in the reform itself. Because what happens is that whether all the 12% will go to 5% and all the 28 and above will all come to 18%, do they do that cleaner job? That is very important, that we only have two rates. And I think why should I have even 40%? I think just club every damn thing on 18 and keep it very clean. Because GST is about the very, very simplified tax system, digital tax system. So the moment you have more complicated rates, maybe it might be a little more tax accruing or something. Because I'm interested in making it so simple that the compliance increases. With the compliance increase, you get more taxes. So I am not meaning that you should have lower tax collection. Actually, it will lead to higher tax collection if on a sustained basis you keep lowering down the GST. So this round, say 518. I think next round we should do 515. Then we should come down to 510, something like that. So that as the economy responds to the lower cost structure, consumers benefit, and it is much more affordable to consume in India. Because right now, when you go to buy consumer goods, I think it is, the taxation on the consumer goods, particularly hotel rooms and all, are so high that it pinches, So I think this is going to be a big one. And I think the success of this will encourage the bureaucracy and the politicians to take even more bolder step. Because right now, America is setting the trend that they're just throwing all the rule books to the in the air, and they are showing that yes, things like Dodge, where they are cutting the government expenditure, they're negotiating very hard with every trading partner. So I think those are good part of what is happening in the world right now, and I think those things will prevail in other economies also.
Got it. Mr. Agarwal, from an investing lens, how do you look at that perspective, that piece, that a very strong relationship that existed for such a long time, there are some how do I say, differences around that, and India and China are warming up to each other as well. How does that impact an investor's mind in Mr. Ramdev Agarwal?
Yeah, I think these are two different things. Warming up to, improving the ties with China is a good thing, and I think we should strengthen the relationship with America also. Why the true relationship has to be at the cost of each other? So I think there is enough scope for US relationship to be strengthened on its own merit, and China, in any case, they are our neighbor. So we have to have a very strong relationship to, the peace at the border leads to a lot of peace and kind of a focus onto the domestic economy rather than on the borders. So clearly, I would say real priority is the strengthening the relationship with China, and equally at the same footing, because ultimately America is the biggest consuming market in the world, and they are market economy. So you can't do without them. So I think our very healthy relationship, which has been going on for decades, I hope we get over this current hump, and there is no any permanent damage to the relationship.
All right. Well, that conversation with Ramdev Agarwal we've cut out midway through, but you can watch the entire interview at 5:30 p.m. today. What you were just watching was Profit Insights, a conversation with Ramdev Agarwal, and I'm sure that they're going to be speaking about a lot of other things, including how you should structure your own investment strategy heading into the festive season and the rest of the financial year. For now, let's go back to the questions that we have lined up from all of you writing in from wherever you are. And this next one is from Arjun, who is writing in from Kolkata. He's got 74 shares of JSW Energy that he's bought at a price of 535 rupees per share. He's wondering whether to add more at the current juncture for a period of 7 to 8 months and what the target price might be. I know it's relatively short-term time frame, but I'll come to you, Lancelot, on what you think about JSW Energy. Should you hold on to this? Should you add more at the current juncture?
So I think, long term, the stock is in a good space because its business has been growing. The power generation, transmission, and trading is actually a fairly profitable business, as well as we saw the quarterly numbers. They had almost 743 crores of profits this time. So there has been reasonably good profit growth, and the longer term outlook is positive. Only thing is that valuations are still a little bit elevated. and maybe you can accumulate some at this level, and if it does go down, you should be prepared to look at buying some more even at a lower price.
All right. Okay. So that's with regards to where JSW Energy stands. We were to circle back to Nazara as well. So Kush, your quick view on the charts for Nazara?
No, for now, I would suggest, don't jump into it because it drops too much. Maybe once again, if it drops to 1,000 odd levels, you could consider, but not happen.
All right, the stock down 7% as we speak. We've got our next caller. Shankar is calling us from Bengaluru. Shankar, hi, a very good morning to you. How can we help you today?
Good morning, madam. Thanks for taking my question.
Our pleasure,
and you are both of the anchors are super, and smiling faces encourages us to ask more.
Thank you so
please
much.
Maintain that.
Thank
Have a
you
good
so
day
much.
to both of you.
You too.
And Kush also is always smiling. I also like that. So thanks for saying, madam. My question is, I have bought 60 shares of Schneider at an average price of 760. Now the P is very high. Industry is high, above 82, and it is the price has gone up to 1,000 and it's touched 50-day moving average today. And is it right time to accumulate because profitable, except for profitability, it's good, but sales is not that encouraging. So do you consider continuing this or adding add-on dips?
Okay.
Long-term investor for long-term.
Okay, Shankar, I got your question. I'll take this up with Lancelot then. Lancelot, Schneider Electric is the counter and he's sitting on profits of around 6,000 rupees. Wants to know if he can accumulate more from a longer-term perspective.
So I think, Schneider Electric is actually looking at, some kind of buyback from the parent body. And probably on the back of that, we are seeing, with this particular rise in price. So I'm not sure how the group is, interested in continuing to have a listed entity, or what is their advantage in terms of keeping a listed entity here, because they are looking at consolidating their businesses and they may at some point in time take it, private. So that could be a negative for the company, although maybe when they do a buyback, you will get a much higher value. So one can look at it from that perspective. But otherwise, unless you're sure about the intentions of the group to remain as a listed player and how they will grow the business, it does look a little difficult to take a call at this point in time.
All right. Okay. So therefore, what is the crux of what you should do right now? Should you avoid if you don't have a holding, or hold if you do?
Well, if you have a holding, you should hold on to it, because whenever they come up with an open offer, you will get a better price. And if they do look at delisting at that point in time, there's no point in adding more, because you will have limited upside when it will be restricted to the open offer that will come in.
Okay, we've got our next question from Dr. B.V. Krishnamurthy, and thank you so much, Doctor, for writing in. Sterling and Wilson is the name of the counter that he wants to know about, and he's bought during IPO phase. So I'm not really sure whether this is, whether there have been any corporate measures that have been taken in the past, but there has been a pretty substantial drop in the price over the course of the last couple of years. So the question is therefore to you, Lancelot, and the ownership structure has changed. This is now owned, a pretty substantial part is owned by Reliance Industries now, and so therefore would you hold on to this? What are the prospects if you bought it at very substantially higher levels?
I think one has to then wait for a while, because the price at which it is trading at sort of factors into the profits for probably the next 5 to 6 years already factored into the price. So you are not really going to get a huge upside, and merely the fact that Reliance Industries is sort of taken a stake in this company, or a majority interest, doesn't necessarily mean that the performance will change overnight. But if one does get a sense that due to the new management strategies, you are seeing an improving financial performance, then one can look at accumulating even at these levels. But once you need to see that strategy actually playing out as to what is the change in their business.
Okay, all right. So that's with regards to where Sterling and Wilson Solar stands. We've got our next question on Pennar Industries. Narendra from Pune has bought at the levels of 635 and has 100 shares. Sitting on a loss of 37,000 rupees. Wants to know if you can continue to hold or sell. Kush, I'll come to you on this one. What are the charts indicating for Pennar Industries?
I'm not sure if that's the correct price. 675. At least my charts don't reflect.
35.
That's the price. 635. No. I think the stock's actually right now trading at all-time high levels. But assuming he's spotted at current levels, so maybe slightly lower, my suggestion would be continue to hold. The reason for that is the stock has now, as I said, hit all-time highs. Just a couple of sessions ago, you had massive volume surge on this, and stock is benefiting from that in terms of the price action as well. I would in fact be constructive on this stock, and maybe a further up move towards the level of 280 and even 295 cannot be ruled out. And if I did have a position from a short-term perspective, I would keep a stop loss at the 245 mark. So good momentum, good volume action. Continue to hold if you have a position in Pennar Industries.
Yeah, it's possible that the price that we got on chat is wrong. And so, was it Narendra? I'm not sure. I think it was Narendra. Narendra, if you can write in and tell us, just check what level you bought at, and it's possible that it was wrong. India Cement, I think a couple of people are writing in to ask about this, and of course there was the offer for sale today. The stock is up after that. Ultratech Cement, of course, selling a stake to meet public shareholder norms. There's an expectation that integration will take place going forward. This is something that was seen as a bit of an overhang, the requirement to sell stake and bring it to 75%. The question from Chandan Jain from Hubli is, would you buy at this current juncture? Lancelot, what's the view?
So I would actually, think that yes, you can look at adding at this point in time. So you can look at accumulating, because finally it is going to, continue to grow, and you should look at the cement industry on a long-term basis is going to continue to show growth given the demand for infrastructure, real estate, and the various government projects that are coming in. So from a secular basis, yes, you will see an uptrend, and given the fact that you are seeing some amount of value addition, one should look at accumulating the stock even at these levels.
Okay, one should look at accumulating India Cements, is the view that Lancelot has, considering that cement space is going to pick up from here on. We've got our next question from, do we have the name?
Sumit.
Yes, Sumit. Okay, Sumit is asking about HCL Tech. He's got 83 odd shares at the price of 1523 a piece and wants to know from a 6 months perspective, should he accumulate more at the current levels to see some upside? Kush, is that something that you're seeing on the charts?
So I wouldn't suggest accumulating more, but he could continue to hold. The reason for that is that yes, IT stocks are seeing some revival, but if I dial the clock back not too far, maybe just earlier this month, the stocks actually rallied and then perhaps saw some profit booking and then are on the way up again, suggesting that yes, there is some interest, and if you hear on the street, there is a contra buying interest on some of the IT names. As far as HCL Tech goes in particular, yesterday it had a good price action surge coupled with decent volumes. So I would suggest don't add more, because the trend is not as clear just yet, but it's starting to emerge. So hold what you have with a stop loss near the 1465 mark. Once it closes above the 1500 level, you could see your buying price, but then the stock would also actually head to 1545 and 1575 levels. So continue to hold with a stop loss around the 1465 mark.
Got it. All right. So we've already taken quite a few questions, but what we do towards the end of the program is to take a rapid fire round with both our experts. This is 2 minutes where we throw as many questions as possible at our experts. And let me start with Praveen's question, and he's asking about the pair of power financiers, PFC and REC. He's asking, is it good time for you to average for the long term, or would you suggest to sell? He bought it at the peak of 2024. What's the view, Lancelot?
I would actually look to sell.
Okay, sticking to the power theme, Riddhi from Pune is asking about NHPC. She's bought at an average price of 100. Wants to know if she can continue to hold. She's holding 1500 odd shares. Continue to hold or sell? Kush, your view on the charts?
Momentum missing. I would suggest an exit for now.
Okay, ease my trip. If you bought at levels of 11.59, significant quantity, 11,000 plus. Riddhi, Piyusha wants to know, would you hold or exit? Lancelot?
Well, I think I would also look at exiting at this point in time.
Okay, Swiggy is the next counter. Gokul has bought 7,500 shares at 420 a piece. From a 6 months perspective, Kush, should they continue to hold?
Yes, very much continue to hold. Keep a stop loss near the 410 zone.
Aarti Industries bought at levels of 944 for the long term. Sarvesh wants to know whether to hold on. Lancelot?
I would hold on to Aarti Industries.
Okay, Shriram Finance is the next counter. Suman is holding this counter, 20 shares, bought at 444 a piece. Wants to know if she can continue to hold for the next 5 years. Your view, Lancelot?
Yes, you should continue to hold for the next 5.
Okay, Suzlon bought at a price of 70 rupees last year. Kush, would you hold or exit at this point? Long-term investor.
No, I would hold and I'll keep a positional stop loss at 54.
Okay, Bellrise is the next counter. Sushila is asking this question. Can she continue to hold? Wants to know the targets. Lancelot, do you have a view on this one?
So I think here I would look to exit rather than hold at this point of view.
CG Power bought at levels of 11 rupees. Would you hold for a period of 3+ years? Sudeep wants to know. Lancelot?
Yes, I would hold CG Power.
Okay, DB Corp is the next counter. Manoj from Mumbai wants to know if he can continue to hold for the next 1 year. 200 shares are there in his portfolio. Your view, Kush?
You could continue to hold. I would suggest a stop loss at the 255 level.
All right, gentlemen, thanks so much for joining in, for answering all the questions. Now, by the way, we're listening live to what SEBI Chief Tuhin Kanta Pandey is saying as he's addressing FICCI's 22nd Annual Capital Markets Conference. Listen in.
For listed companies, AIFs and FPIs, our momentum toward optimum regulation continues. We have already issued multiple discussion papers in consultation with industry and public to carry out further simplification and promote capital formation. There is much we can achieve together. SEBI's approach in relation to equity derivatives has been thoughtful and consultative. We are looking to deepen the cash equities market, which is the true foundation of capital formation. Volumes in cash market have grown rapidly, doubling in terms of daily traded volumes over a period of just 3 years. However, much more needs to be done. We have often stated that equity derivatives play a crucial role in capital formation, but we must ensure quality and balance. We will consult with stakeholders on ways to improve, in a calibrated manner, the tenor and maturity profile of derivative products so that they better serve hedging and long-term investing. Ensuring risk awareness and suitability is equally important, and constructive ideas for proper stakeholder engagement will be much needed to achieve this goal. I'm sure the deliberations today in CAPM conference will enrich the discourse and provide key takeaways for us all. Thank you. Jai Hind.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom.
To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandani, and we're going to talk about a company which has done 30% or given a 30% return over the last 2 trading sessions. Of course, today it's down 6%. So that's still a very healthy 25% return all through this week. We're talking about HLE Glasscoat, and it's on the back of an acquisition which they've done. But they had done this back on the 14th or the 15th of August, if I recall right. So it's quite a few days back. But the stock has been on a tear since that point. Omeraz is what the acquisition is that we're talking about. Now it's a company which gives presence or a footprint to HLE Glasscoat in Europe, or a larger footprint if I can call it. Now what I want to know from this Omeraz transaction is, what do you expect from an Omeraz in terms of top line, margins and bottom line? It's a loss-making company. It's a company which is in equivalence in an IBC situation or a bankruptcy situation in Europe, which HLE Glasscoat has acquired. It's a 270 odd crore rupee acquisition which HLE Glasscoat has done, and HLE Glasscoat itself is around a 3400 crore market cap company. So it's a decently large kind of acquisition for the kind of size that HLE Glasscoat is. And therefore, the second piece I want to understand is, how are they funding the acquisition, and whether any further capex on Omeraz is required or not. Mind you, Omeraz's top line in 2024 shrank versus the earlier years, and it's actually a loss-making entity there. So I want to understand whether there is any change to the way they are doing business and what will that likely change be. In terms of any other additional capex required also will start to hurt the balance sheet, because they've got a reasonably sized debt already sitting on the balance sheet which they were planning to pay back. But this transaction may well change the metrics. So a lot of those guidances may change, and I'd want to know all of that. How does the acquisition aid the existing business? Mind you, this gives tailwind to the existing business as well. You have a footprint in Europe. Not only does this add to the product arsenal in terms of new products, but the existing products in terms of selling it to Omera's existing customers, those will get added very well to an HLE glass coat, and that may aid the top line. The top line guidance is roughly late teens, so an inch up there on the existing business, I'm saying any inch up there would be an indication that that is being contributed by Omera's to a certain extent, and I'd want to know that, because that will also be a lever for future growth. Now in terms of therefore the target top line and PAT margin for FY 26 and 27, and this is on a consol basis, I'd want to understand the current business plus Omera's, how is this shaping up? Because they had given certain guidances and we'll put it out, but does that at all change for an HLE glass coat, a stock which has run up 25% this week, and therefore all of this will become relevant. In terms of the late teens growth on the existing business, what is it being driven by? Because this has been a key overhang, especially in the businesses in which they supply their products. They haven't really seen that kind of growth, so I'd want to know and understand whether specialty chemicals in terms of a business is picking up or not, because that will hold the key. Then there's the filtration and drying business. In that business, the pickup was expected in FY 26. I'm trying to understand whether they're already seeing signs of that, because that will aid both top line as well as margins. Last off, they were planning also to cater to the defense space. Are orders coming in, and what's the outlook of that? So plenty to discuss, and that's probably all that I want to know. But Varsha, I'll toss it to you with regard to explaining to viewers all about the company.
Yeah, thank you for that. HLE glass coat. So what it does is they manufacture glass line equipment, filters and dryers equipment for various industries. So be it chemical industry, pharma industry, talking about the business segment, let us start with filtration and drying division, which contributes almost 40% to the overall revenue, and glass line equipment division, if you see, contributes almost 46%. Now what are the uses of this glass lined equipment? If I were to talk about, they are used in chemical manufacturing for highly corrosive reaction. They are also used in pharma, to maintain product purity and prevent contamination. Also used in agrochemicals and pesticides and specialty chemicals. The third business segment that they have is heat exchange equipment, which contributes almost 13% to the overall revenue as of Q1 FY26. Over here you have shell, tube or plate transfers heat, which is used in the chemical process. So basically they manufacture in a very easy language, they manufacture certain equipments, glass line equipments, which are used in your agrochemicals, in the specialty chemicals and in pharma segment.
I'll just pause or just interrupt you here for 1 minute. First one, with regard to your filtration and drying equipment, just trying to probably ease it up for viewers. It's basically a filter which allows the separation of solid and liquid post a process. So that equipment is the filtration and drying equipment, which allows that separation. So that's on the filtration and drying piece. On heat transfer equipment, it basically transfers heat in chemical processes, which is required. A portion of this business comes from Kinam Specialty. That's another acquisition that they had made in 2024. Some of the guidances of Kinam have turned out to be okay, not up to absolute scratch, and that is the other piece which will likely drive numbers as well going forward if that were to play out. Of course, the glass lining equipment, I believe Varsha covered, but it's basically corrosion resistant vessels and largely used in chemical, pharma processes and in the manufacturing of API and pharma. So a lot of that is linked to the chemical and the pharmaceutical business. If the chemical business does well, the HLE glass coat business will do well. If not, then you will see a drag with regard to business. So very, very linked with regard to the chemical business. Sorry, Varsha, please go ahead.
Sure. I was just speaking about the revenue mix. Then moving on, let's see, 68% of revenue comes from India and rest comes from international business. So you have, mainly Europe, US, wherein 32% of the business comes. This is just a revenue breakup. For example, from for API and pharma, so 65% of their business is coming from API and pharma, 23% from specialty chemicals, 4% from agrochemicals and 8% from others. So if something happens in pharma industry or specialty chemical industries, that's going to affect them, and that really happened. If you see in the last 3 years, we'll of course speak in income statement, the growth has not been that fantastic because of the slowdown that was seen in the specialty chemical segment, and which management has also highlighted in their con call. Well, moving on, let's talk about order book detail, because this is important. This gives us a revenue visibility for the future quarter. So order book as of June 25 stand at around 738 crore, and this gives a revenue visibility of 8 months for international business and 6 months for India business. So they have quite a good order book which will take care of the future quarters. Now
but broadly this is normal,
yes.
Viewers. So if you feel that this is something which is low, not really. It's fairly normal in their line of business to have this kind of revenue visibility. Sorry, Varsha, please go ahead.
Then talking about clients, who are the clients for this company? You have Bayer, you have UPL, Sun Pharma, Atul, BASF. So mostly chemical and pharma companies and agrochemicals companies are their clients. You have PI Industries, SRF, Zydus and Sanofi, who are the clients for this company. Now the important segment of this company is Omera's acquisition, which Harsh was speaking about. So they've acquired Omera's assets, so Omera's is into glass lined tanks, facade cladding and animal panels. So basically what HLE does is similar kind of business this Omera's has. And so what is in business for HLE glass coat? If I were to talk about this, there's an immediate diversification to infrastructure, renewables and opportunity to cross sell. So now see, so we all know that chemical sector and pharmas, so mainly problems in chemical sector has affected HLE glass coat. Now because of the diversification into renewables and infrastructure, this overhang will go away. This pressure because of some user industry will go away, and maybe we can see good numbers going forward because of this Omera's acquisition. So basically they've done this acquisition just to diversify their portfolio from chemicals and pharma. And
let's analyze the key metrics now.
Yeah, exactly.
Let's start off with that. We're gonna look at income statement, balance sheet, cash flow, return ratios, shareholding, street cred. There's no street coverage, so we will look at valuations and outlook, and thereafter we'll speak with the management who will join us very, very shortly. Varsha, 30 seconds, income statement.
So income statement, Harsh, in the last few years, if I were to talk about a net profit, there's been pressure in the net profit. One of the reasons is, of course, higher interest cost and depreciation, and pressure in chemical industry has affected this company. So overall, a neutral rating when it comes to income statement. Because of the industry problem, this company has been going through problems.
Perfect. So numbers on your screen, margins will also come up on a YOY basis. The last 5 years, it's been on a shrinking trend. It's currently at 14%. Let's look at the balance sheet, and you'll see that there is decent amount of borrowing sitting on the balance sheet, both short term and long term. You accumulate that, it's nearly 70 to 80% of your equity, your total equity, and therefore may be a bit of a concern. You'll have to wait and watch as to how this plays out, and outlook, of course, we will ask the management. But for the moment, we've given this a neutral, given that it's a 3,500 crore market cap company, and they have relied massively on acquisitions, and therefore it's understandable as to why the debt is slightly on the elevated side. But we'll be cautious here. We've given this a neutral. Cash flow, Varsha.
Yes, moving on to cash flow from cash flow statement, if you see operating cash flow in 23, it was 5 crore to 134 crore. Now, one of the reasons is because of the lower cash, tied up in receivables. So that's a good thing when it comes to cash flow, and that's one of the reasons why we have given, thumbs up. CFO to PAT, if you see good numbers when it comes to FY25 at 216%. So overall, yes, considering the pressure that the company has gone through, cash flow statement is a good one.
Okay, return ratios, they were elevated above the 20% number, but they've fallen off, and we kind of explained as to why that is so when we discussed the income statement. Largely this is linked to the income statement. The potential is there to do a 20% ROCE. That is what we are really looking for when we're giving this a neutral, but otherwise a 12 to 13% is what it's clocked over the last couple of years. I'd want to see when this quickly turns around, and that will be linked to profitability as well as pay down of certain amount of debt. So keep your eye out on both of those metrics. Shareholding pattern, Varsha.
Yes, so overall, the one good thing about shareholding pattern is the 66% that the promoter is holding. So good skin in the game. Even FIIs, if you see, they've not decreased their holdings. Again, a good thing. Same goes with DIIs. Even DIIs have increased their holding as of June 25. So overall, a thumbs up when it comes to shareholding pattern.
Also, DSP Small Cap Fund is one of the big investors here. They hold 3.5% stake in this company. So you want to keep your eye out on that one. So that's the other piece regarding shareholding you should know. Street Cred, it's done very well over the last month. Over the last 6 months, it's been a doubler. But the last 4 years or 4.5 odd years since listing, it's not given an outstanding return. So we've been cautious here as well. The short term, it's done very, very well. The longer term, it's been a bit of a drag, and that's understandable given the kind of numbers that have played out. And therefore, we've given this a neutral. Let me also try and cover outlook. Now, in terms of the outlook, I'll quickly try and highlight what the goals were for FY26. Growth guidance was high teens. EBITDA target was around 14 to 15%. PAT margin was around 6 to 7% as per guidance. The PAT aspiration is to get to 100 crore in the medium term. The likelihood of that, in case of an 18% top line growth on a 6.5 odd % PAT margin, will be that by FY27 or mid of FY28, you'll have an annualized PAT of 100 crore. Now, in terms, but that changes with Omeras as an acquisition. Order book levers, well, there is traction, both pharma, chemical. There's a ramp up in oil and gas as well. And so some of those are what's aiding the numbers. Of course, there are risks both on the macro front as well as on the raw material front, which HLE Glasscoat is not able to fully pass on to its customers in terms of price hikes. But talk to us about valuations, Varsha. How do those stack up?
Valuation, comparing it with peers, you have GMM Pfaudler. So on a TTM basis, pretty much same valuation that the company has. Now, these are on the premium side because of the lower EPS that you are seeing. So, on the neutral side, we'll give when it comes to overall valuation, considering GMM Pfaudler.
Okay, let's therefore stack up all of the ratings. That's how it stacks up. No real thumbs down here. That's the one thing that stands out. But it's been a phenomenal run for the stock. What's the potential here? Like 5 out of 8 on the KYC final rating. Let's go across. We have the whole-time director of HLE Glasscoat, Harsh Patel, joining us. Also, Alap Patel joining us, who's the ED at HLE Glasscoat. Hello, gentlemen. Welcome. I'm Harsh. With me is Varsha. Want to first start off by understanding, Harsh, from you first, to try and get a sense as to what does the Omeras transaction bring to you in terms of top line and in terms of PAT margin for the full year FY26. Is it going to be a loss-making entity for you where FY26 is concerned? So will it drag your numbers?
Hi, thank you, Harsh, for having me here. Omeras, basically, we acquired the assets of Omeras. The company was not acquired. And with the, also I just heard your segment. I would like to maybe give my bid. Somebody said on the show that we acquired the company for some 200 crore. the company was not acquired for 200 odd crore. It was acquired for about 2.75 million euros, which is roughly 28 crore at the most. So for us, Omeras is a very, very good acquisition from a valuation point of view. Omeras basically had a top line of about 20 million euros, which is around 200 crore last year. And it had actually turned profit last year. Omeras was on a self-governed bankruptcy, so it's not the bankruptcy in the true sense. So the way it works in Germany is that even if you run out of cash for 1 year, you have to declare bankruptcy. So from the point of view of valuation and from the point of view of top line, we feel this is a very, very good acquisition for us, especially also because it is in the same technology segment that we are present. Omeras will not be a loss-making entity for us in this year. Maybe it will turn only a very small profit. But in 3 or 4 quarters from now, we expect Omeras also to be on a double-digit EBITDA margin business.
I stand corrected, Harsh. That's my error. So yes, Omeras was a 28 crore acquisition. Now let me talk about the funding of the transaction. Are you going to fund it largely through internal accruals? Shouldn't be a big challenge, right?
Yeah, that is correct. We have a very strong balance sheet and we have enough internal accruals to fund Omeras. And we are not looking to raise debt for this acquisition.
Does the total growth in terms of your FY26 numbers look like, both on and Alap, let me come to you with regard to this one, both on the top line as well as on the PAT margin. What's the revised guidance for FY26?
Yeah, so first of all, thanks for having me. When you say revised guidelines, I'm assuming it is on account of acquisition of Omeras.
That is correct. That is correct.
So for FY26, we feel Omeras will get us an additional, let's say about 100 crores worth of top line. And like Harsh said, we will have, a very modest profit in the Omeras business for this financial year. But from next financial year onwards, which is about 3 or 4 quarters from now, we are aspiring to have a double-digit EBITDA there as well.
Right. Thank you for that. Hi gentlemen, Varsha this side. Pleasure to have you on NDTV Profit. Harsh, my question would be to you, because company is also exploring, possibilities of expanding business when it comes to aerospace and defense. Have you seen any kind of orders or what's the on-ground talks? Have you, done something there? Have you received any order?
Yes, hi Varsha. Yes, we have been working on certain projects on defense. We have made headways on some defense projects. Unfortunately, I may not be able to divulge much details, but yes, we have taken some initial steps in the defense. Of course, everybody knows that 2 years ago, we delivered some diving vessels for the Navy, which were then installed in the Nistara vessels, which were then launched from Visakhapatnam. So that is already done. We are continuing to service such more inquiries, but we have also made headways in the army, in the vehicle segment. So you will see some action in future. Right now, I have not much to say there.
Understood. And also, Alap, coming to you, if you could give us sense on how chemical and pharma sector, especially chemical sector, is evolving, because we know that currently the industry is under pressure. But talking to your clients, are you getting a sense that is there a growth, volume growth, or has pricing pressure settled? Anything on ground reality that you're getting?
Yeah. So as you very rightly said, the chemical sector was struggling to a large extent for the last 6 or 8 quarters. What we are seeing now is that a lot of projects which were on hold for many quarters at a stretch, they are now all coming through. We have finalized quite a bit of these orders which were not moving at all. What we are also seeing is a revival in demand, in the sense that our reliance on a few large inquiries or projects has gone down. So maybe even in months where we don't have any large or very large project orders in the pipeline, we are still meeting or exceeding our revenue booking targets, as is evident from our order book. To that extent, we are seeing let's say a revival of demand in the chemical sector as well. And as you know, pharma is doing quite well. Pharma is kind of the growth driver for us at the moment, both a demand and a growth driver for us at the moment.
What is the kind of strength in that recovery? Are you seeing extremely strong demand, or are you expecting that? Is that what your customers are telling you? What's the expectation like?
So I think we are definitely seeing an uptick in the demand and the sentiment both. I would still not call it an extremely strong demand.
And what about filtration and drying? That business was expected to do well or pick up well in FY26. Are you seeing green shoots there, Alap?
Yes, absolutely. Absolutely.
Okay, and is that on course? Is that in line with what you were penciling in when you gave that guidance at the end of Q4 FY26?
Yes, it is very much Yes, it is very much in line with our expectations.
Understood. So, Harsh, you would have penciled in around maybe 16 to 20% kind of growth for FY26 in your existing business. Now that you've acquired Omeras, how much does Omeras contribute to the existing business in terms of opportunity? You get to cross-sell to maybe some of Omeras' clients. How does that add to your top line? And over and above that, of course, you're expecting 100 crore kind of a top line coming in from Omeras as well. So, or Omeras' assets as well. How does that work out? Give us that perspective.
Right. So, Omeras is broadly operating in, say, two segments. One segment is the architectural facade segment, where there is no real cross-selling or possible. But Omeras also caters to the storage segment. So Omeras manufactures large glass-lined tanks, which actually currently we cannot manufacture. It's a different size of tanks that they manufacture. And a lot of our Indian customers, for example, all the customers that you had listed in the pharma and the agrochemical space, they buy such tanks. Currently, so there are two things. One is currently this demand is serviced by a different kind of tanks, which the tanks that Omeras makes, the glass fused tanks that Omeras can serve, give a better result with. And it can also create more markets where it was not there. So yes, there is cross-selling possible from Omeras to our existing customers.
Right. So if I were to just try and extrapolate the numbers, 1300 crore would be the rough top line for FY26. FY27 would be closer to 1500 crore. Would those assumptions be right? And would you still continue to be constructive with regard to margin? Just yes or no, Alap. Would a 15% margin be reasonable on that kind of top line number?
Yeah, those kind of numbers would definitely be a good target for us to have, and not unrealistic.
Perfect. Thank you so much, both of you gentlemen, for joining us. We'll let you go on that note. And viewers, that's all the time we have on KYC today. From Varsha, myself, and everyone who puts the show together, thanks so much for watching. Stay with us here on NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Decent day of trade for the markets. Nifty holds up above 25,100. Sensex jumps over 250 points as well. Most sectors trade in the green. Defense and realty lead gains. Meanwhile, a group of ministers meet, proposes exemption of health and life insurance premium from GST. Insurance stocks edge higher after the announcement. Day 2 is going to be deliberating on correcting GST rate rationalization. And it's clean science that has hit a 52-week low after broker to block deals sold twice the equity on offer. Sources in fact tell NDTV Profit that the broker is going to be compensating for extra shares sold. Jupiter Wagon surges over 10% after arm bags in over 200 crore rupees order for supply of over 5,000 wagons for Vande Bharat train. And SEBI chairperson proposes a pilot project for pre-IPO trading with disclosures, streamlined fundraising and to explore new asset classes.
With a booming IPO market, investors are eagerly anticipating what is next. Yet, pre-listing information is often not enough for investors to take an investment decision. Can we think of an initiative on a pilot basis for a regulated venue where pre-IPO companies can choose to trade subject to certain disclosures? Here are some key challenges. Which are the unnecessary processes and pain points that cause avoidable friction in fundraising, disclosures, and investor onboarding, and how they can be removed? Which emerging areas, products, and asset classes can be developed for creating both demand and supply of capital?
Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets. In fact, holding up quite well, whether you look at a Nifty or a Sensex at this point in time. So Nifty is holding up above those 25,100 levels, as you can see, just about holding up above those levels. And Sensex is the one that's jumped up about 200 points at this point in time. Let's also quickly take a look at the sectoral picture as well, tilted in the favor of green, of course. So you have defense, realty, pharma, oil and gas, as well as IT leading some of your gains. So those are some of your top gainers. In terms of sectors, on the flip side, there's FMCG, media, as well as auto and consumption that are lagging behind. And from within the Nifty 50 pack, there's a Dr. Reddy's, Cipla, L&T, Reliance Industries as well. Bajaj Finserv and Hindalco holding on to a tinge of green at this point in time, up anywhere between 0.5% to about 1.5%. Those are some of your top gainers from within the Nifty 50 pack as well. And when you take a look at the losers as well, you have Tata Consumer, Coal India, Jio Financial Services, as well as IndusInd Bank as some of your top losers from within that entire pack. So that's largely the kind of picture that you see shaping up at this point in time. But tell you what, let's also get in some commentary coming in as far as the markets are concerned. What kind of approach should you be taking? And in terms of the approach, there's of course Samit Vartak, who's talked about how this is not the time to have a top-down approach. In fact, he's also bullish on select defense companies. Let's also go across and listen into what he then had to say.
India is sort of bombarded with so many of these worries, and we have underperformed. I mean, last 1 year we underperformed some 26% compared to the emerging market. I mean, so that's always a good good time to find opportunities. And I think there is no dearth of opportunities. Maybe some concern about valuations, but if you're looking for great businesses, high growth businesses, I think there are plenty available. So, that always keeps you excited. If you start looking at top down, it's very difficult to find, broad opportunities across all these sectors. I think that time is over. If you see the last, 4 years or 4 or 5 years post COVID, there has been indiscriminate rally across many sectors. Last year or so has been very different, where there are only few pockets which are doing well. So I think this is a time for, anyways, I am a bottoms up stock picker. Very difficult to find sectors, but there are opportunities in data centers, there are opportunities in battery storage, there are opportunities in smaller defense companies which are emerging.
All right, then it's a good time to be betting on some select small defense companies. Then that's the word coming in from Samit Vartak as well. But tell you what, let's move on. Let's take a look at BSE as well, because that's the stock that BSE Limited that is down about 4% in trade at this point in time. So that's one that you're looking at. And other than that, of course, there's Clean Science and Tech that we should be taking a look at, because the shares, of course, are under pressure at this point in time. The broker made an error in a block deal. There you have it. That's the stock for you, under pressure slightly at this point in time. But the broker, that is Avendus Spark, is the one that accidentally sold double the amount of intended shares. Promoters, in fact, are planning to sell about 24% equity. And around 25.5 million shares were supposed to be sold, but 60 million shares were sold. And so far on both exchanges, around 90 million shares have been traded. Broker will be compensating for those extra number of shares, and that's the important announcement. Of course, you do have the shares that were offered at about 1,030 rupees a piece, of course, and this was approximately 13% of a discount to Wednesday's closing price when it comes to Clean Science and Tech. Promoters held 74.97% as of June, so that's important updates coming in as far as Clean Science and Tech is concerned. But let's move on. Let's take a look at Jupiter Wagons on the flip side, because that particular counter is in focus after that order win. 215 crore order win is the one that you're talking about. There on your screens, you have the stock that is up 10% on the back of that order win for Vande Bharat trains. Let's go across and listen in to what the management then had to say.
supplies from the government also from the railways on the wheels has improved. We are now looking forward to the new round of wagon orders from the railways, which we are expecting before end of this year. I think on the private side, our order books are very healthy. We recently got an order of close to about 300 crores from GATX. We expect further strong order book on the private side, and execution there is also very strong. So going forward, now since the wheel set discussions have sorted out, we expect our revenue numbers to be strong going forward. And as and when the orders from Indian Railway comes in, we are all set to ramp up our production. Because overall supply chains now, we have put in a lot of investments over the last 2 years. On the wheat project, we are investing close to about 2,500 crores. So, all the bottlenecks which we have, now we are trying to ensure that those will not remain in future.
All right, and that's Jupiter Wagons talking about their roadmap for growth. That stock is up and away in trade, 10% uptick coming in for Jupiter Wagons. But let's also take a look at Zydus Wellness, because they've talked about urban demand. In fact, the management is quite bullish when it comes to the pickup in urban demand, and they expect this sort of segment to pick up. That's the word coming in fact, from Tarun Arora, who's the CEO and director of the company. Let's go across and listen in.
Last 4-5 quarters, we've seen rural improve bit by bit, and with this actually extraordinary rains this year, it should only get better. So unless some crops are impacted, but overall, I think it's good news for rural. Overall, things should get better. Government is also very committed to supporting rural income, so it will only get better. The good thing is the urban, which has been under pressure and been taken for granted at many times. So several of these actions which have happened should also aid urban consumption. Urban economy was under a lot more pressure because it is the largest part of the organized consumption that happens. And I mean, for years I've seen 30% of consumers contributing to 70% of the packaged products, as reported by likes of Nielsen and other formats. So clearly that is a piece which has been under pressure. That's going through a lot of churn because of consumer behavior shifts, channel shifts, and several other challenges of inflation going up. And this is something which should directly get aided by some of these actions.
All right, and that's the word coming in from the management of Zydus Wellness when it comes to what they expect demand to do. But let's move on. Let's get you some important commentary coming in. Then SEBI chairperson says that they're looking into the derivatives contract duration. Let's go across and listen in to what Tuhin Kantapande had to say.
See, improving the tenure really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations. So and we'll have a consultation. Yes. Nothing will be on, this part of the.
All right, and that's the word coming in as far as weekly expiries are concerned. But tell you what, let's get you the entire list of stocks that you should be keeping on your radar at this point in time. Of course, let's take a look at Sarma, SGS, as well as Railtel. In fact, Vansh is standing by with that update. Vansh.
Well, yes, so let me start off with Sirma. Now, JP Morgan has come up with a note on this particular counter, and in fact, they have maintained overweight and they have hiked the target price to 950 rupees from 800 rupees. Now, if I talk about the details, the brokerage has factored in the QIP that the company has recently entered, and the proceeds, and the brokerage has said that the proceeds will be used for the mergers and acquisitions, and they don't think the mobile segment would be an area for the specifically mergers and acquisitions, given the low margins for that particular segment. They also believe that the last major merger was margin accretive, and they expect Sirma to be the third fastest growing company at a 30% revenue CAGR for the FY25 to FY28. Now the Sirma also approved 1,000 crore rupees QIP at 699 rupees per share on 12th of August. Now if I talk about some of the partnerships that the company has entered, on 24th of July the company has entered into a JV with Shinub Electronics. Now this was for the manufacturing of multi-layer printed circuit boards, which includes flexible printed circuit boards and similar products. Also, they entered into a manufactured dynamic laptops in under strategic partnership. So clearly this is what is looking for Syrma SGS. Now if I move on to RailTel, now the company has bagged orders worth rupees 50 odd crores, and the order is from the government of Odisha amounting to 15 crores, and the order is from the Kerala state for the operation and maintenance of state data centers amounting to 35 odd crores. Company also received orders worth rupees 235 crores on 5th of August. So a series of order win that is we are seeing for RailTel. So these are some of the stocks that are in focus today.
Those are some of the counters that are in focus. So there you have it. RailTel as well as Syrma SGS are the ones that you should be keeping on your radar. As you can see, the stocks are up anywhere between 1.5% to about 2.5%. But let's also take a look at Hexabiotech, because that is the particular counter where you have Nuvama that has initiated a buy on this particular counter. The target price that they've talked about is 950 rupees. In fact, they've also gone ahead and said that the company is in a sweet spot of growth and value, and revenue is in fact in a sweet spot to be outstripping the industry growth, and that's key commentary coming in from Nuvama, who have initiated a buy on Hexaware Technologies. They're also talking about the multi-pronged vertical presence as well as coveted clientele. So that's also key commentary coming in there. And in terms of the margins, they're talking about how the margins are stable. Cash flow profile as well is something that they've highlighted when it comes to Hexabiotech as a key lever for growth. Other than that, they've also talked about how there's a recent correction that has also sweetened the appeal. So the stock is in a sweet spot and the revenue growth is going to be outpacing the industry, and that's key commentary coming in as far as Hexabiotech is concerned. But let's also talk to you about how you as a consumer will have to pay lesser premiums, or will it be remaining the same when it comes to insurance premiums, because there's key commentary that has been coming in on that particular front. So if you do get this benefit passed on to you, what will be the quantum? In fact, Harsh is standing by with that entire math.
Well, yes, so GST likely completely removed on insurance premiums you pay, and that what impact is that going to make? First off, let's look at the key news development. It's the fact that the group of ministers have proposed that there's going to be a complete GST exemption on health and life insurance for premiums paid by individuals. Earlier, this stood at 18%. So on 100 rupees of insurance, you would typically pay 118 rupees inclusive of GST. Now, that 18 rupees goes away, and therefore customers get a straight discount on the 118 rupees of 15%, which is 18 rupees of the 118 rupees that you pay. So now you pay only 100. How do other countries really look at this? And you'll quickly see all of those countries on your screen and how they typically tax insurance. This is of course not life insurance, but health and general insurance. So all of those countries which are taxing or levy indirect taxes of almost 5 to 21%, which is where an Argentina stands with regard to how insurance premiums are taxed. Now, let me tell you what the key contention here is with regard to India specifically. How do companies pay GST? The company pays GST on some services which they avail. Like, for example, commission payments that they make. For example, consultancy fees that they are charged by various consultants. That is offset by the GST you pay to the company on the premiums that they collect from you. So there is an offset in terms of the mechanism. This mechanism is called input tax credit. Given that now the companies won't be charging you GST, and therefore if the nil rated GST is passed on, then likely they will have to bear the GST which they pay to their consultants in the services that are provided to them, or the commission agents for the services that are provided to them. That will likely be passed on to the customer. So will you get the full 15% benefit? Maybe not. But we'll have to wait and watch as to how much. And of course, we spoke with IRDAI, and they suggested around 1.8 to 2% impact in terms of the premium. And therefore, there may be a 13% discount overall with regard to how premiums currently are charged to individuals versus what they will be post this amendment. That's broadly what could be the benefit which is passed on to customers.
All right, and that's the key takeaway coming in. Thank you so much, Harsh, for that entire analysis as far as what's going to happen with the insurance space. But let's also move on. Let's also get you a check going as far as Malaysian crude palm oil prices are concerned, because they have risen 16% since May 2025, driven by weak Indonesian production, rising demand as well, squeezing FMCG margins. Companies like HUL, Nestle and Britannia are the ones that are in focus. In fact, let's go across to Mahima to help us put all of this into perspective. Mahima, over to you.
Right, so Hiral, as you rightly mentioned, in 2024, palm oil did rise significantly, and post December 2024, there was a sharp fall as well of around 30% in palm oil prices. But since May, since its lows, it's still risen 16% from there. So that's a concerning factor for both FMCG companies as well as your snacking companies, your FMCG staples and snacking, of course. Now, overall, there's surge in demand, but in terms of the production in Indonesia, that is weak right now, and that is leading to lower inventory levels and leading to overall price hikes in palm oil. In terms of both the Malaysian as well as the Indonesian palm oil prices, there is a contrasting supply view, because Indonesian production is weak, but the inventory levels in Malaysia are right now improving. So that's something that one needs to keep an eye out for, because that will overall decide the prices in terms of how it will pan out going forward. In terms of the snacking industry, it almost constitutes 40 to 50% of their overall raw materials, because they use it to fry the snacks, and this could overall impact their margins going forward. Now, there are two ways in which they can probably help curb this: either do a price hike or maybe reduce the grammage, and we'll have to see as to what strategy something like a BKG Foods is adopting, because they've already taken around 2.5% price hikes in the past 2 odd quarters. So that's going to be a key question to ask the management as well.
All right, then that's palm oil for you. That's a very important update as far as palm oil then is concerned. Some of those trends that we've managed to understand, but also Brent and WTI are rising for a second straight session. So there's an update there. Oil prices extended gains bolstered by those signs of strong demand that you've seen coming in the US. Other than that, of course, there's uncertainty over efforts to end the war in Ukraine. That's also lending a little bit of support in terms of concerns. So you do have Brent as well as WTI both rising for a second straight session, and that's oil also for you. But let's move on. Let's talk about Bajaj Finserv, because you do have Jefferies, in fact, that has initiated a buy coming in on this particular counter. Let's take a look at the commentary coming in from them, because the target price is at 2,420 rupees. They're talking about how the company is poised to benefit from the tailwinds of lower rates. Other than that, they're also talking about how Bajaj Finserv is going to be benefiting from better profitability when it comes to life as well as general insurance segments. And in terms of their new ventures, they're also talking about how mutual fund, healthcare, as well as tech and ventures can be adding to the option value. Other than that, there's a limited impact that they also see from the exit of Alliance as well as the entry of Geo Financial, both key concerns. And Jefferies has in fact gone ahead and said that these are going to be having a limited impact when it comes to Bajaj Finserv. Other than that, they're also expecting a 22% CAGR in core earnings. So that's also very important commentary coming in as far as Bajaj Finserv then is concerned. But lots to look at this afternoon, Hiral.
Absolutely. Thank you, Shreyansi, for that. The big news that is coming in right now is where SEBI is now planning to raise the tenure and maturity for equity derivatives. And this is the commentary that is coming in from Chairperson Tuhin Kanta Pandey, where he spoke about this at the FICCI conference today. What he's indicated is that on weekly expiries, they're looking into the derivative contract durations. This will be a consultative process as well, and they're actually working towards deepening the cash markets from here on, and clearly indicated that there is a need to increase the tenure. On the back of which, if you see stocks like BSE, Angel One, Motilal Oswal, all of them are seeing some bit of pressure. CDSL as well, from the day's highest levels, has seen some bit of downtick pressure. Let's get in K. Suresh, from the president at ANMI. Mr. Suresh, welcome to the show and a pleasure to speak to you at NDTV Profit. My first question coming to you is, good morning. An important comment coming in from SEBI Chair Tuhin Kanta Pandey, clearly indicating that they are looking into the derivative contract duration and working towards deepening the cash market. Your initial comments on the same?
Actually, see, our view, that is ANMI view, is that we already met twice SEBI chairman also.
Okay.
In the due course of consultation, we told very clearly that whatever weekly expiry already we are having should continue. There's no doubt about it, because that already has given some stability to the market, and all other measures have been taken by SEBI also to prevent what kind of speculation, what they are visualizing. Already steps taken by increasing the size, everything. And only thing is, what we suggested is, you bring in some entry barriers for the people to play in F&O. That's what we suggested. See, once you have a well-informed investor in F&O, then the question of losing money, all these things will go to the back seat. That's what we advocated. In fact, we suggested that we should have more and more weekly contracts, particularly Bank Nifty. We would like to bring it back. On the background of that, when you are going to dilute the Bank Nifty constitution, which already it is in the offing, so it is nothing wrong in bringing back the weekly expiry for the Bank Nifty also. See, now already one exchange, one expiry, everything has been brought in. So only one more thing we said, that, see, we have to understand the functioning of the market. This weekly expiry is essential for many of the players for hedging purposes. It is essential. So in the absence of that, what will happen? It will lead to some confusion, everything, and people will not come to the market. Whatever they want to do, deepening the cash market also will not happen. You know very well, cash market depends upon the F&O. In fact, we suggested you bring more stocks into F&O so that the cash market deepening will happen. So our concept is that F&O deepening is essential for deepening the cash market.
Right.
You can't individually deepening the cash market.
So, Mr. Suresh, my question is, see, SEBI's main goal has been to shift the market from a focus on short-term speculation to a more stable environment. That is what they are alluding to, right? Now, to take all of this into consideration, this is a proposal to extend the tenure and maturity of equity derivatives as a response to something like this. How do you think will the impact be specifically with stock exchanges? Because if you see the stock price of BSE, that is under pressure. The revenue loss that could be coming in for a NSE, BSE, is that also taken into consideration?
That's why, see, please understand that when we had a discussion, he mentioned very clearly that any measure should not disrupt the market. Market should have stability. So this type of measures definitely needs for consultation. Definitely we will also express our views that no need to give away the weekly expiry, at least for the present, whatever things we are continuing. Nifty index we are continuing. Similarly for the Sensex we are continuing. The same can be continued. There is no issue on that. Only what we are advocating is that you bring in an informed investor into the market. Instead of having everybody in the market, then what will happen? This speculation misuse will come down drastically. Otherwise, people will come and do some speculation, then it will have a bad image on the entire ecosystem itself. So our idea is that you please bring some barriers, entry barriers for the investor, so that the person who rather plays in F&O will have some sufficient knowledge to play, which will also prevent him from losing the money also.
But clearly, if you have to look at an exchange and intermediary perspective, if you have to look at a CDSL, BSE, NSE, the brokers, intermediaries probably have a significant revenue dependence when it comes to high volumes, short-term derivative trading. So any moves that do come in to curb this activity will have a negative impact on their revenues. Taking that aspect into consideration, any potential downtick that you have in terms of how much the impact could be?
See, exchanges and all are on our side only with regard to this issue. Everybody wants to continue the weekly expiry. Everybody wants to have some entry barrier. All these things, we are all in line with the same views only. There's no different views on that. This type of measures, if at all comes, let us assume, if at all comes, then definitely it will have some dent on the volumes, etc. of the exchanges. There's no doubt about it. So it is not advisable or preferable to have such ideas. That's what our view, madam.
Okay. And apart from this, because this is a consultation paper, you have been having discussions with SEBI as well. What are the recommendations that you've given? You already mentioned few of them. And any timelines that you have which SEBI has given to ANMI, saying that this is what it will take to really put something like this into perspective?
No. Recently only we have given some ideas to deepen the cash market. Okay. With some, we ourselves have seen the movement of F&O. If you include some F&O stocks, some stocks in F&O, automatically the cash market deepens heavily. So that type of what is called corroboration is there within these two. So that's why we suggested you bring in more and more stocks into the F&O. That will help the stock market, so that cash market, once cash market is positive, naturally people will move towards the cash market instead of the F&O market. See, we have to go like that only. Similarly, we have told that this securities lending and borrowing also, please tweak the rules, which are all very tight now as of today. Bring in more stocks into that for the purpose of availing that. So all these things, will finally lead to what? Cash market only. It won't, help to do the speculation. So we already suggested some measures to improve the cash market, not the F&O market at all. See, F&O market is nothing but what's called the offshoot of the cash market only. That's why we always prefer cash market should be deepened. People should be advised to go towards equity. So that will happen provided the cash market is very lucrative, If it is not lucrative, then who will go to the cash market? So that's what our views, madam, actually.
Okay. And Mr. Suresh, the other question I have is, here you're talking about a lot of, middle class where you're trying to restrict the kind of risks and losses that they take. And this is coming in at the cost of your brokers, your exchanges losing money in the form of revenues, and the tax that goes to the government as well. So is that something which the government is okay with in terms of the conversations that you've had?
No, madam. See, for example, earlier we had some small size in F&O. Then we increased the size. What happened to volume? Whether it has come down? It's going up only. Similarly, when you bring an entry barrier, volume will not drive, madam. I am telling you very frankly. Volume will also go up only because more and more investors will join this thing by having some knowledge only. See, without knowledge, nobody will come now. Now everybody is coming. So with knowledge, definitely more people will be there. So that type of feeling or fear that there will be a dent in revenue, this will not happen at all. Initially, we had when size is 2,50,000, when it is raised to 5 lakhs, we had same situation. We feared at that time also volume will come down. It has gone up like anything compared to at that point of time. So that's why it is what is called a process in which definitely, volumes will not go down, madam. This will not go down, actually.
So you're saying volumes will not go down, but categorically...
That much won't go down, madam. It won't go down. Because, see, whatever entry barriers I'm going to tell is for the benefit of investors. So investors will take it in a right sense. And they will also do it and come and invest through F&O or equity. They will come there. Definitely they will be there in F&O market.
Okay.
The F&O market, everybody will be there.
So any timelines that you have in terms of your conversations with SEBI as to by when they are expecting to come out with some concrete moves, because this is still a consultation paper?
It's a long-term process. So we already given them some ideas. Definitely SEBI is also a very positive way only. They are always looking into what is better for the market. Okay. So that way, definitely SEBI will look into it. And I hope another 6 months, within maximum 6 months, all these reforms will happen, I am feeling. Maximum.
So around 6 months is what you should be watching out for. Thank you, Mr. Suresh.
Maximum I'm giving the outline of.
So maximum 6 months is what you should be watching out for. But thank you so much for joining us on the show. In fact, on the back of the tweak that could be happening with regards to where F&O expiry tenure goes, stocks like BSE, Angel One, CDSL, let's pull up our NSDL as well. All of them have been trading under pressure. And MOSL, JM Financial, you look at any of the broking firms, the cuts have deepened right now. These stocks are at the day's lowest levels. And as AMNI chairperson was indicating as well, this is something, where it has been done in consultation, but a few ideas that have been given as to how the cash market volumes can be increased as well. It's anyone's guess, because initial commentary that I heard from analysts as well was that around 30 to 40% is the kind of revenue hit that BSE, NSE could also see as exchanges on the back of this. Again, it's anyone's guess from here on, Shreyansi.
You can see that crack coming in as far as Angel One is concerned, 6% downtick coming in on that particular counter. Some of those other counters as well down, but let's also revisit that commentary coming in from SEBI chairperson who's saying that they're looking into the derivatives contract durations. In fact, let's listen into the exact word coming in from Tuhin Kantapande.
See, improving the tenure is really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So
and
we'll have a consultation.
Yes. Nothing will be on, on this part of the moment.
All right, then with that, we're completely timed out on this edition of Markets at 12. Thank you so much for tuning in.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. This is Hiral Daria. Let's quickly take a look at what markets are doing at this hour. Interesting moves in terms of today's session, because if you see from the day's highest levels, you have cooled off slightly, but 25,100 is something that has been maintained as well so far. Let's quickly look at Bank Nifty on the screens as well, and then we'll look at the sectoral heat map. Which are the winners, which are the losers? Bank Nifty has also corrected from the day's highest levels, now seeing gains of around 0.2%, but the positive mood does continue. What's interesting to see is media has been the sector which is seeing profit booking. This is the second consecutive session where you're seeing a downtick there. Apart from that, consumption has been weak today as well. Defense has been down. Auto also trading under pressure. What's gaining is real estate, pharma and healthcare is up in trade. Oil and gas also seeing some strong moves in today's session. So pretty mixed reaction in terms of various sectors. Let's quickly look at the heat map in terms of Nifty 50 contributors as well as on Nifty 50. There you go. This is also fine. Your Geo Financial Services trading under pressure. Coal India under pressure. NTPC under pressure as well. Bajaj Auto losing out in trade. Cipla is seeing some smart moves. Bajaj Finance and Finserv are seeing some good moves. RIL and a BEL. These are a few of the names that you should be watching out for. Let's look at the broader markets as well. If you have the mid cap and the small cap index, let's see if the trend is being mirrored. There you go. Literally, your mid cap 150 has now gone into the negative from the day's highest levels, and similar would be the trend with small cap 250 as well. There you go, not in the red, but marginal gains of 0.3% coming in on this front. So that's with regards to where markets are concerned so far. But let's also get in Prashant Apse, Senior VP Research Analyst at Mehta Equities. Prashant, good afternoon and welcome to the show, and a pleasure to speak to you as always on NDTV Profit. You know, before we get into any other conversation, one thing that we need to discuss right now is the commentary that has come in from SEBI Chair Tuhin Kanta Pandey, who's saying that there is a plan to raise the tenure and maturity for equity derivatives, and it will be a consultative paper, and they're working towards deepening the cash markets as well. In fact, we did speak to ANMI president, who's clearly indicated that they have been in consultation with SEBI. They have had various meetings, and the idea is to then probably look at increasing cash volumes as well. Things have been done for the benefit of the retail investors, but categorically, this seems to be negative when you talk about exchanges or your depositories or even your brokers. How would you look at this move, and what would you advise investors to do with any of these stocks?
As a market participant, I think the SEBI move is very positive for the overall market setup. See, whenever we have seen SEBI coming out with some lot of changes or regulations, which is trying to keep the markets very healthy. So immediately, obviously, the sentimental impact on the top 10 brokers or the market participants like BSC, NSC, as well as CDSL or NSDL, they will be seeing some kind of sentimental impact. But again, I think volumes will continue to rise going forward because the volatility is going on in the markets, and as well as the regulator is controlling all the negative things which is happening. We have seen how SEBI has said the report of 90% people are making losses in future. So obviously the focus and the regulations are going towards the cash market. So overall, again, very positive on the markets. But yes, sentimentally, these top 10 brokers or the other players will see some kind of pressure in the revenue as well as in the profitability.
Okay, so we'll see a hit in terms of revenue as well as profitability as well. But do you think that should be used as an opportunity to buy any of these stocks in the correction that you're seeing right now? Because positive on markets, but a near-term headwind that you're looking at.
Obviously, yes, such corrections can be opportunity for Indian markets because we cannot buy Sensex or Nifty directly. So better to have the proxy players like BSC, Angel One or Motilal Oswal to buy those and have a proxy portfolio stock for long term.
Absolutely. So these are names you should be watching out for. Moving on, another stock that is buzzing in trade today is a Coffee Day Enterprise. The stock is up more than 15%. Mahima joins us with the details. Mahima, what's brewing? Because last couple of trading sessions, we did see some commentary with regards to change in management. And since then, the stock is on a tear.
Right, so Hiral, I mean, it touched an intraday high of almost 19% today. 5 days, the stock is up 23%, and the past 6 months, the stock is zoomed and how 118% returns it is given. Now, in terms of the recent triggers for the stock, yes, one being change in management, but not a very significant one. But earnings is probably the trigger as to why the stock is zooming in trade. In terms of the change in management, the whole-time director, that is Malvika Hegde, has been reappointed for the next 5 years. And in terms of where the earnings stand, overall revenue growth stood at around 3%, EBITDA growth at 77%, and it incurred a profit this quarter at 28 crores versus that of loss of 11 crores. Now, basically, the uptick in EBITDA and profits is on the back of one-offs. There was an 18 crore loan settlement. A gain from that 18 crore is reflected in the PNL, and there is also a gain in terms of 16 crores, which is from the proceeds that have been invoked from the company, that is CDGL shares that has happened. So both of these have led to the kind of profits and EBITDA uptick that we have seen. But in terms of segmental performance, the coffee revenues saw an uptick of around 6%, but hospitality revenues have halved as compared to where it stood last year. But there are also certain triggers that have aided the kind of stock performance that we've seen in the past 6 months. One of them being Dolly Khanna has acquired around 0.55% stake in June. In terms of the debt that the company had, the company did announce resettlement of that debt at around 205 crores. So that was a big positive trigger because the company was on the verge of bankruptcy, and in Feb as well, the NCLT did set aside an order that initiated insolvency proceedings against Coffee Day, and that was also a positive trigger for the stock to see the kind of uptick that it's seen in the past 6 odd months. So this is the overall view as to what's happened and why the stock is zooming in trade today.
Thank you so much, Mahima, for that. Prashant, any view with the Coffee Day? I know this has been a stock now which is not very well tracked, with a couple of developments which are happening right now. What would you advise investors to do?
So again, it's a very high risky, high return category stock. But again, investors who want to take a very high risky on these kind of management changes, the way how Dolly Khanna is entering in the stock, the way how the earnings are changing. So only risky investors can take a bet, but not at these levels. Again, I think the stock should again come back to 35 or 38 levels. That can be a level where risky investors can invest. But overall, as an industry, coffee as industry, very, very positive on that. I think going forward, the volumes will be growing more on the coffee side.
Okay, so that's with regards to Coffee Day Enterprise. But moving on, the auto pack has been in focus. You know, what's interesting to see is Ola, which actually saw some strong moves over the last couple of trading sessions, is actually taking a beating in trade today. A lot of large trades that have happened in terms of Ola, but no major buyer names that have come up as well. So I think it's multiple arbitrage funds that have looked at Ola in the last trading sessions. Today seeing profit booking to the tune of around 5 to 6%. But let's get in Puneet to tell us, is this the Vahan data which has actually put Ola under pressure today? So the party seems to be over. And you have Ather, which has emerged as number 2 now.
Well, definitely. I think that was one of the biggest surprises this month, Hiral, that Ather has now jumped actually to the number 2 spot with a 17% market share for electric two-wheeler space for the month of August. Now, of course, this data is from the 1st of August to the 21st of August, so we'll have to wait for the next 9 to 10 days of how this shapes up. But it's a huge jump for the company. This is the first time where the company has actually taken the number 2 spot within the top 5 space, so it's definitely a key positive. It's also interesting that TVS has continued to maintain its market share of around 24 to 25%, with Ather coming in the number 2 spot. For Ather specifically, they have been expanding in the non-South markets because 60 to 70% of the volumes come from South India itself. So over the last 12 to 14 months, they have started expanding northwards. So Maharashtra as well as Gujarat, along with Rajasthan, are now some of the key focus areas, and with expansion of stores in new cities, we can see that growth of the Rista maker in these cities as well. So that could have led to one of the key positives in this aspect. The other interesting one was Bajaj Auto actually slipping from the number 2 position, where last month it held almost 20% market share, to the number 5 position now at just 12% market share. So essentially that does mean that we could see some revival of Bajaj in the next few days, because Ganpati will be starting from the 27th, and Bajaj has a key stronghold in the Maharashtrian space. So we could see some positive move for Bajaj over the last 10 odd days. So that'll be something to watch out for. But huge gains for Ather. On the other side, Ola Electric continues to maintain their market share at 16%, and they're the number 3rd in terms of positioning. But we could see the first month where Ola slips essentially from number 3 to number 4 because of the gains that Ather has made. So it's going to be a tight battle for the number 3 spot between Ather as well as Ola. Of course, on the contingent that Bajaj Auto comes back. But it's shaping up to be a very interesting trend for FY26 in terms of the electric two-wheeler space.
Thank you so much for all of that, Puneet. Prashant, how are you looking at the EV space specifically? Because the kind of run-up that we saw in terms of Ola over the last couple of trading sessions, it seems that the party is over now. What would you advise investors to do, and what would your top picks be?
In the EV space, I think TVS Motor as well as Ather should be the stock one should focus more on, because I have seen both the vehicles. I have tried both the vehicles. I think Ather has that quality of product which will deliver for a buyer. But Ola, again, the quality of the vehicle is very much low. But again, with respect to pricing, Ola gets a very strong advantage with 50,000 to 1 lakh rupees. But again, Ather will have a 1 lakh plus kind of pricing strategy. Going forward, again, with respect to festivals coming in, I think both the stocks, Ather as well as Ola, as well as TVS, will continue to focus. But my focus would be more on the Ather as a investment opportunity for long term.
Okay, so TVS and Ather, those become two investment opportunities as well as Prashant has used both of the products. So I think there is conviction coming in there. But moving on, the US Department of Agriculture will no longer support solar and wind projects on productive farmland. Now, this is as the US president calls it a scam. In his latest Truth Social post, Trump calls renewable energy source inefficient and expensive and says that his administration will not approve wind or farmer destroying solar. But how will this impact Indian players? My colleague Varsha joins us with the details. Varsha, clearly, I mean, this is a very interesting commentary that's coming in from Trump. Now, whether Trump will be able to do something around this, or is it the states who will be able to respond to something like this, is what we need to wait and see. But there are companies who have exposure to the US markets when you talk about from India. How are you seeing the impact?
Yeah, so this is a strong statement that US has made, going against wind and solar power projects. Now, onto the even they have also said that projects funded by US will not use solar panels and cells of foreign companies. Now, coming to how this is going to impact Indian companies, one is Worry Energies, which may get impacted because almost 17 to 20% of revenue comes from US, and overall 90% of module is been exported to US. So this is one company which may get impacted when it comes to this news. The second company which may have minor impact, it's Premier Energies, though not much revenue is expected from US because they are mostly focused on domestic companies, but only mere 1% of revenue is coming from US. So Hiral, from both the companies, if I were to talk about your Worry Energies and Premier Energies, Worry will be the one which may have a strong hit, as 17 to 20% of revenue is coming from US.
Let's pull up both these counters, because what's interesting is Premier Energies. That stock is trading at the day's highest levels as we speak. Similarly, Worry Energies is also seeing a strong move in today's day of trade. Prashant, you heard Varsha take us through what has happened in terms of commentary from Donald Trump, but seems like no reaction. In fact, both these counters are seeing some strong moves today. What would you advise?
Very clear again. See, Vare has their own plant in US, so I think they will not get such kind of impact directly, because Trump said only products which will be manufactured in US will be used for all the solar projects which will be made in the US market. So Vare has an undue advantage where the plant is situated in US continent, so there will be advantage for that is the main reason why the stock is up by 3% again. But Premier Energy, obviously, yes, they don't have a lot of directly impacting of the export markets to the US. So overall, the news is not impacting Indian solar panel manufacturers. But yes, going forward, Trump may change his statement, and that can have some kind of drastic impact on both the stocks.
Okay, so interesting comment coming in from Prashant on this one. But let's that we have Varsha with us as well, Kaveri Seeds. Let's pull up that counter on the screens and see what that stock is doing in trade, because I did see some strong moves. It seems volumes are also pretty okay. 6.5% up move on a Kaveri Seeds. Varsha, what's happening? Why this up move?
So, this is basically the up move that you're seeing is based on volumes, and the other thing, if you see for Q1, they've given a good set of numbers, especially though revenue, there was an increase of only 7%, but a good uptick when it comes to margins. And now this is on the back of realization of, cotton seeds. Now, they've increased volumes of non-cotton hybrids, which has resulted in good realization, and that's one of the reasons why you're seeing that uptick in margins. Also, there was an increase of new products to volumes of cotton, which has also led to this Q1 numbers, and rice, maize and vegetable segment is expected to grow well in future as well. Company has delivered growth in hybrid rice revenue despite restrictions in hybrid rice sowing. So overall, good set of numbers that the company has given. This is one of the reason why the stock has given almost a good set of returns in year to date. The stock is up almost 33% when it comes to year to date. But today, it's all because of volume gain that you're seeing.
So good volumes coming in terms of Kaveri Seeds. Prashant, any view with regards to Kaveri?
Yes, rightly pointed, it is all because of the technicals. Again, it has just crossed 200 DMI as well as crossed 50 DMI. So there is a good volume seen, and obviously the numbers of the Q1 earnings were really better than almost all 4 quarters. So that is giving a lot of investors to pinch in into the stock and then take it forward for at least 1 quarter from the current level. So overall target can be anywhere between 1300 and 1320 for next 1 quarter.
So that's with regards to Kaveri Seeds. Moving on. Nazara Technologies, the pressure has continued, 8.5% downtick as we speak right now. Let's pull up a 5-day chart of Nazara Technologies and see what that stock is actually done, because yesterday also did see major cuts. In the last 1 week, 21% is the kind of cuts that we've seen in terms of Nazara Technologies. And the reason why we are seeing this is because the bill that has been passed with regards to online gaming, and when we spoke to the management of Nazara Technologies as well, the management clearly indicated that poker bazi, in which they have around 47% stake, that is what is at risk. They've purchased it for around 850-900 odd crores. So they would have to make provisioning for that entire 850-900 odd crores. So what they do with that business is anyone's guess right now. But let's quickly listen in, what the Minister of Information and Broadcasting, Ashwini Vaishnav, had to say on the same as well.
Well, a landmark bill has been passed in the Lok Sabha today, aiming to curb, very harmful practices from the online gaming sector. And to talk about it, joining us, Union IT and Railway Minister Ashwini Vaishnav. Thank you so much, sir, talking to NDTV Profit. I'd like to start by asking you that, this bill considered as a death knell for, online gaming sector. So is there a way to sort of make them also survive when it comes into force?
First of all, I would like to point out that this bill basically promotes 2 out of 3 sectors within the online gaming universe. Esports and online social gaming will be promoted, they will be encouraged, there will be schemes and programs to encourage that sector, which is very important part of the online gaming sector, right? These 2 segments. The discouragement is for only 1 segment out of the 3 segments, which is online money gaming. Online money gaming has been very clearly observed over the last few years that the impact on society is very significant. There are families which are losing their entire life's earnings. There are extreme cases where the people who have lost money, they commit suicides. And the significant psychological disorder which is happening because of this is very important. WHO has actually even classified it as a separate public health disease, ICD-11 they have called it. So that's a very significant thing for which society has to be protected. If you have to look at what is the interest of the entire society and what is the interest of a segment of the industry, then we have to weigh it, and the interest of society interest of the middle class families has to be paramount.
Interest of the society, paramount importance. Prashant, how would you advise investors to look at a Nazara Technologies versus a Delta Corp? I know Delta Corp is not much impacted right now, but Nazara is taking a beating. Do you think this is just a knee-jerk reaction over the next probably 2 sessions that we've seen? And
Yes.
probably this could be an opportunity to then buy.
I may not say it's an opportunity because I am still negative on the stock as well with respect to valuations. Very expensive even 2-3 days back, and still it's remaining very expensive even if it is down by 20-25%. I would like to be, see the stock around 900 to 800 levels. Then the valuation will be very much comfortable, and then obviously the second quarter they will see some kind of adjustment with respect to their investments in the Poki Bazaar investment. So I will wait and watch for 900 to 800 levels. Then I can think of taking a risky opportunity at those levels.
Okay, so that's with regards to Nazara Technologies. But moving on, Mines and Minerals Amendment Bill 2025, a couple of key changes that have come in over there and that could benefit few of the companies. Vansh is standing by to tell us more. Vansh, who's getting benefited and how?
Well, yes, so let me get into the details of the bill. Now, the bill will allow the adding minerals to the existing leases for these mining companies, and there will be no extra fee charged for critical minerals like lithium and gold. And now this bill will also remove the 50% sales cap for captive mines. Now, earlier the companies were forced to keep more than 50% of their production as stock, but now this restriction has been removed. And following there will also be establishing a mineral exchange for this. So this will facilitate the mineral companies to regulate their prices. And also a development that has taken place is the National Mineral Exploration and Development Trust. The scope of it has expanded to National Mineral Exploration and Development Trust. Now this will enable the scope for funding mineral exploration. And also the bill has increased the contribution rate from the mining leaseholders to the NMEDT from 2% to 3% of royalty. So this is some of the technical details from the bill. Now if I talk about the impact, now this is considered positive for stocks like GMDC, NMDC and Coal India. Now if I get into detail, this will unlock new revenue streams for these particular counters, as if the companies discover critical minerals like gold, lithium or graphite in their existing mining areas, these companies can easily extract these minerals without attracting any additional fees. So this may lead to increase in the revenue and profitability. So this is what the overall development is looking like for these particular counters.
So much for that, Vansh. Prashant, a quick one. GMDC is seeing gains of 2.5%. NMDC did open higher but is seeing pressure. Do you think this could be a major positive for these names, and does it mean a negative for a company like Coal India?
But I think the sentimental impact would be very much positive for NMDC and GMDC. I think with respect to technical factors, again, still there is a good space for these companies to go higher on the back of this news. But again, it will be sentimental impact. So we need to wait and watch how this will really impact their financials going forward.
Okay, so interesting moves and a recommendation coming in with regards to Coal India as well. But Prashant, stay with us. We'll quickly slip into a short break. But as we do that, speaking at the sideline for FICCI's annual summit, SEBI chairperson says that the regulator is looking into the derivatives contract durations and also proposes a pilot project for pre-IPO trading, which is absolutely a hot topic right now. Let's quickly listen in.
See, improving the tenure is really means that, whether we can sort of have longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So
and
we'll have a consultation paper
yes,
coming?
yes. Nothing will be on, on this part of the moment.
With a booming IPO market, investors are eagerly anticipating what is next. Yet, pre-listing information is often not enough for investors to take an investment decision. Can we think of an initiative on a pilot basis for a regulated venue where pre-IPO companies can choose to trade subject to certain disclosures? Here are some key challenges. Which are the unnecessary processes and pain points that cause avoidable friction in fundraising, disclosures, and investor onboarding, and how they can be removed? Which emerging areas, products, and asset classes can be developed for creating both demand and supply of capital?
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, thanks so much for joining in. You're watching Profit Buzzers on NDTV Profit. My name is Alex Matthew. On a few days, it rains, and then on other days it pours. And here I'm talking about the news flow today, and there's quite a lot to talk to you about and also to bring you up to speed with. We've had the reaction to the group of ministers meeting last evening that was discussing the GST proposals on insurance companies. You've had quite a few of those stocks reacting in trade. Then a short while back, you had the SEBI chairperson speak about the contemplation of longer contracts in the derivative space, and that had a bearing on quite a few capital market names, not least of which the BSE, which dropped as much as 5.4%, a few brokers as well losing ground. That's Motilal Oswal, but you also had Angel One that saw a precipitous fall in trade, down about 5.4% or so. The expectation is that if you move away from weekly contracts and into a longer term derivative contract, as is the case globally, then you will see a dramatic fall in the volumes, which is not necessarily a good deal for the exchanges or for any of the other brokers per se. But there's more to talk about, of course. And on this side of the break, I'm joined by Prashant Tapse, who's Senior Vice President, Research Analyst at Mehta Securities. And we've also got Osho Krishan, who's the Chief Manager, Technical and Derivatives Research at Angel One. Gentlemen, thanks so much for taking the time. And Osho, I'll come to you first. Quite a bit of action, news flow related. But let's also talk about the benchmark Nifty 50, which is holding on above that 25,000 mark. It has come off about 0.1% from the high point. Do you anticipate that there will be a little bit of consolidation? Do you think that these levels will hold at least for now? The 25,000 mark was a pretty harsh or heavy resistance, and we've gotten past that mark. What happens from here?
Very good afternoon, Alex. Firstly, thank you for inviting me at the show. Well, looking at the recent developments specifically in the past 4 trading sessions, there has been a drastic upsurge in the sentiments, and overall the technical setup has now turned bullish. But still, the derivative data still persists the same picture of oversold terrain, because still now the long-short ratios are hovering around the zone of 10% on the longer side from the FII. So I expect that there is more room for short covering in the coming period. But specifically for Nifty right now, 25,000, as you mentioned, which was acting as a very strong resistance, is now expected to provide some kind of cushioning to any kind of blips in the coming session. Well, on the higher end, I expect that 25,200, 250 will be acting as a resistance for the short-term perspective. So if there will be any kind of dips or any kind of profit booking towards the zone of 25,000, that should be auguring well for the buyers, while on the higher end, 25,200 to 250 should be seen as the booking zone or profit booking zone in the short-term period. And until we see a decisive surge beyond 250, till that time, better to be on the conservative front with kind of a bullish view on the overall sentiments. But we are witnessing some kind of sectoral rotation. Like yesterday, it was IT which was leading from the front. Today, it is healthcare that is giving a very strong momentum accompanied with reality. So I expect that sectoral rotation will keep on happening, and until Bank Nifty comes into the play, till that time one should remain conservative with kind of a strong risk management in whatever positions people are taking.
Yeah, I'll circle back on individual stocks and strategies that you would suggest, Osho. But the other story that really stood out, and not something that happens very often. In fact, I can't remember the last time a fat finger kind of an issue took place, but this has to do with clean science and tech. We spoke about this in the morning, where we told you that promoters were looking to sell stake, and the amount that was decided was about 24% stake. The price was determined at a discount of 13% to yesterday's closing price, and Avendus Spark was carrying out this trade. Now, what actually happened was that a much larger amount was punched in. 25.5 million shares were supposed to be sold, but 60 million shares were sold. Now, and after that, of course, additional share was also sold. So far on the exchanges, more than 90 million of shares have been transacted. So simply put, it seems that a larger order than anticipated was punched in. And from the clean sciences perspective, and they've actually clarified to NDTV Profit, they've said that from their perspective, shares were offered at 1,030. This was approximately that 13% discount to Wednesday's closing, and the promoters held about 75% stake. From their perspective, only 24% stake will be sold. And if there's anything else that has to be made up, that is on Avendus Spark to make up the difference and figure things out. So it's an unfortunate situation, something that has occurred. I think it's not very often that it takes place. In fact, I want to go to Prashant just to get a sense of when he heard something like this last and what his opinion is of what could potentially have happened. Prashant, any thoughts on this?
I don't remember such kind of error happening in the recent 5-10 years back, but I think this will be taken care by the exchanges as well as the SEBI, and they will be doing some kind of clear, no error effect for the stock as well as the investors' point of view. But again, it was a great deal. It was an opportunity for a new investors to get into such kind of fundamental strong company. But difficult to comment on the error, how it will be taken out.
Got it. All right. Okay, so that's a clean sciences story. Let's also talk about GAIL, and let's pull up the chart while we're speaking about it. The stock is down about 1/3%, having recovered from the low point of the day. It's actually a couple of triggers that are playing out for this stock, and let's talk about what that is. And we've got Somit joining in to talk about this. It has to do with the tariffs and their petrochemical business as well, which has been struggling for a little while. Somit, what's going on here?
Well, yes, GAIL will remain focused for the next couple of weeks, at least, given the fact that there are two triggers that are expected to play out for the company going forward. The first one is the tariff hike. Now, the pipeline tariff hike is expected to come in the first half of September 2025. GAIL had asked for around 79 rupees per MMBTU of a tariff hike, as against the 59 rupees that they are getting right now from the companies. But Street is factoring in a tariff hike of around 15 to 20 odd %. So even if that comes in, it will be quite positive for the company, given the fact that every 10% hike in the tariff increases the company's EPS by around 10 odd %. So that's the first trigger. And the second one is on the petrochemical turnaround. Now, recently there have been a couple of global news reports which are suggesting that the global petrochemical capacity is expected to come down, because South Korea is urging its struggling petrochemical sector to slash down their excess capacity, and Chinese government also, in the other hand, is planning to reduce the number of petrochemical producers in the country. And if that happens, then there could be a turnaround in the spreads that we have been seeing in the petrochemical products, and these spreads have been languishing for quite a while now, and hence the petrochemical business performance of GAIL has also taken a hit because of that. In fact, if you look at in the last 12 quarters, for 8 of them they have reported losses, and that's the reason why the overall profitability also of GAIL has taken a hit. So if there is a turnaround when it comes to petrochemical product spreads, it could lead petrochemical business of GAIL to profitability, which could overall boost the numbers for GAIL India. Also, petrochemical product stocks were up in South Korea up around 5 to 10%, but that was also because the government is offering some kind of financial support. So it remains to be seen how soon the petrochemical products now turn around going forward, which in turn will benefit GAIL's petrochemical segment as well.
Got it. All right, Somit, thanks so much for that. Let me go across to you first, Prashant, on this one. GAIL, a quick view here, what Somit just spoke about. Are these key overhangs? Would you avoid getting into the stock for now, or do you see opportunities to get in and strike while the iron is hot?
I think yes, opportunity to get into the stock right now with respect to valuation very much attractive at this point of time. Again, the first trigger which Sumit has updated with respect to tariff hike, I think we may not expect a 20%, 15% hike, but I think a 5 to 10% hike can be done, because again the whole control is with the government again. So overall, I think there is a sentimental impact on the stock, but overall with respect to valuation, very comfortable to have a fresh position at this level.
Got it. Quick view, Osho, on GAIL, since the view on the fundamentals is that it could well be a buy on the valuations, Prashant says. What's the view on the charts?
See, on technical perspective, I will wait for the crossover between the moving averages, and that will happen once the price levels moves beyond 182. So 182 is a very strong resistance for the counter. It has given a kind of an attempt in the month of June of having a breakout, but again failed from there onwards. And we can see some kind of formation of lower lows on the daily time frame chart. So I will be waiting for 182 zone to get sustainably crossover, and once it happens, then only it will be a buying from a technical front, because all the exponential moving average and even the 200 is simple moving, that is the long-term moving average, still is at a higher zone. So I expect that one should wait for approximately 4 to 5 rupees kind of a authoritative or decisive move in this counter, and then only can look for buying opportunity from short or for medium-term perspective.
Okay. Another stock that we've been focused on since morning is India Cements, and a large trade taking place here as well. Ultratech Cement offloading stake in an offer for sale in order to bring its shareholding to 75% to meet public shareholding norms, and this was seen as a key overhang for India Cements. And of course, post this transaction, and integration with Ultratech Cement will take place. We've got Puneet joining in to tell you about why the stock is buzzing today and what the potential here is. Puneet, they've been working towards integration. This now can take precedence.
Well, definitely, Alex. Now, there are three numbers that you can watch out for this particular transaction. Now, Ultratech has sold out roughly about 2.01 crore shares, and that represents 6.4% stake in India Cements. Now, the key reason for this is for the offer for sale that the company has done is largely to get integrated and be in compliance with the minimum shareholding norms of SEBI to hold only 75% stake in the particular company. So as of now, Ultratech does hold 81.4% stake, and hence they have done this transaction to be in compliance with the norms of SEBI as well. Now, just some context, in July of 2024, essentially, Ultratech did acquire almost a 32% stake from the promoters in India Cement. Subsequently, they also launched a 26% open offer because their stake was over 26%, and open offer was launched. And post integration, their stake had increased to almost 81%, as I just mentioned. So this is essentially that getting in line and in compliance with the SEBI norms. But it's also important that from Q1 onwards, we started to see already a turnaround in India Cement in the EBITDA per ton, almost at 400 rupees per ton. So it's definitely a key positive for the shareholders of both companies, and the integration has a long way to go, but definitely we're starting to see that turnaround in the numbers for India Cement.
Got it. Thanks, Puneet, for that. In fact, we were speaking to several experts over the course of the morning, and a couple of them pointing out that things are ramping up for India Cement slowly but surely, and heading up to 2029, the potential for EBITDA growth is quite considerable. But on the charts, I'm curious about what you think about the entire space, not just India Cements and Ultratech. Also, any opportunities in the cement pack?
Yes, the overall cement counters are looking very positive. There have been many names from the cement counter which are on the verge or which has already given a kind of a very strong breakout, like Ramco Cement, ACC, even Ultratech Cement. All these counters are looking very lucrative and has given a very strong breakout. Now, coming to India Cements also, this counter have seen a very strong stagnation period from the month of July 2024 till January 2025, around the zone of 370, 375 levels. And from there onwards, we have seen some kind of correction and again a revival. But with today's development, it is expected that this can be seen as a multi-week or multi-month breakout on the time frame chart structure for this counter. And on the higher end, with the kind of a breakout, one can definitely expect a very strong momentum. I expect nearly 445 to 50 as a short-term target for the counter. But again, after a strong breakthrough and after having a very strong consolidation for almost a year, if there is a kind of a strong breakout, then one can definitely look for buying opportunity in the counter. Overall, the whole space is also looking very attractive.
Okay, so the space is looking attractive. On the fundamentals then, let me ask you this, Prashant. What according to you is a top pick, if at all, and you don't need to stick to one, what would you pick and why?
I will go with Ambuja Cement on the valuation side. I think EV by ton with respect to PE, with respect to ROCs, and I think Ambuja is a better play right now, despite having a lot of volatility because of the group right now with Adani. So, but again, valuation gives me very comfort levels for a fresh position to have for long term. Again, cement as a sector, very positive. I think the housing sector is going to pick up very soon post this second half of this financial year. So, very positive on the realty or housing sector. So, cement would be the major part, and Ambuja's cement would be my preferred pick because of the valuation factors.
Got it. All right. By the way, standard disclaimer, Ambuja Cement part of the Adani Group, and so is NDTV Profit through the NDTV Group. Now, let's also talk about Nucleus Software. This is a company that was in focus on account of its numbers, which weren't the best. It's a small cap IT company. It came out with a weak set of numbers in the first quarter, but there's also a couple of deal wins, or at least one that stands out. So let me go across to Puneet, and we're going to speak to the management as well. Puneet, you're going to speak to them, but tell us about the case for the chat. What do we want to know about from them?
Well, definitely. So there are a couple of key points. They've stitched a partnership with Sarthi Finance, which is an NBFC, and they will be looking to give their software solutions to Saarthi to integrate as well as simplify the operation. That's definitely one of the key case points. The other ones, of course, are getting what is happening with the demand, because Q1 was impacted heavily in terms of higher costs for the company. Employee cost went up 19% on a quarter-on-quarter basis, and that led to the EBITDA of the company falling by almost 50%. But to talk more about this, we're now being joined by Mr. Parag Bhise, who is the CEO of Nucleus Software. Mr. Bhise, a very good afternoon to you. Thanks so much for joining in. Let me first start off, essentially with your new transaction which you have with Saarthi. Is this a first of its kind transaction for you specifically, or is it that you are giving one of your platform solutions to the company and hence they will take this forward?
Let me talk a little bit about what we do. You would know, but then for the benefit of the viewers, that we offer this retail lending solutions to one of the offerings, which is the most prominent offering, is the retail lending solutions to banks and NBFCs in India and across the globe. Saarthi Finance is our latest partnership that we have embarked upon. They are a new age NBFC, Greenfield NBFC, who have their vision is to provide finance where it is not easily accessible, that is to the MSME sector, where the credit is not. So that's their focus area, and they wanted proven technology solutions. They wanted to move to market very fast. So that's how this partnership has come into place. And it also kind of matches with our vision, because if you noted our vision, it is like our vision is to make financial services access easy and enriching worldwide. So we also want that everyone and anyone who needs finance, we should provide technology solutions so that banks and finance companies can use that to reach out to among others, even the underserved to whom credit is not easily available. So our visions kind of match, and that's how that partnership has come into place, and it is special.
And Mr. Bhise, if you can give us some quantification, how much is the revenue potential that you see from this transaction, and is this that you can build on this particular product that you're giving to Saarthi?
Look, revenue and all, we don't talk about it. That's our policy, but I can talk about the platform for sure. The platform is a well-known platform. It is used by multiple across the globe, about 200 financial institutions. It used to be called FinOne. Now it is called FinOne Neo, because a few years back we have launched a completely re-architected platform, which is an open architecture API first. So many financial institutions are using it. The biggest of the bank and smallest of the NBFCs. So platform is available to everyone. And Saarthi Finance has also acquired this platform, end-to-end platform for loan origination, servicing, and debt collection for their end-to-end lending operations. That's where it fits in.
Got that, sir. And Mr. Bhise, essentially, what is, since we have you here, what is the current demand scenario on the ground? Because we have seen that you don't have as much revenue exposure to the US, so that won't be an impact. But what do you see currently on the ground? Are you seeing consumer discretionary spending from your clients in India as well as in Southeast Asia?
Look, it's difficult to compare Q1, Q2, and of course we don't talk about any projections. But when we're talking about Q1, especially with compared to the previous quarter, look, our work is also milestone based. So if some big projects complete in a particular quarter, there is a upsize, and that's what happened in Q4. So Q1 that way was a regular quarter for us, and generally talking, we seeing continued traction from the market, especially in India. Lots of new NBFCs coming in, they're wanting to work into. There's push, there's encouragement from government, there's encouragement from regulators, and that's how financial institutions are coming in to fill in the credit gap which is there existing. There's a large credit gap in India as well across the world, where the small players are not easily getting credit, and that's a very large gap, and that's where NBFCs like Sarthi and many others are playing a role.
Got that, Mr. Visse. Mr. Visse, we'll leave it at that. Thanks so much for joining in, giving us perspective on your new transaction, and we wish you the best until our next conversation. But Alex, that's all which we have essentially on Nucleus. It's a new transaction with a new platform, and they are looking to have more such transactions with the other financial institutions, so that'll be something to watch out for.
Certainly. Thanks so much, Puneet, for getting us those details. Of course, the demand trends for the larger counters are over what everyone's focused on, and yesterday's move, whether that bodes well for the IT pack as a whole, is what we have to watch out for. But that brings us to the end of this edition of Profit Buzzers. There's lots lined up over the course of the rest of the market day, so I encourage you to stay tuned. This is NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights,
real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm Hiral Dadia and with me is Samit Sarkar. Some bit of profit booking that did come in terms of overall markets today, Samit, where if you see Nifty 50 as well, we're still maintaining that 25,100 mark. So that is what is important so far. And with this, the trend is pretty much similar with regards to Bank Nifty as well. In terms of individual sectors, also if you go to see, FMCG is under pressure right now. IT has been slightly resilient for some time. Real estate, defense are the ones which are picking up in trade. But let's quickly look at the broader markets, the small cap index and the mid cap index, because that's where there was some bit of resilience, specifically with regards to where the small cap 250 goes. It's cooled off slightly from the day's highest levels, but gains of around 0.2% coming in there. If we can have the mid cap 150 as well to see what's happening on that front. Mid-cap 150 now under pressure with cuts of 0.3% coming in on that front. Let's look at individual stocks from the small cap space, because lots of movers and shakers, some large moves that are coming in here as well. You have a Coffee Day Enterprise. That stock is seeing some smart moves in today's session. Apart from that, you can talk about Nava, which is seeing moves of around 8 to 9% in trade. KIOCL, India Cements, Tejas Networks, as well as Prince Pipes. And you have New India Assurance on the back of the nil GST reform that could be probably coming in. PVR seeing some smart moves as well. What's losing out is Angel One, but this is on the back of the commentary that has come in from SEBI chief with regards to where the duration of contracts is something that is being taken into consideration. Actually, Glasscoat is seeing cuts of around 5.5%. We did have a conversation on KYC today, so watch out for that entire interview on social media as well. Carborundum, Jamna Auto, Easy Trip, these are few of the losers as well. So lots of movers and shakers in trade. In fact, Sirma 4% up move on the back of the brokerage note is what you're eyeing today, Samit.
Yes, another stock that is, as you were mentioning, was Coffee Day Enterprises. That stock is up more than 15% in trade. What could be buzzing around this stock? Let's get in Mahima with more details on Coffee Day Enterprises.
Right, so Sumit, the stock did touch an intraday high of almost 19%. In the past 5 days, it's gained over 23%, and 6 months, it's gained over 118%. Now, the possible trigger today could be two things, probably the earnings and also the change in management. In terms of where earnings stand, revenue saw a growth of around 3%, EBITDA growth of around 77%, and it turned profitable at 28 crores versus that of loss of 11 crores. But of course, there's a one-off here in terms of EBITDA. There's an 18.5 crore loan settlement one-off, the gain from that, and 16.4 crore gain from sale of proceeds that were invoked via the CDGL shares. Now, these two are the reasons as to why EBITDA has seen a significant growth and why there's profits in the bottom line as well. And the other possible trigger could be that Mrs. Malvika Hegde has been reappointed as whole-time director. But in terms of where the counter is concerned, there have been significant turnaround for the entire company, because Overall, the company revealed that it settled its outstanding debt of around 205 crore. Plus, there is Dolly Khanna that also made an entry in June by around acquiring 1.5% stake. In terms of the NCLT ruling, that also aided the kind of move that we've seen in the stock in the past 6 months, because NCLT set aside the order initiating insolvency proceedings against the company as well. Lastly, in terms of where segmental performance stands, coffee business has shown a growth of around 6% year on year, but the hospitality business has halved as compared to where it stood last year. So this is the overall view as to what's happening with Coffee Day.
Well, thank you, Mahima, for that. Avinash, bringing in you on this counter, Coffee Enterprises, have you tracked this counter? Any developments that you are aware about Coffee Enterprises here?
Yeah, good afternoon, Somit. My sense is, I think numbers have been much better than what the street expected. Of course, there have been many accounting adjustments in this quarter. But overall, if you see the traction and the management commentary, I think one thing is very clear, that the second and third quarter, hopefully, if the traction positive momentum continues, then I think the markets would be looking at a profitable number purely from the core operations. And I think one good part is that the insolvency proceedings have been kept aside. There have been some benefits which the company has got because of this, and overall the market is now growing again. I think Coffee Day has a very old traditional legacy, has a very strong customer base, and with marquee investors like Dolly Khanna coming in, I think clearly the markets are now looking forward for better growth numbers in the coming 2 to 3 quarters ahead. So I think, my sense is that yes, this could be a good turnaround candidate. Valuations are also not very, very expensive. I think, considering that in the last few years, the stock had been beaten down very badly. So I think it could be a good turnaround candidate for a high risk appetite investor before we see the earnings traction coming in a big way and, the bottom line shining up again.
Interesting commentary, Avinash, with regards to where Coffee Day Enterprise goes. The stock actually is up, or in fact has nearly doubled in the last. Venky's, that's another stock which is up in trade. That stock is seeing gains of nearly 7%. Let's quickly pull up that counter on the screens. From the day's highest levels, it has cooled off slightly. If we can just have a longer term chart as well with regards to where Venky's is concerned, because that will give us some bit of perspective of the kind of stock moves that you see. There you go. 3 months, it's actually been a downward journey for Venky's, and it's actually started picking up itself in the last couple of trading sessions. If you can just have a 1 month chart of Venky's as well to see since when that upward journey has started for this counter. There you go. It's just been the last couple of months. Let me go across to Vansh to get more details and perspective in terms of what's happening with the Venky's today. Vansh, over to you.
Well, yes, so let's get into the business details of the company. Now, the company is engaged in involving the poultry breeding and chicken meat processing. Now, if I talk about the segments of the company, it's involved in poultry and poultry products, animal health products, and oilseed segment, that is the soybean segment. Now, it's also important to note that the company is a significant competitor of brands like Licious and Zorabian, which are popular brands for meat on quick commerce. If I talk about the financials of the company, the revenue for Q1 FY26 was up by 7%. EBITDA was down by 78%. Now, this was on the back of the poor margins in the poultry segment for this particular counter. And the margins stood at 2.7% versus 12%. And the net profit was down 78% to 16 crores versus 75 crores. If I talk about the segmental performance of the company, the poultry segment saw a downtick of 7%, animal segment saw a downtick of 16%, and the oilseed segment saw an uptick of 62%. If I talk about the guidance for this particular counter, the company expects a 25% volume growth in the soybean segment, and they expect the soybean prices to remain stable for FY26, and they expect better realizations coming in from the poultry segment. So this is what the overall picture is looking like for Venky's.
Thank you so much for that, Vansh. In fact, let me head across to Avinash to get his view. Avinash, 7.5%-8% up move coming in on a Venky's. It seems consumption of poultry as well as if you talk about animal health products, that is on an increase. What would you advise investors to do?
No, I think, Hiral, this stock can be held on by investors. It's a market leader in the poultry business. And more importantly, I think they have a wide variety of products in the chicken, category also. So despite the competition, I think there's a huge market kind of runway available for them. And I think hopefully in the next 2 quarters, if the animal care business, the poultry business, which is the bread and butter business for them, actually picks up, that is where the markets is looking at a big trigger point. The soya bean business is a large volume opportunity, but the margins also are not very high. So I think, markets are definitely looking forward for the poultry business to take off. In this quarter, I think it was not so great, but hopefully the second half should be much better. And I think, the fact of the matter is that they are a large dominant player in the organized sector place. So I think definitely with more and more consumption of these products happening across metros and small town cities, I would not be surprised that the second half should be equally better. So I think, we are looking forward for a better second half. So I think we are structurally positive, but somebody who wants to buy in should actually wait for some time. The stock has moved up quite significantly. So maybe on a market dip, one can add, and existing holders can definitely hold on to this stock.
Avinash, do you think that the consumption could increase given the fact that Shravan is getting ended on 24th, and that could be also one of the trigger points here?
So definitely this period is slightly, a lower consumption for, non-veg products, but definitely second half, as I mentioned, post-September, I think you could see a strong uptick, for the poultry care business. And clearly, Venky's is a brand which is known to many people in the market as well as in the overall, B2B marketplace. So I think, definitely a solid growth potential awaits them, but we'll have to wait and watch for the numbers.
Right. Another stock that remains in focus is Prime Fresh. Now, it's a 240 crore market cap company, but has promised to make an investment of close to 150 crore rupees over the next 2 to 3 years. Let's get in Mahima first to give us some background about what does this company do and what's the outlook here.
Right, Somit. So basically, it's a fully integrated, agricultural value chain company that is into fruits as well as vegetables. In terms of how the company is done in Q1, well, good growth in terms of revenue, 14%. EBITDA, however, was down 9.3%. Margins came down at 7.3 versus that of 9.24. Net profit was down 17% for the counter. But in terms of key highlights, the company commenced operations at their new distribution center in Lucknow. And that marks their expansion presence in the northern part of India. They also launched UP Mango's operation, deepening backward integration in the mango portfolio. Plus, they also launched tomato operation across Madhya Pradesh, Uttar Pradesh, Karnataka as well as Himachal Pradesh, and also entered the banana category. Operations commenced in Maharashtra. Now, in terms of the outlook as to where management stands, they've said that higher growth to be driven by strong performance in key product categories. That's your pomegranates, guavas, bananas as well as tomatoes. And in terms of what the case for chat exactly for this conversation would be is, as you rightly mentioned, it's a 280 crore plus company which is doing an investment of around 150 companies. So that it'll be interesting to know as to what this investment is going to do to the company exactly and how it will aid their top line as well as bottom line.
Well, to get that more details, we have now joined by Hiren Chandrakant Ghelani, the whole-time director of Prime Fresh. So, sir, firstly, to start off with, we wanted to understand basically what does your company do and how does your company does the business at this moment?
Good afternoon, everyone. Thank you for the opportunity. Basically, Prime Fresh Limited is a fully integrated agri-value chain company with a core focus on fruit vegetable supply chain segment. Other than this, we also have a 3PL and service business where we manage backend for a couple of large retailers, pharmaceutical companies, and FMCG companies. Our core business is focusing on fruit vegetable supply chain business, which is essentially procurement, operations, and placements. As far as procurement is concerned, we procure from direct farmers, our collection centers, local area aggregators, FPOs, and other supply chain partners. When it comes to processing and operations, we actually do the complete solutions from harvesting, sorting, grading, packing, and logistics. In terms of placement, we are an omni-channel sales strategy company. We sell across various modern trade e-commerce companies across 10 top cities. We are present across 18 states and 85 EPMCs. We also have a couple of food processors as a client. We also supply to India's largest exporters. And in this sense, we have identified about 7 channels. And we are also focusing on exports and HoReCa as a new upcoming channels.
Right. So the 150 crore investment that you're planning to do over the next 2 to 3 years, couple of questions on that. Firstly, where you will be doing this investments and how are you planning to fund this?
Yes. So in terms of our investments, they are largely focused on Maharashtra. Within Maharashtra, we have identified 2 major clusters, Nasik and Pune. These investments are pertaining to end-to-end pre-production, production, setting up collection centers, distribution centers, cold storages, warehouses, setting up a food processing line, and also ensuring that we do marketing and storage activities for third parties. These investments will be spread over the next 3 years, starting between mid-October and in the 2028. In terms of the sourcing of the funds, we have a very good internal accruals. We are zero debt company. We have a lot of scope to raise further capital. Our net worth as we speak today is around 76 crore. Our debt is zero. So of course the funding would be over the time, it will be mix of everything like internal accruals, debt raising, and of course fresh equity fundraising as and when we need over the next 6 to 12 months.
Hi, Mr. Gilani. This is Hiral on this side. Your commentary seems to be very optimistic, very positive, the kind of growth you're giving out. A couple of things I want to understand from you. What is the net cash flow right now that you're sitting on? Number two, in terms of when you say you have internal accruals, what's that quantum in terms of the assets versus the liabilities? If I have to look at the borrowings as well. And three, this kind of exponential growth that you're talking about, how do you aim to achieve that? Because overall, if I have to look at the previous years as well, the maximum you've done is around 200 odd crores in terms of your sales, if I'm not mistaken. So a doubling from there, I mean, without much of a do in terms of investments.
Sure. So as I mentioned, we'll be invest every year, every quarter under this two major business plans. In terms of cash flow, our net profit currently is around 9 crore for FY25. And that, capital can always be used for this project. As I mentioned already that we have a huge scope to raise debt. We can, fund this project, with a combination of debt and the new equity.
What are the strategic partnerships, Mr. Gilani, that you're looking at? Because 500 crores in the near term, a long-term goal of 5,000 crores in 5 years. If you're looking at strategic partnerships, as you've mentioned, like Amazon or with the RIL or with Adani, what is it that you plan to do with them and how will it benefit you?
Yeah. First of all, I would like to correct figures that we have a 5 to 6 years plan of 2,000 crore sales.
Okay.
Secondly, to achieve this kind of numbers, with the help of internal accrual and the debt, we could be needing around 200 crore over a period of next 2 to 5 years, right? As we keep growing along, right? In terms of strategic partnership, currently all e-commerce clients, all modern trade guys are our customers. We have also identified a couple of global partners where we can keep getting long-term commitment in terms of order flows. We have almost more than 1 lakh plus farmer network built. With these two projects, our farmer network will be further strengthened. Of course, when it comes to growing fast and raising money, of course, you may explore as and when required in terms of any strategic partnerships.
Mr. Gilani, from where are you looking to raise this 200 crores that you will need right now? What's the near-term plan?
Right. So the near-term plan, of course, is internal accrual, and I have already taken an approval from the board and the shareholder to issue of preferential warrant shares to promoters. Board and shareholders have already approved, and 25% of the portion has already been put into the company. So when these preferential warrants are converted fully in equity, it will infuse about another 11 crore rupees in the company, and promoter will raise the stake in the company. And as I mentioned, the near-term cash flow of 9 to 10 crore rupees from internal accrual will take care of 20 crore. So I don't think we are going to invest more than 20 crore in the phase 1 for the entire project in terms of over the next 6 to 9 months. So if I were to stagger the investment 20 crore each, and maybe towards the fag end of the project completion another 30 crore, I think it should not be a challenge for us to raise further debt and equity.
Right, sir. Sir, as you had mentioned earlier, I believe that during COVID, exports were zero. At this moment, how much of your revenue is coming from the export market? And just wanted to understand whether do you have any exposure towards US market?
No, we don't have any exposure to US market, first of all. Our target markets could be UK, Europe, or Middle East, Far East. We were doing, exports prior to COVID, but post-COVID, we found that the domestic market is far more lucrative and easy to execute with low risk. So we were doing more focused on domestic markets, and we expanded across 18 states. Our sales has grown at 30% CAGR over the last 10 years. Our sales have gone up 4 times in the last 4 years. As I said, if we want to grow from here, the focus will have to be on exports as well. And for exports, we have already got a couple of purchase orders from few clients overseas, and we are building a separate dedicated export team. And we think that over the next 3 to 5 years, we should be doing at least 150 crore worth of exports.
Are the margins...
However, we have been already supplying lot of exporters.
Right, sir.
And we have been, kind of staying away from exports to ensure that there is not much pressure on the working capital.
Right. And are the margins different when it comes to the domestic market and export market? Where are the margins higher?
Yeah. So up till now, post-COVID, of course, margins are far better in domestic market. Risk was far lower, and capital productivity was much higher. Going forward, of course, as you grow and you do a better backward integration, your ability to procure export quality rises, and your ability to cut cost of procurement and operation is also there. In that sense, of course, export margin also you can expand versus what you were budgeting earlier. So I think on a longer term basis, from here onwards, we see that margins broadly would remain same, but terms of trade, the terms of payments could not be very lucrative for a export business.
Okay. So export is not very lucrative, but thank you, Mr. Gilani. It'll be interesting to see how things pan out basis the way you've looked at it as well from here on, because interesting targets, interesting guidance, Somit, that we're picking up. So that's the management, no major moves, 1% downtick in terms of prime.
Thank you very much.
Prime fresh. But moving on, let's just quickly address the flashes at the bottom of your screens that we're picking up right now, where the GST panel has recommended scrapping 12% and 28% tax rate. That is interesting. The government, the GOM is supporting the proposal for 2 GST slabs right now. Panel has recommended scrapping 12% and 18%. So the question is going to be 12 and 28%. So the question is going to be which are the 2 tax slabs which will come in. But the group of ministers is supporting the proposal in terms of where the 2 tax slabs go, but scrapping of 12% and 28% tax rate is what is being recommended right now. That's the latest that you're picking up, and this is from the Bihar Deputy CM, who has come out and said that in terms of where the GST rate rationalization goes, and the GOM on GST rationalization will be sending their plan as well to the GST Council. That is the latest that we're picking up so far. Somit, why this is interesting right now as well, because in the last couple of trading days, since Prime Minister Narendra Modi's speech on Independence Day, where he spoke about the GST reforms, since then you are seeing that rotation that's happening in terms of sectors which could be beneficiaries of this GST reform and GST rationalization. And I think today was a day where we heard a lot about insurance. That is a sector which is up. Auto has already had its day.
And there is cement, FMCG as well, which are a clear beneficiaries
right?
of the
So I think, as the government is moving towards GST rate rationalization, a lot of sectors which are taking it in the positive stride, and that is what is going to be important. The GOM on GST rationalization, they've said, will be sending the centre's plan to the GST Council as well. So there are things which are moving forward. We will try getting you more details from Shrimi, who is absolutely on the ground, giving us a lot of updates from the Finance Ministry and, from there. But clearly, interesting moves on the GST front.
Right. Another stock that remains in focus when it comes to the small cap space is Saxoft. The company's revenue for FY25 rose to around 883 crore. The stock has been buzzing in trade. Let's get in Jasmeet with more details on the stock.
Well, right, yes, thank you for that. The stock is buzzing in trade today and it's up 8%. Let's quickly understand what does the company do. Well, company's market capital stands at 2,900 odd crores, and while company is based out of providing digital transformation solutions to mid-tier companies across USA and UK. Well, let's to understand more about the sectors they cater to. They generally cater to sectors like BFSI, fintech, and other utility and transportation sector. Talking about the key financials on an annual basis, the FY25 revenue rose to 883 crores. This is an uptick from the previous year, which was at 770 odd crores. But the margin saw a slight pressure, remaining at 17 odd percentage versus 18 in the FY24. When we look at the operational highlight, company nearly drives 55% of its revenue from digital engineering space. Rest comes from the emerging markets. While segmental wise, the BFSI segment stands at 30 odd percent of the revenue, while the other segment, that is the emerging sector, contributes roughly 46% of the overall revenue. While the company drives 44% of its revenue from US, rest 21% comes from the UK, and rest comes from the APAC region. Talking about the outlook that the company expects going forward, the company's vision is to reach $500 million of top line by FY26. So this is all about Saxoft, which is buzzing in trade today.
Right, Avinash, coming to you on this counter, Saxoft, would you recommend your clients to buy this stock at the current valuations?
Yeah, I think, from a longer term perspective, the sectors which they cover definitely have a lot of growth, attached. And I think, if one takes a 12 to 18 month view, the stock is also corrected from higher levels. So I think, this was definitely a overall good number of performance. But I think hopefully if the second half is also equally strong or better, then I think you could see good amount of, positional trades coming here. I think it's not a stock where it's like a speculative stock, but more on the fundamental side, we believe that the numbers which have come out actually justify the valuations. So I think you'll have to give in some time here, Somit. Clearly, I think, I would say that as they get more business from the US, because currently, with the tariff issue, dragging along, I think markets are a little skeptical on companies which have got a large exposure to the US market. So we'll have to wait and watch. But I think post September, if things clarify and get better, then I think you could see a good amount of re-rating here.
So that's with regards to where Saxoft goes. Before we get on to any of the other stocks that we're discussing, let's just look at a few of the commentaries that have come in from the Deepam Sekhi, where they've said that the expression of interest exercise at the IDBI Bank stakes issue has been completed so far. The due diligence is currently being done and the documents are being finalized as well. On the back of which, if you see in terms of the stock price, let's just pull up our IDBI Bank on the screens and see what the counter is doing in trade. It has seen a spike that has come in. If we can just have the chart, there you go. At the day's highest levels with gains of 4.5% coming in there. So clearly, the process is ongoing. Clearly, the expression of interest exercise is completed. Due diligence is being done, and the documents will be finalized. So a step further is what they are looking at. And secondly, with regards to where LIC minority stake sale goes, what they've said is that the decision on the issue will come in a consultative way from SEBI, LIC and more. The LIC market cap is huge and an interministerial group is there for this. They cannot give a number on the transaction details for this right now. The investment bankers are working on this as well. So that's the commentary coming in with regards to where the LIC minority stake sale goes. Let's quickly pull up our LIC on the screens as well and see what LIC is doing in trade as we speak. There you go, at the day's lowest levels. Avinash, very quickly, a quick comment with regards to the Deepam Sekhi commentary that has come in with regards to IDBI Bank stake sale and the commentary on LIC minority stake sale.
No, I think, Hiral, on the IDBI, kind of details which have come out, I think it's definitely a positive news flow. I think the markets are looking forward for this deal for a very long time. And I think once a strategic investor comes in and the government exits its sale completely, I think you're going to see a lot of re-rating happening here, because in terms of their network, in terms of their balance sheet, I think now the asset quality has also come down to measurable levels. So I think definitely positive for IDBI Bank. As far as LIC is concerned, I think, Hiral, I think markets would look at a slightly more higher dilution because, with just a 2% stake, the markets are not looking at any major kind of upside here. But what kind of valuation they give, because, the amount of money which they raised earlier via OFS of 2% had actually not delivered any big wealth creation for investors. So I think we'll have to wait on the valuation and on the extent of the dilution. But definitely, I think if it's a decent number and a valuation which is attractive, then only I think you could see a good number of institutional investors, maybe the high investors getting in.
Right. Well, a big announcement coming in from the Bihar Deputy Chief Minister as the government of ministry enters the second day. The ministers said that the GST panel recommends scrapping 12% and the 28% tax rate. Listen to what they had to say.
देखिए, हम लोगों ने जो केंद्र सरकार के प्रपोजल आए हैं उसमें सब लोगों ने अपनी अपनी बात रखी है। कुछ ऑब्जर्वेशंस हैं कुछ स्टेट के, इसके बावजूद हम लोगों ने केंद्र जीएसटी काउंसिल को रेफर किया है। अब जीएसटी काउंसिल उसमें निर्णय लेगा और जो केंद्र सरकार के प्रस्ताव हैं 2 स्लैब को समाप्त करने के लिए, उस प्रस्ताव पर हम लोगों ने विचार किया और समर्थन दिया है और हम लोग इसको रिकमेंडेशन दिए हैं। अब जीएसटी काउंसिल इसको फैसला लेगा।
सर, क्या रिकमेंडेशन है सर?
हम लोगों ने जीएम के तरफ से स्पष्ट तौर पर ये निर्णय लिया है कि जो गवर्नमेंट ऑफ इंडिया के 2 प्रस्ताव आए हैं, स्लैब 12% टैक्स को ख़त्म करने के लिए और 28% के टैक्स को समाप्त करने के लिए, उस प्रस्ताव का समर्थन किया।
So that's the commentary coming in from the Deputy CM of Bihar with regards to where rate rationalization goes. They are saying that 12% and 28% is something that has been recommended to be scrapped. So you will be looking at another dual structure. What happens with the special 40% is something that needs to be is in a wait and watch mode right now. And the recommendations will be sent to the council, that's the GST council as well. But completely out of time. Thank you, Avinash, for joining us on the show. A wrap on this edition of Small Cap Buzzers from the team that put the show together, Somit and myself. In fact, lots more lined up on the other side on India Market Close. Please stay tuned.
Disinvestment. We have undertaken a review of all the listed public enterprises, and wherever we are above the minimum public shareholding norms, we are in touch with the regulator, and we have done our homework. We have appointed the merchant bankers where necessary, and depending on the market conditions, the liquidity, the market appetite, the volume weighted average and market research, we'll be coming out with both OFS and FPOs and during the course of the year, and we've already completed one major transaction in the last few months, and we'll be hopefully coming out with a few more, and you will hear it at the right time.
So when you say that we'll hear it at the right time, and you're saying that things will come out in the course of this coming year, so we are looking at some sort of a timeline right now in this year itself?
Yes, of course. We have targets to meet, and we are on course.
So another thing, I recently heard one of your public interactions where you said that you are going to be doing weekly reviews of public sector undertakings market caps. So are there any interesting trends that you are looking at?
Yes. We now collect the capex performance data every month, and we have split the public enterprises into what we call cognate groups. So every week one cognate group is reviewed so that we are on course and we continue to support the economy as far as the public capex is concerned. And I'm happy to share that by the end of July, for which we have the latest data, we've already achieved 29% of the public capex target this year.
So any comments that you might have on wanting the private companies to have a more fair way of sharing profits with the government?
Private sector should be left to decide for itself. We are partners in arms. We want to make public enterprises a role model, that they should share fair dividends as part of our dividend policy, and we enforce that very strictly. And the reason is that one, we want ordinary investors to be part of the public enterprises and their wealth, and also get regular incomes from them. And as part of that strategy, as I mentioned, The fair dividend policy has the same time consistency issue as monetary policy, and that is why discretion versus rule applies very much here. And therefore, we have very carefully calibrated the regulation for them, and which is 30% of PAT or 4% of net worth, whichever is higher. We have seen the benefits of this strategy. We paid the highest ever dividend last year, and this year we hope to sustain and maybe even better that performance.
So just one last question. You said that if there are going to be any consideration about delisting any other PSUs, you are looking at it and there might be some announcements by the end of the year or something like that. So is there some homework being done around this, research around this? You are looking at something very concrete?
Yes, but will not be able to give any market sensitive details at the moment. But you will hear regular announcements from us during the course of the year.
Thank you so much for speaking to Profit, sir. Thank you.
Thank you.
Right, so that's Charu, who's been in an exclusive conversation with Deepam Sekhi, clearly indicating the process with regards to where IDBI stake sale goes and the LIC, plan as well. And that's the reason why you did see IDBI Bank, which is trading at the day's highest level. Smart moves there, but LIC still under pressure, trading at the day's lowest levels. No major moves coming in on that front. But an important development with regards to where GST goes, the GOM has recommended the rate rationalization and has suggested a 2-slab GST structure so far. They have said that they will be submitting their recommendations as well soon to the GST Council. My colleague Shrimi Chaudhary is with us to tell us more. Shrimi, what is the latest that you're picking up from the GOM meeting?
Yeah, that's true. GOM led by Samrat Chaudhary, the Bihar Deputy CM and also the convener of the GOM who's looking into the rate rationalization process. So this is, of course, a very major step towards simplifying the GST legislation. And in fact, the panel is now backing a Centre proposal to reduce the GST structure to just 2 primary rates, scrapping the existing 12% and 28%. And as we've been reporting, that group of ministers who met earlier in the day today has also backing the elimination of 12% and 28%, doing away with 5%, and to rationalize the whole complex tax structure. So under the proposed structure, what Centre proposes to have a lower rate, which is 5%. So whatever the item is at 12% will move to 5%, and the 18%. So whatever the item currently at 28% will move to 18% with a special tax rate of 40%. That will be there for some select few items, like 5 to 7 items, including tobacco products, etc. So, of course, the panel move is seen as a very important step, without, compromising the revenue collection. And in fact, as we have been reporting, that this is the first time Finance Minister Nirmala Sitharaman also addressed the GOM in the start of meeting, and in fact says that, you need to come up with clear discussion on the Centre proposal and how this is economically benefit for common man. And with that, GOM met today on the rate rationalization, and we could see the final call will be taken, of course, by the GST Council, expected to meet on 18th and 19th September. But for now, the GOM is going to recommend what Centre proposed in its final report to the GST Council.
Thanks, Shrimi, for that. But Shrimi, very quickly, what becomes important over here is everything that goes from 28 to 18% is a positive. Everything that goes from 12 to 5 will be a positive. But anything that you have in terms of the 5 to 7 products that would come in under the special tax rate of 40%, any clarity on that front or any expectation on that front?
So what we are picking up, Neeraj, is that some of the items which is currently in the 28% category will definitely move to the 40% rate. But the sense we are getting at this point is that there are very few items. For example, they are mainly focused on distant goods, demerit goods like tobacco, gutka, all those stuff, but we could perhaps see some, big or luxury car also coming in those segments. But as we have been reporting about the fact that how the government is kind of supposed to have a two distinguished categories, the small cars and big cars, and currently all the cars are under 28% bracket. So what they will do is that most of the small cars below 1200 cc will go to the 18% and above 1200 cc will go to the 28%. But something also very interesting we need to watch out for is that whether state and center will come up with an additional levy over and above the 40% rate, which is the maximum rate under the GST regime. So that is something they need to take a call on, and that will perhaps they will discuss in the GST Council meeting.
All right. Thank you, Shrimi, for getting us the updates so far. Really important ones that are coming in there. We will try touching base with her if further developments do come in. But let's get in. Uday Pimprikar, National Leader in Direct Tax Services at ENY. Uday, good afternoon and welcome to the show. Important development that you're picking up with regards to where the GOM goes. They have come out and said that with regards to rate rationalization, they've suggested two slab GST structure. You're talking about 12% that will move to 5%, 28% that will move to 18%, and a special tax of 40% that will be considered for 5 to 7 products. Now, my first question coming to you is, this is something which the GOM has approved and now they will be sending it to the GST Council. Your initial comments?
I mean, after Honorable Prime Minister's announcements, I think this was kind of expected, okay? But I think this is moving at frenetic pace. Perhaps it's required to move at this pace. And I think it's good news at a broad level. I saw some of the other comments that also came in that the states have kind of asked about what happens to the revenue. The states have also kind of considered, some bit of kind of ask on some of the other aspects of anti-profiteering. Those are the aspects that would need to be kind of discussed and debated at the GST Council. But I think this seems to be almost a done deal. It might be useful for us to kind of look at whether this 12% could be an exceptional, some amount, some bit of, let's say, services can remain there or not. I think that's something that one would want to go through some amount of nitty-gritties as we go along. But great development.
Right, Uday, great chatting with you. Harsha, want to quickly get a sense, what are the kind of timelines that we can expect with regard to these rates kicking through at a ground level? And second, is this can we consider this as pretty much a done deal, or do you still believe that there could be some hiccups or hindrances to implementation of these likely changed rates?
So the ideal process in all of this is that this goes to the GST Council. It gets debated, discussed, and then whatever response, acceptance by the GST Council then kind of becomes the legislation. But from a direction perspective, the recommendation is kind of clearly kind of gone in to the GST Council. Okay, there are several aspects I guess the GST Council would want to kind of discuss, and perhaps it's the correct thing to do, right? I mean, to discuss and debate. From a timeline perspective, the next GST Council is expected to be around 19th of the next month. And post that, notifications and other bits would need to be kind of issued to make this effective as and when it does. It should be sooner rather than later, to my mind. I don't think that they can afford to just keep this kind of massive change on rate and allow uncertainty to kind of continue for a long time. That I think appears unlikely.
Uday, stay with us. We have Pratik Jain, partner at Pricewaterhouse as well. Pratik, welcome to the show. How are you looking at this entire aspect now that the GOM has gone ahead and said that they've recommended scrapping 12% and 28% tax rate, and they're supporting the 2 GST rates proposal? The next process is where, the entire plan or the proposal will be sent to the GST Council. But taking all of this into consideration and the way it has panned out right now, firstly, the rates, do they come in as a recommendation from the GOM, number one? And two, do you think that the government should be waiting till mid-September for the GST Council, or the announcement should be made?
No, look, I think there's a process involved. So announcement is unlikely to be made before that. We all want announcement to be made faster. But I think government is acting very fast. So the process is that, and GOM also is comprising of various states, right? So they have taken into consideration, typically the GOM recommendations are accepted by the council. That is a trend that we have seen, but the council has to accept. If there is a disagreement, you might see voting also in the council. So it will take some time. I think the timeline of Diwali or thereabouts was being talked about, and government, whenever it is notified, government would give some time before the rate is actually made effective, because you have to do a lot of planning, and there is stock across the distribution chain which is lying. Government will also have to decide what are they going to do with the anti-profiting provision. So if you recall, there was an anti-profiting provision which was applicable till 31st of March 2025, and of course the government would want this benefit to be passed on to the customers. Now, how do they make that effective? So some background work will have to be done. I think it will take some time. As the Prime Minister had announced, around Diwali perhaps would be the time when the effective rate will come down.
Prateek, hi, Mahima also joining in. Just want to understand, because once this move comes in, there will be, inventory lying with a lot of stakeholders which will have input tax credit. Just want to get a sense if you have, had the chance to, ponder upon it, because sometimes it's also possible that there is an inverted, duty rate structure there. How will that pan out? Will there be relief given there? Any idea as to what should be done there?
Yeah, look, this is not the first time when the rates are changing. So it has happened in the past, but you're absolutely right that let's say if the rate is effective, let's say from 15th of October, and a particular commodity, the rate is reduced from 28% to 18%. Now that is lying across the distribution chain. Some of that is lying at my facility or my manufacturing facility as a manufacturer. Some of that is lying with the dealer, some of that with the retailer, and so on which 28% has been paid. But when I bill further, I have to pay 18%. So it becomes a cash flow issue for the distribution chain, because you paid 28% and you have 18% on the output. Typically in these kind of cases, some pricing adjustment happens, because the dealer or retailer would ask the OEMs about compensating them for the excess tax which has been paid. So a lot of operational issues will arise, and there will be a commercial discussion, negotiation will happen. And therefore, typically, once the announcement would happen about the rate cut, the government would give some time for the industry to prepare for all of these situations.
In fact, let me just go across to the what happens with regards to the compensation cess as well. Was there anything on that front? Because there haven't been any alternatives that have been discussed with regards to where compensation cess goes. And the idea was that the GOM would have a separate discussion on any additional levy that would actually replace the cess. And the centre, as we know, is expected to repay back the loans that it has taken as well from the states by October. And this was being done in the form of cess. So what would that treatment look like according to you?
So compensation cess as a levy, I don't think has too much of longevity that we can expect after the loans and the application of that particular money as per the legislation kind of fructifies or gets over, right? From a replacement perspective, there is an announcement to my mind which suggests that the 28%, some of the products will kind of move to 40%. Okay, so part of that collection would be collected as a proper GST. There could be some other kind of, let's say, levies which would be collected, I guess, either at this by the central level or both at the state and central level for some of the products over and above the 40%. And I think that would be a bit rare for the normal kind of products, but it is open for them to collect, states to collect some of the taxes, as also some center to collect some of the taxes as excise for some of the products as we go along. So that as an option is available, or even for that matter, collect this as a cess. For example, and I'm just saying this as an example, coal earlier was liable to a energy cess. And then that particular cess got merged with compensation cess. So, whereas some of that, history could kind of go about and be reverted to. But all of this is speculation. We'll need to see where all of this particular decisions get taken later on.
Thank you, Uday, for joining us. Thank you, Prateek, as well, both of you, for giving us all of those views. We'll let you go on that note. Also, we'll slip in a very short break, viewers. On the other side, we're going to, of course, kickstart the show with regard to India market close, and of course, we'll get you stocks which are buzzing. So stay with us for the next hour or so.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Oh, wow. Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should watching India Market Close here at NDTV Profit. I am Mahima Vachajani. With me is Harsh Sayata. Let's take a quick look as to how the markets are doing. Well, it's a narrow base trade in terms of where Nifty 50 stands. Now 90 odd points, trading around 0.3% higher. The Bank Nifty off from its day's highs, but still trading around 0.2% higher. Trying to maintain that 55,700 levels, but off from its day's highs for sure. Let's also try to pull up the Nifty heat map and see what counters are doing well in trade today. Some pharma names doing pretty well. Cipla, Dr. Reddy is doing well in trade today. The Bajaj twins doing well today. The Bajaj Finserv, especially on the back of the Jeffries initiation, doing pretty well in trade today. SBI Life insurance names, of course, on the back of that GST exemption doing well. There's Reliance, ICICI Bank and L&T. Some counters in the green, but something that's not doing well is Coal India, down 1.5%. Geo Finance also seeing profit booking, down 1.4%. Bajaj Auto, down 1.3%, as well as Power Grid, Eternal, IndusInd Bank, Tata Consumer. In fact, consumption names, from the entire pack not doing very well. Profit booking seen there after the kind of rally that we saw yesterday. And that is reflected in the sectoral heat map as well, if we can try to pull that up. Top gainer on that chart is Nifty Pharma, up 1.2 odd percent. Nifty Defense in the green today, up 0.6%, but the Nifty FMCG down by about 0.6%. Nifty Energy also almost flat, down by about 0.2 odd percent, but Nifty Realty and Nifty IT also doing well in trade today. But the broader markets, Harsh, that advanced decline ratio is almost more than that 1:1 mark. How are the mid-cap and the small-cap indices doing?
Well, there's a minor underperformance, frankly, on both of those indices. Let's pull up the Nifty mid-cap and that'll give us a sense. There you go. In fact, the Nifty mid-cap is actually sitting in the red, but just a slight negative bias, if at all. But we've fallen from the highs, and that's what really stands out where the Nifty mid-cap as well as the small-cap indices are concerned. Fairly range-bound day of trade even on both of these. Of course, there are plenty of buzzers. So while that's not reflective on the index itself, there are plenty of names which are absolutely buzzing. Let me start off with some top gainers from the lows. There's a Tejas Networks, there's a Clean Science, there's an India Cements, there's a Nazara. All of those doing fairly well for themselves from those lows. They've done fairly well. Clean Science, of course, standing out. It's one of those which have done well from the lows, but has fallen from the highs as well. So that's one stock which is really something which is standing out in trade. You also have the likes of a Garware Tech, a BSE and Angel One, which have fallen substantially from the highs. BSE, Angel One, understandably, given the F&O changes which are likely to be in the pipeline. Volumes, on volumes, there's Clean Sciences which tops the list, not surprisingly, but there's India Cements, Happiest Minds and Tejas Networks, all of those big buzzers in trade. Let me go across. We have Kush with us. Kush, good afternoon. What are you seeing on the index? What are you tracking at this hour? And any stocks within the Nifty that are standing out for you?
Hi, Harsh. Very good afternoon to you and to all the viewers. Very interesting moves on the Nifty. We were looking at this 25,000 resistance, which was taken out yesterday. What is heartening to see is that even today, the markets are able to firmly hold above that mark. Now, if you look at the weekly expiry, that's today, 21,500, early in the morning had a strong call base. That's been knocked out. Now you've got a base at the 21,150 mark, even 25,200. And the put base is now at 25,100. So I think this is going to perhaps be the range for the next hour or so for the weekly expiry, 25,100 on the downside and about 25,200 on the upside. But dare I say, funny things happen on expiries. All in all, I think the texture for Nifty is healthy. Also adding to the fact is that the PCR, which had shot up to 1.3 and a little over, yesterday, has actually now been reset to 1.08. And with the expiry getting done today, I think it will be further reset. So I think there is good amount of gains to be had on the Nifty. But because of the near-term moves that it's made over the last 5-6 sessions and including today, I would wait for a pullback. Any move closer to 25,000 would offer a good risk-reward ratio. From where on, you could expect Nifty to move to 25,250 and higher levels, and 24,800 becomes your stop loss in that case.
Well, this is a substantial change from yesterday, right, Coach? And since the last couple of days, what's made you make that change?
I think a small update, is perhaps warranted here. From a very near-term perspective, Harsh, I have been bullish on the Nifty for some time. From a very near-term perspective, the first target for me was 25,000. That's been hit. It's the medium term that I'm a little concerned about. But as I usually do, I take each week as it comes. What's changed is also the fact that Nifty's moves have been sustainable, and FII short covering is yet to kick in. Now we can't really predict as to when will that happen, but that is one impending trigger. As and when that happens, I think that alone could take the markets higher to about by about 300 to 400 points. So yes, while we wait for that and Nifty continues to move higher, there is some confidence that keeps building.
Okay, all right, Kush, your top picks for the day, and before I go to that, the news that's flashing on your screen down there, the online gaming bill has been passed in Rajya Sabha is what the breaking news is. Let's try to pull up some of those stocks. Nazara has been down in trade today already. Let's try to pull up that stock and see how it's doing in trade. Also Delta Corp, as to whether it's reacting positively or not. We'll try to pull that up in a while. But Kush, before can we try to pull that Nazara stock up? Okay, there you go. It's down by about 1% So, in fact, off from its day's low point, trading at its day's high point almost, but still down 1%. Delta Corp also, if you can see, and try to pull that up, down about 1%. But that's probably profit booking there. So that's with regards to where these gaming counters stand. But Kush, your picks for the day?
Sure, Mahima. Going with two stocks which have a very similar kind of a pattern, which is, both of them gave a breakout a few sessions ago and now are consolidating minor profit booking with very low volumes over the last few sessions. But overall, the structure remains very, very positive. The first one is Shriram Pistons. Had a consolidation of 26 sessions. About 2 sessions ago, gave a breakout and is now consolidating. As I said, the structure even now looks firmly bullish. So if you want to accumulate, this is a good level. 26, 80, 27, 75 are your targets. 25, 25 is where you place that stop loss. The other one is something that we've discussed around the levels of 640 and has been doing well, is Indian Bank. Now, while the rest of the banking pack is under pressure, this one again has been consolidating. The mild negative bias, but dare I say on low volumes again. So yes, I think this is consolidation where it's forming a base for the next leg of up move, which could take the stock past 700 as well. But for now, 688, 700 are your two targets, and 650 is where you place that stop loss.
Okay, let's first get in what dealing rooms are recommending in the session today, because it's that time of the show wherein Soumit Sarkar opens up his portly pitara can, whatever you call it. I was getting bored with the word pitara, so I thought I should think of something new. But anyway, Soumit, good afternoon. What are you learning?
And multiple stocks, in fact, a lot of stocks that are in focus today. Firstly, it's UPL, and dealers are indicating that, in fact, they're saying that multiple dealing rooms are saying this. They're recommending buy calls for UPL. They're asking their clients or advising their clients to buy UPL at this current levels and continue to hold the counter till the second quarter numbers. They're expecting a strong turnaround here for UPL. Multiple stocks, Kalyan Jewellers, Tata Steel and Godrej Properties, where dealers are indicating that the selling pressure is likely to get over soon for these counters. So keep an eye out for them. For Prestige Estates, there are buy flows at lower levels and expectations of an announcement that could come in from the company side related to the demerger of the hotel business. For Sun Pharma, Dr. Reddy and Glenmark, there are buy flows today in entire pharma space. But for these three counters specifically, dealers are saying that a prominent FII has been a buyer into all these three counters in trade today. For GAIL, there are buy flows on large HNI desk on potential two triggers that are expected to come in or expected to play over the next couple of weeks. Firstly is a tariff hike, and the second one is a turnaround in the petrochemical business. For Fino Payments Bank, that stock has been buzzing in trade on anticipation of small finance bank license coming in soon for Fino Payment. And when it comes to PI Industries, there are buy flows on HNI desk on expectation of some positive news flow that is expected to come in. In fact, even if you look at the chart of PI Industries, that stock has perked up in trade in the last half an hour of trade. And lastly, when it comes to Electra, there's a buzz of a potential new order win that could come in from Maharashtra government. Actually, earlier this order was cancelled, but again, this order could come in for Electra is what the dealing rooms are indicating for this counter.
Mighty big pitara here today. Sorry, that got. I thought it's not getting over.
We love it, by the way. You want to continue?
No.
Thinking of taking a snooze in the middle of this show.
Okay.
But can't afford to, right? When Somit talks stocks.
You can't. I mean, you shouldn't ideally. But Somit, anything that dealing groups are talking about this whole GST rationalization now that the GOM has also accepted it?
Well, they're still waiting for the final details to come in. Like even for auto, we know that yes, there would be GST cut for some or the other segment. But then in that also final details are required for what CC engines are actually these rates getting cut. So they are still awaiting, but obviously the stocks have reacted to that.
So just a thought here, and I think we need to explore this for M&M, right? EV models were anyways at a low rate of GST.
So there's no GST cut coming in for EV. Also, we need to see whether this GST rate is cut is coming only for engines which are below 1.2 litre cc. So that would be important to track.
I think very important to track. So something that we'll keep an eye out for. Okay, thanks a lot for that, Somit, for getting us all of those updates. Kush, I know that more than the three of us in the studio, you listen to Somit's bag of secrets more closely. Anything that you picked up from these 6-7 stocks that you've looked at, that you may have looked at?
I'll get to that, but before that, how about a synonym for your pitara, right? Sanduk, rhymes with, or rather goes with Somit or Sarkar, however you want to put it. So I'm just going to call it Somit ki Sanduk.
Chalega, no problem.
For tomorrow. He's giving you that heads up for tomorrow.
Just gotten a new name, it seems.
Sanduk se banduk, something, whatever. Yeah, perfect. All welcome.
If we were another platform, surely.
No, but this is fine. It's a nice one. We'll try that tomorrow for sure, Kush. But nevertheless,
let me just go quickly and rename my watch list on that now. But no, a couple of stocks that stand on my, I have been tracking for some time, and now that Somit's mentioned them, I'll look at them even more closely. First one is Electra Green Tech. The reason I mentioned that is because this stock had, for whatever news had come about, seen a dip and is now at the cusp of a rounding bottom breakout above the 1550 mark. 3 sessions back to back attempted, but not successfully closed. So the moment you get a close above the 1550 mark, you would see the stock zoom to 1600 and 1650 levels also. So this is one stock that I will watch very closely. The other one is PI Industries. Very sharp fall, 200-day moving average respected, and a turnaround from here. The volumes are a little tepid, but enough to suggest that there could be some recovery underway. So Electra Green Tech and PI Industries, I was anyway tracking some of these stocks. Glad to see that they are on Somit's radar as well. So as I said, I'll probably track them more closely.
All right, okay. So that's with regards to where, all these counters are concerned, and Kush's view on the charts as well. But we're also joined by Aditya Shah of Hercules Advisors joining us now. Aditya, Somit talked about a lot of pharma names as well. There was Glenmark Pharma, there was DRL. Anything that you're liking specific from those counters? And if you wanted to play the pharma theme right now, how would you play that?
So pharma has a lot of subsectors within itself. Generics, all those stocks have rallied massively. Sun Pharma, Lupin, DRL, most of those stocks have rallied. And with the uncertainty in the US and the tariffs being what they are, I would tend to stay away from generic companies per se. Pricing pressure is coming in. Within that pack, Cipla is the one where new products are coming in for Opthal as well. And that looks really very interesting to me. But rather, I would tend to play the API space or Laurus TVs. Laurus, particularly this quarter, has started to take fruits from the expansion that they had embarked on 2 to 3 years ago. So API space looks really very interesting. The CDMO space, as Syngene or Suven Pharma for that matter, Piramal Pharma as well. So CRAMS and CDMO space is another one which looks really very interesting. And then the domestic diagnostic space, as I've already been saying, companies like Krishna Diagnostics look really very interesting. So these are 3-4 subsectors within pharma where I'm really very bullish on. I'm very careful on the generic side of it, as I don't really understand what will be the impact of tariffs. And a lot of these stocks have rallied big time. So cautious on the generic side.
Got it. I wonder what, so just a quick follow-up to what you just said, Aditya. Divis, even at this price, you're still positive?
So you never get DVs cheap. DVs you only get cheap when there is a Form 483 or there is some problem. So DVs is a steady compounder. Some of the molecules that DVs has got, there are extra specialty molecules which practically no one in the world is really making. So from my perspective, it is an expensive stock. It will continue to remain an expensive stock. But then, as I've been saying, that's the Mr. Dependable of the portfolio. You need to have slow and steady allocation in the on DB slabs.
Understood. Also, Somit, on a UPL, Somit indicated that, Aditya, Somit indicated that UPL, there are multiple dealing rooms recommending a buy call for their clients and buy and hold till Q2. Also, a couple of weeks back, he came in and said there's some restructuring which could also be in the pipeline. UPL has rallied quite a bit. Again, we've seen 40% odd, and I know you track chemicals quite closely. Finding it interesting at all?
I track chemicals, but I don't track UPL, so will not be able to.
Sure. UPL on charts, Kush?
I track UPL, but only to find that it's already most likely been on my avoid list. So very similar structure here as well. It's seen some sort of a rebound, but it's now coming up against that resistance zone of 725 to 730. Yesterday's high also, where the stock spiked, was at 730.3. So retraced from there. So unless it takes out that level, I don't think there's a big upside to be had. Plus, the stock actually has a tendency of disappointing every now and then. So yeah, if I had a position, I would book profits at these resistance levels, or if there is a spike that comes around.
Okay, all right. So that's with regards to where charts are concerned for UPL. But it's time for stock of the day, and we are talking about none other than Clean Science. And Varsha joins us with what's happened throughout the day with Clean Science and as to why the stock did go down, then come up, and now trading around 1% lower. Varsha, what are you picking up?
Well, thank you so much for that. A single mistake by broker has led to all the fuss in Clean Science that we have seen today. Let's see what exactly happened. So broker made an error in a block deal. Clean Science promoters, if you see, promoters were, so broker Avendus Spark accidentally sold double the intended shares. So the promoters of Clean Science were planning to sell about 24% of equity. That means 25.5 million shares were supposed to be sold, but 60 million shares were sold. Now this is the mistake done by broker, that is Avendus Spark. And so far on both the exchanges, if you see, around 90 millions of shares have been traded. If you see broker, so we did speak to management of Clean Science, wherein they said that broker will compensate for the extra shares and for the loss that they've created. And if you see, the shares were offered at around 1,030 rupees a piece, which is at a 13% discount to the Wednesday's closing price. As of June 2025, if you see, promoters held almost 74.9% of stake, which they intend to keep at 51% as highlighted in Q1 FY26. Now this was about the news that we have seen, but onto the business highlights. How was Q1 FY26 for Clean Science? It was a soft quarter. There was a guidance cut, and onto the Q1 they missed estimates because of the softness in the demand that they've seen. But the good thing was that 25% of the revenue or top line came from the newer products, and company did see market share gains in few of their products. But the concerning point about Clean Science was onto the guidance and outlook. So management has lowered their full year EBITDA growth guidance to 15 to 18% versus 18 to 20%. So this was concerning, and we have seen the stock under pressure. And now Q2 is expected to be subdued, and good growth will be back from Q3, and real pickup that we will be seeing from the Q3 and especially from Q4 onwards. But the more clarity is expected after Q2. On to the analyst recommendation, if I were to talk about, you have 8 buy, 2 hold and 4 sell with an upside potential of almost 29%. So just a mistake by a broker has led to all the fuss that we have seen in the clean science. This is all of today.
All right, Varsha, thank you so much for giving us that detailed analysis on clean science. In fact, even the management has, posted on the exchange filings with regards to where the clarification stands. They've said that they've actually, their intent was to only sell 24% stake, and promoters are awaiting detailed explanation from Broker Spark Institutional as well. Aditya, putting everything aside as to what's happened with regards to where the mistake is concerned, but Clean Science as a company, if you've had the chance to, read about it, would you recommend for an investor to go ahead and invest right now? Or if somebody's already holding, should he or she continue to hold?
So Clean Science, there's a peculiar case of Clean Science. Whatever happened today is a separate story. But the IPO came at the peak of chemical euphoria in 20 and 21. The margins were at peak. And from there on, when the promoters sold, the stock has not recovered. So the stock has not practically given any return over the last 1.5 to 2 years because the business performance has deteriorated. The management has also guided that at least the next 6 to 12 months will not be good. Within the entire benzene specialty chemical space, I think Vinati Organics or a Deepak Nitrite continue to be my favorite, particularly because Deepak Nitrite's business performance has deteriorated this quarter. But the capex that is coming online will then mean that over the period of next 2 to 3 years, Deepak Nitrite is in a prime position to mostly double out their revenues per se. So from my perspective, whatever happened today, I don't take kindly to promoter stake sales. Promoter stake sale has happened, as well as the business performance will take at least 6 to 12 months to recover. So from my perspective, those who have the stock can hold on. But I don't recommend to initiate new positions in the stock. Let the stock recover, let the business recover per se. Then you can initiate. And mind you, the stock is not cheap; it is still expensive, even after the correction that it has seen. So from my perspective, the stock is an avoid for now.
Okay, Clean Science, and whatever trades at about. Trailing 12 months about 40 times, 41 times. But so actually, Aditya, I'm sorry, I would love to know, Deepak Nitrite also trades at about 40, 41 times trailing, right? So I heard you say that there's some capacity coming on stream which may help them double their earnings in 3 years, because it's a stock that's not given returns now for 3-4 years on a trot.
So we need to understand what really happened in Deepak Nitrite. In 2021, when the stock rallied massively, it priced in earnings for the next 2 to 3 years, and that's what is really happening. Time correction is happening. On top of this, the performance really deteriorated for the company. Now what is happening is we are sitting at the bottom with very low margins and practically no revenue expansion per se. Over the next 2 to 3 years, as the capacity starts to come online, you will see that revenue starts to pick up at the rate of 15 to 20% each year, at least for the next 3 to 5 years minimum. So capacity expansion together with bottom margins will then make sure that the earnings grow quickly for Deepak Nitrite. If you take the case of Clean Science, it is exactly the opposite. The company is sitting at about 40 to 45% margins, and there's no practical scope for any expansion on margins per se that is going to play out in Clean Science. So it's all about retaining the market share for Clean Science, whereas for Deepak Nitrite, whatever could have gone wrong has already gone wrong for the last 2 to 3 years. The premium for Deepak Nitrite is because of the strong track record of execution. Deepak Nitrite, mind you, in 2016, they took a capex which was equal to their market cap, and they performed really well. That's why the market is rewarding and not derating the stock per se. So in my opinion, Deepak Nitrite will continue to trade at a premium because of the strong execution capability that they have shown in the past.
Okay, stay on. So much more to talk about. Clean Science finally breaking into the green, but a lot of other stocks not quite. Nevertheless, the other set of companies in focus are the names which get impacted by palm oil prices, right? And Malaysian crude palm oil prices have risen since 16% actually, since May of 2025. Now, what kind of bearing does that have for a clutch of companies which have exposure to this commodity? Mahima Chonsa to talk about that. Mahima.
Right. So, Neeraj, as you rightly mentioned, last year we saw a significant uptick in palm oil prices till December 2024. Post December 2024, palm oil started to come off. Until May, they did come off quite a bit, almost 30%. But since that low in May, it is bounced back and risen 16%, and that's what is causing a concern for all of these FMCG companies and snacking companies. Now, this will have a major impact on FMCG companies, but before I go on to that, why are the prices rising? Well, first of all, there's surge in demand, and right now there's weak production that is happening in Indonesia, and they're not able to cater to that demand, and that's why there's low inventory as well, and that's leading to the overall price hike in palm oil. Now, there's contradicting view, because Malaysia right now, on the other hand, is trying, doing better in terms of where palm oil stands. Indonesia, where there is weak production, whereas Malaysia is right now seeing improved production and inventory levels as well. So there is a contradicting view here. But we'll have to wait and watch out for as to how palm oil prices fare in the next few quarters, because that will be a deciding factor as to how margins fare for both FMCG companies as well as snacking companies, because they will have an immediate effect on their overall margins, because palm oil is a key raw material from them. Palm oil is used in something like chocolates, biscuits, cake, also as washing powder, soaps, cosmetics, noodles, etc. And it can form up to 15 to 20% of overall raw material in any FMCG product. Now, in terms of what companies could get affected, and of course, the impact here would be that margins will remain under pressure because your raw material cost will go up, and because of that, FMCG companies might have to take price hikes, and then once the price hikes are taken, the volumes for these companies might again come down, which has seen a recovery in Q1. So it's like a vicious circle for FMCG companies. Now, what companies could get impacted because of this? Godrej Consumer Products, Hindustan Unilever, Nestle, Britannia, Imami, Marico, Tata Consumer, as well as Dabur and Jyoti Labs could bear an impact of this. Now, in terms of not just FMCG companies, also snacking companies might get impacted, because almost 50% of their raw material comprises of palm oil, because they use palm oil to fry snacks. Now, this means that they'll either have to reduce their grammage or maybe take a price hike. And something like a Bikaji Foods has already taken 3 to 4% price hikes in the past 2 quarters. And because of this, the 2 companies that might get impacted includes Bikaji as well as Gopal Snacks. And lastly, in terms of what you can expect going forward, and what are the key considerations as to what happens to palm oil? Well, first is harvest season. That will be a crucial thing to watch out for. And second one, the B50 implementation of biodiesel norms in Indonesia will be a key monitor, because that will determine the overall impact on palm oil prices. In fact, we spoke to the Bikaji management, and the entire conversation was around how palm oil prices are expected to maybe rise or stabilize going forward, listening to what he had to say.
So, in fact, the worst was Q3 of last year, and that's when prices went on and on. And then on top of it was the import duty, which moved up from 5 to 20%. So that again was an unexpected move. So what we as an organization did, and perhaps the industry did, was we were prepared for the worst, and we have seen the worst times, which actually now has passed by. So going forward, we don't see much of price increase on account of this oil prices. They are pretty much stable, in fact, down with what the worst was, and is trading at around 130 plus minus.
One, Indonesia has decided to go from B40 to B50. That's one part. Second part, American biodiesel policy. They said they are going to use about 6 million tons of the soybean oil for the biodiesel. Third, the sunflower yield in Ukraine, Russia is lower than what was expected. And fourth is hedging. The Chinese hedging fund is buying in a big way the palm oil. These are the 4 factors which has taken the market up in the last 1 month. If you look at palm has gone up by $80 to $90. Yeah, CPO gone by 85. Soybean about lowest was at 25, and sunflower has gone by 50. This is the 4 reason which has taken the market up. But what personally I feel, if we have reached at the saturated level, market may not go up from this level, maybe on sideline. But I'm not expecting market to go further. And another thing, to look at the demand for the world produce about 260 million tons of the vegetable oil. Out of that, about 60 million is being used as a biodiesel. So from food is moving to the energy. And that's the reason availability of the oil is reducing. And that is also one of the factors why the prices are going up.
Right. Aditya, any of these companies that you're liking, especially with the kind of commentary that's come in Q1, because things are improving. There's volume recovery that a lot of companies saw. In the staple space, specifically FMCG, any companies that you're finding attractive?
So from my perspective, these companies are all clear avoid. They are operating on a very thin margin per se, and on top of this, cyclical premium hikes, cyclical hikes with respect to input costs will then mean that they will obviously reduce the grammage, which then will translate into a temporary slowdown in volumes per se. So from my perspective, valuations leave no margin of safety, be it Gopal, Bikaji, or then Pratap Snacks. All of those companies are trading at a wafer thin margin. I would tend to avoid these companies within the FMCG space.
Okay. This morning, Kush, normally your partner in crime, Parag Thakkar, had a couple of stocks on which he was very constructive. Would love to know if they look good from a charts perspective. One of them was Bajaj Finserv, the other one was Astral. How do they look on the charts?
Yeah, I did happen to, in fact, catch that commentary, and I was looking at some of these names. Not entirely convinced on the structure on Bajaj Finserv, at least from a trading momentum perspective. There was a range that was, being respected, 2,000 on the downside and about 2,075 on the upside. That was broken. Now the stock is trying to regain that. So from a near-term perspective, as long as it enters the 2,000 territory again and sustains above that for some time, I wouldn't really, look at it for a trade. Even then, on the upside, the 2,075 resistance might, just kick in. So perhaps some more, momentum is required to trade it, from a very near to a medium-term perspective. As far as Astral goes, yes, this one, could see, good days ahead. The reason is that there was a sharp fall, from the last about 2.5 months. But for the last 4 sessions, you've seen very good price action, very good volume action. 20-day moving average taken out yesterday, you're looking at about 1,500. If that is taken out, 1,575 kind of move as well. So there is some lost ground that, it could cover in the coming days. Stop loss for this one comes in at 1,380. So again, from a near-term momentum perspective, I would prefer Astral. Bajaj Finserv, as I said, might just have to cover some more ground.
Okay, Kush. We'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Before we hit that break, though, on the sidelines of FICCI's annual summit, SEBI chairperson said that the regulator is looking into the derivatives contract durations. Also proposed a pilot project for pre-IPO trading. Listen in.
See, improving the tenure is really means that, whether we can sort of have longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So and we'll have a consultation.
Yes. Nothing will be on, on this part of the moment.
With a booming IPO market, investors are eagerly anticipating what is next. Yet, pre-listing information is often not enough for investors to take an investment decision. Can we think of an initiative on a pilot basis for a regulated venue where pre-IPO companies can choose to trade subject to certain disclosures? Here are some key challenges. Which are the unnecessary processes and pain points that cause avoidable friction in fundraising, disclosures, and investor onboarding, and how they can be removed? Which emerging areas, products, and asset classes can be developed for creating both demand and supply of capital.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Oh, wow. Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
force behind some of India's most respected business empires.
Welcome back. Thanks for staying with us. And in today's Bull versus Bear segment, we look at Astral. Puneet is here with the Bull versus Bear segment. Puneet, take it away.
Well, thank you for that. So it's definitely been volatility in the PVC prices, and that's been one of the key pain points for Astral in the last few quarters. But we've seen the new anti-dumping duty being put on the PVC resin imports, and that is a key benefit to all the piping players, including Astral, and that's one of the key positives which has led to a revival of the stock from roughly about 1280 or levels to 1400 in just the last 4 days. So essentially that's one of the first bull cases. We've seen quarter one volumes being very weak because of the volatility in PVC prices. They've also reported inventory losses of 25 crores in quarter one, and hence that'll be something to watch out for, because the transition for almost the first half of quarter two has also seen some volatility in PVC prices. So it'll be interesting of what happens in quarter two, whether even if we have a flat performance, I think the street will take it very positively. When you look at the second bull and bear case for this one, expecting both volume as well as value growth arising from anti-dumping duty is what the management had said. They are expecting both of these aspects to come forward in FY26. For FY25 specifically, as well as over the last 5 quarters, essentially, they reported almost 100 crores of losses in inventory because of the volatile PVC prices. So it could subside going forward. That'll be one of the key hopes. And the second aspect, that volume as well as value growth will be driven now that anti-dumping duty is imposed. The third bull and bear case for Astral is, of course, the reaffirmation of the double-digit volume growth guidance. Now, this was one of the most focal points for Astral going into quarter one, where if FY26 could at least be better and go back to the historical levels of double-digit volume growth, management has reaffirmed that aspects. They've also gone on to say that they are okay to let go of 150 to 200 basis points of margins, and that could be a key negative in the near term. But definitely it's a structural positive, gaining their market share back, which they've lost over the last 4 to 6 quarters. And finally, on valuations, now here it is it's quite clear that at 53 times price to earnings for FY27, the valuations are quite expensive for Astral. It's also important that someone like a Supreme Industries trades at 42 times price to earnings with a similar business model. So while there are some changes, of course, with Supreme in consumer durables as well, that is one of the key points. But definitely the bull case stands through for Astral for now with the new anti-dumping duty implementation. The one last bit would be the implementation of BIS. If it happens in FY26, that'll be one of the most key positive for all piping players, including Astral.
Thank you, Puneet, for breaking that down for us. I'll take this up with Aditya. Lots happening in that space. Plus, Puneet mentioned about management saying that, double-digit volume growth, but that will be, with a hit on margins. And valuations don't look cheap for sure. What's your view with regards to where Astral stands? And if you wanted to play this theme, would this be your pick? Adi, I think you're on mute.
It's a great company. It's a fantastic management, but at a wrong valuation. I think the erosion in margin will then tend to mean that there will be either a valuation derating or time correction in the stock. The stock already has had a time correction this year, and over the last 1.5 years hasn't given any return per se. So from my perspective, I would tend to avoid this company. Let it be clear where the margin settles down. Once the margin settles down, then you have to look at the valuation. And I don't think that the valuations are cheap in this sector, in this entire sector. Even Supreme trades at about 42, 43 times, which I don't think is really very cheap and leaves some margin of safety. So from my perspective, I would again tend to avoid this entire sector because of volatility in prices and a premium valuation that these companies command.
Okay, all right. So that's with regards to where Astral stands. We're also joined by Rajesh Palavia, Senior VP at Senior VP Technical and Derivative Research at Axis Securities, joining us now. Rajesh, your view quickly on the charts as to where Astral is concerned?
Stock was in downtrend, but since last couple of trading sessions, we have seen a very strong recovery from the lower band of this corrective move. Looking at the near-term pullback, we believe that if stocks continues to trade above 1400, then we may see some more buying action to emerge in this counter, and then possible upward target towards 1450, 1480 would be there in the near-term perspective. But we have already seen 4 days of up move. So if any cool off comes around 1400, would be again opportunity to buy this counter for near term perspective. One should keep a strict stop loss of 1380 if you're buying around 1400 level.
Aditya, while fully understand you don't like Astral, any other PVC pipe makers or any other way you would play PVC pipes, because it's been through a bit of a tough cycle. So how should one play it, therefore?
One should not play it at all, in my opinion.
Okay.
The valuations,
Simple as that.
the entire FMCG pack, I don't think that it's a defensive pack. Mutual fund managers tend to go to the defensive pack when they don't find any place to hide, and when they have a huge inflow of SIP money coming in. From my perspective, I simply cannot give a valuation of 40, 50, 60 times multiple to have a mere volume growth of 5 to 10%. That is too expensive to buy. Rather, I would tend to go towards the infrastructure space per se, where volume growth in the near term has slowed down. But over a longer period of time, that is a space, if the government continues to invest in infrastructure, that's where I want to be, not within the FMCG space where valuations are sky high.
Hear you loud and clear, infra and maybe not some of the other spaces. Let me talk about insurance as well, Aditya. You track the sector closely. This cut with regard to GST, how much of a benefit and who likely will benefit the most within the insurance pack? Also, will we start to see sharper growth in insurance as a result of this? You not only track the sector closely, you have a great pulse as well of this. So give us that perspective.
Only government's narrative of 0% GST wins here. I don't think that there will be, even if the government reduces the GST rates to 0%, the input tax credit will then go away. And that will incrementally mean increase in input costs for companies, which will then mean that the companies end up hiking the premiums. Net, the entire 18% will not be moved to the customer, and slowly and steadily the premiums will come back up again. Only if the government comes to a solution where either they move the GST to 0 or 5% and have some sort of input tax credit, will the insurance premiums come down. So from my perspective, this is not a huge positive which will lead to stronger demand either for life insurance or health insurance. Here, only the narrative that the GST rates have been cut, that will win. I don't think this is a real positive for the industry in terms of lowering the premiums and increasing the coverage for any insurance product in the country.
Okay, a couple of less known names doing very, very well in trade. Jupiter Wagons, Jamna Auto. Actually, Jamna Auto not doing as well, but has done fairly well over the last couple of days of trade. Rajesh, do you have a view on any of these?
Jupiter Wagon, yes, there is a breakout of falling trend line on the near-term chart, and looking at the structure, we believe that if it's continues to trade above 335, there could be some more pullback action we may see in this counter. Though stock is in downtrend, but very strong recovery is taking place from the oversold trajectory. 335 is the important level now. If it's continue, I think 360, 365 would be the next target for the stock.
Rajesh, what about your top picks for the day?
So two stock idea both on the buying side. First one is from the pharma space. Dr. Reddy is looking attractive. If we analyze the short-term structure, stock was moving in falling channel on a weekly chart. There is a breakout of falling channel on the weekly chart. Near-term chart is showing sign of strength. So we believe that Dr. Reddy one can look to buy. Possible upside we may see towards 1330 to 1340. On the downside, 1258 should be your stop loss. Another stock that we like is from the mid cap basket, that is Sirma SGS. Stock is making higher top, higher bottom formation across all time frame, and stock is almost trading near to its all time high trajectory. Looking at overall structure, we believe that Sirma SGX can regain strength more, and then we may see further new all time high trajectory for the counter. 770 we are projecting target for near-term trading perspective, and on the downside 736 should be your stop loss.
Okay, all right. Those are the picks that Rajesh has picked for the day. But it's time for some of the buzzing stocks in trade today. And coincidentally, Sirma SGS is a Paras Defense, and Railtel is on Jasmeet's list. Jasmeet, what is the news flow with regards to where these counters are concerned?
Well, right, yes, thank you for that. JP Morgan came out and gave a note on Sirma where they have hiked the target price to rupees 950 from initially 800, and that's how the stock is buzzing in trade today. What they say is they have baked in the QIP which the company has recently raised of 1,000 odd crores, and they have increased the estimates. While they see the proceeds from this QIP will be used for merger and acquisitions, and they also believe that this will not be used for merger or acquisition of any mobile segment, given that they have reasonably lower margin, and they believe the previous acquisition the company had done had increased the margins of the company. So well, this is all about Sirma. The next one on the list is Paras Defense. While the company has received an order worth 45 odd crores. The order is from BEL, and the order is to supply signaling and supply chain transformation items. While they also see that the order will also be supplying a multifunctional sensor systems. While the last one on the list for today is Railtel. While the company gets an aggregate order of rupees 50 odd crore, the first one is from Government of Odisha of 15 odd crore, while the company also received an order worth 34 crores from Kerala IT Hub. While the company had recently also bagged a huge order of 230 odd crores on August 5th. So these are the stocks to be kept in my radar.
Jasmeet, thank you so much for giving us those details. Rajesh, what about Paras Defense on the charts?
So structure is looking, on the recovery side. If we analyze on the longer term time frame, stock is holding strength, but on the near term to short term perspective, the major resistance is placed at around 720, 750 zone. So until the stock not crosses this level, I think some more consolidation in range of 630 to 700 would be there for some more time. Any breakout above 700, 720 zone may attract, fresh buying interest in this counter, and then possible higher target towards 780, 800 we may see for Paras Defense.
Okay, the other one which is also buzzing, and Rajesh, give us a view with regard to an IDBI bank. The stock is up 9%. Of course, that there is a hint that's come through, or rather much more than a hint that's come through from the DIPAM secretary, which seems to suggest that IDBI is close to, or rather the government is close to a divestment from IDBI. Due diligence is on, and that's the reason why we saw the kind of spike we did. But Rajesh, do you have a view with regard to this one before I ask Aditya for a view?
So, Harshad, the major hurdle for this counter on the higher side is placed at around 105. Any major move would trigger above 105. If it crosses 105, then the next target would be around 120 to 125. At this juncture, I think a very strong spike in today's session. So my advice would be those who have bought at lower level can book some partial profit around 105 and hold partial position. If it's able to give breakout of 105, then hold the position for next target of 120.
Yeah, do you have a view with regard to an IDBI? Trades at around 1.7 times book, if I'm not wrong, and just early teens in terms of price to earnings, if that's one of the metrics you look at.
If I were a bank, I would love to buy IDBI for its liability franchise. It has a fantastic liability franchise. But it's been 4 or 5 years since the government is already talking about IDBI banks divestment, and it's not really happening. So I don't think IDBI is an investment candidate. It is just a casino. The day the government divests IDBI, the stock will rise through the roof. So from my perspective, I don't know when that is going to happen. Too many promises have been made by the government and it has not been fulfilled. But it is a very, very good candidate for any bank to take over because of the liability franchise.
Smart move today for sure. Let's see how this shapes up. Well, we spoke to other experts during the course of the day today. Samit Vartak, of course, said that this market is not in a time zone wherein you have a top-down approach. He believes in being a bottom-up buyer and looks at pockets of value. Listen into what he had to say about pockets of value in the market.
India is sort of bombarded with so many of these worries, and we have underperformed. I mean, last 1 year we underperformed some 26% compared to the emerging market. I mean, so that's always a good time to find opportunities. And I think there is no dearth of opportunities. Maybe some concern about valuations, but if you're looking for great businesses, high growth businesses, I think there are plenty available. So, that always keeps you excited. If you start looking at top down, it's very difficult to find, broad opportunities across all these sectors. I think that time is over. If you see the last, 4 years or 4 or 5 years post COVID, there has been indiscriminate rally across many sectors. Last year or so has been very different, where there are only few pockets which are doing well. So I think this is a time for, anyways, I am a bottoms up stock picker. Very difficult to find sectors, but there are opportunities in data centers, there are opportunities in battery storage, there are opportunities in smaller defense companies which are emerging.
Okay. The other stock that's doing well in trade today is Jupiter Wagons. Now it's in focus as the company has received a 215 crore order for Vande Bharat trains. The order will be executed within 2 years, says Vivek Loya, MD of Jupiter Wagons. He also highlighted expectations of a strong order book from the private sector. Listen in to a slice of that conversation.
Supplies from the government, also from the railways on the wheels has improved. We are now looking forward to the new round of wagon orders from the railways, which we are expecting before end of this year. I think on the private side, our order books are very healthy. We recently got an order of close to about 300 crores from GATX. We expect further strong order book on the private side, and the execution there is also very strong. So going forward, now since the wheel set discussions have sorted out, we expect our revenue numbers to be strong going forward. And as and when the orders from Indian Railway comes in, we are all set to ramp up our production. Because overall supply chains now, we have put in a lot of investments over the last 2 years. On the wheat project, we are investing close to about 2,500 crores. So, all the bottlenecks which we have, now we are trying to ensure that those will not remain in future.
All right, so that was the management of Jupiter Wagons indicating a strong order inflow from the private sector. Rajesh, the counter, that's topping the charts in terms of where the entire market breadth is concerned is Nava Limited. Strong volumes coming in, plus it's zooming in trade up 12% as we speak. Anything specific that you're seeing there, and what is the kind of support and resistance that you're observing?
The stock is almost at its all-time high trajectory and a very strong buying action, especially in today's session with the volume. The kind of breakout which we are observing on a daily chart is showing us a sign of continuation of further more up move. 640 is the immediate support for the stock. If it's manages to continue to trade above this level, I think another round of buying action could trigger in this counter, and then 720 would be the next target. So 640 needs to keep as a stop loss, as it's a strong support area for near-term perspective.
Okay. All right. So that's the view with regards to where Nava is concerned. But Rajesh, your buy today, sell tomorrow calls?
So Cummins India is looking attractive. Stock is moving in upsloping channel on a weekly chart, which is a sign of sustained buying action is taking place in this counter. Stock is outperforming to its peer companies, and looking at the near-term, short-term structure, we believe that this counter has potential to continue furthermore upside. So we are projecting target towards 39.30 to 39.50 for BTST point of view. On the downside, one can keep stop loss towards 3840.
Okay. Rajesh, what about something like a Lemon Tree? It's second day of trade for this counter. It's doing very well, up 8%. How are the charts faring? And if somebody wants to enter right now, do you think they can still make an entry and see some gains?
Yeah, especially in today's session, very strong buying action has been witnessed in this counter, and the way stock managed to give breakout of its January 2025 swing high. I think the fresh buying action is witnessed in this counter, and looking at the near-term, short-term structure, we believe that, on the higher side, 180 would be the next target in this counter. So one can hold the position even in minor dip, one can add with stop loss of 162.
Okay, all right. So that's with regards to where Lemon Tree stands. But, the counter from the FMCG pack, comparatively a smaller counter that's been doing well is Zydus Wellness. Now, the urban demand is likely to pick up from here on. And that's the word coming in from Tarun Arora, the CEO and director of Zydus Wellness. Listening to what he had to say.
Last 4-5 quarters, we've seen rural improve bit by bit, and with this actually extraordinary rains this year, it should only get better. So unless some crops are impacted, but overall, I think it's good news for rural. Overall, things should get better. Government is also very committed to supporting rural income, so it will only get better. The good thing is the urban, which has been under pressure and been taken for granted at many times. So several of these actions which have happened should also aid urban consumption. Urban economy was under a lot more pressure because it is the largest part of the organized consumption that happens. And I mean, for years I've seen 30% of consumers contributing to 70% of the packaged products, as reported by likes of Nielsen and other formats. So clearly that is a piece which has been under pressure. That's going through a lot of churn because of consumer behavior shifts, channel shifts, and several other challenges of inflation going up. And this is something which should directly get aided by some of these actions.
Okay. So, of course, Mahima marked Lemon Tree and what it is doing, but the likes of the couple of others, like the stocks are flying around too. I wonder if the other hotel stocks are doing that. So the likes of Indian hotels or a chalet, or is it only a lemon tree restricted move? Well, I think it's only Lemon Tree because the others are certainly not doing that. Rajesh, it's maybe a short burst of data, but Ola Electric has been such a popular stock the last 2 or 3 days. This fall today, I'm guessing it's profit booking. Do you think it can extend the losses, or is this a fall that is getting bought into?
So stock was in highly oversold trajectory. Some pullback action from oversold trajectory was there, but still not able to surpass its immediate resistance zone of 52 level. So I think 52 is the immediate resistance and supply zone for the counter, though stock is in downtrend across all time frame. So I think still one needs to wait to take any position in this counter, because until unless stock not crosses above 50 to 55 resistance zone, I think trend is likely to exhibit on the weaker side only, and maybe some more profit taking we could see in this counter. Those who have bought at lower level should trail their stop loss now at around 46.5. If it's able to hold that level, then you can hold the position, and if it slips below to 46.50, I think one should exit again.
Okay. Rajesh, the other thing is KIOCL. That stock has been on a roll the last few days, weeks. I mean, if you look at the 1 month chart, it's had a phenomenal uptick, right? 1 week also has done really well for itself. Any thoughts here?
So stock managed to give breakout on near term as well as on the short term chart. The way stock is shaping up on the weekly chart, there is a rounding bottom sort of formation is taking place. Breakout above 455 may give breakout of this rounding bottom formation, and above 455 we may see a further leg of rally towards 485 to 500 zone also. So one needs to watch this 455 resistance zone, whether stock able to take out or not. At this juncture, we would advise those who are already long in trade can trail their stop loss towards 425.
Okay, so of course, SEBI, as part of the FICCI event today, suggested that they are planning to raise the tenure maturity of equity derivatives. Of course, this is still not implemented and still likely at a conceptual stage, but UBS has picked up on this and they've said that they believe that if weekly expiries are removed, this could highly impact BSE's profitability. As per UBS estimates, every 10% drop in options premium, in terms of options premium average daily turnover, can impact 6% of BSE's profitability. That is large, and that's why you're seeing the knock on the stock. Rajesh, quick view with regard to a BSE before I ask Aditya for a 20-second view on it.
So yeah, based on this news flow, I think yes, there is a substantial profit booking is taking place in this counter, and now stock is trading near to its important support area of 2300. If it breaks below 2300, I think furthermore supply pressure towards 2220 we may see in this counter. So at this juncture, until the stock not crosses about 2400 level, trend is likely to exhibit on the weaker side.
Seconds, BSE, would you buy?
Regulatory overhang with high valuation, answer is no.
Okay.
All right, so that's with regards to where BSE stands. But Aditya and Rajesh, thank you so much for taking out the time and giving us those insights. Well, we're just a minute away from market close. Let's try to pull up as to how the markets have done today. Well, Nifty 50 and the Bank Nifty both at the same levels to where we started. In fact, Nifty 50 has slipped now, up only about 0.1%. The Bank Nifty also, closing almost flat in trade today, and very narrow range of trade for both of these counters. Let's try to pull up the heat map and see what counters have done today. Cipla, Dr. Reddy's, both pharma names topping the chart, up 3%. Dr. Reddy's up 2.5%. The Bajaj Twins also did well in trade today. Some names like ICICI Bank, Hindalco, Reliance, L&T in the green and topping the chart. But something that did not fare well today is Coal India, down by about 2%. Some consumption names like Tata Consumer, Eternal, HUL, Nestle seeing profit booking after the kind of rally it saw yesterday. Let's try to pull up the sectoral heat map and see as to where we're closing there. Nifty Pharma still leading the pack. The healthcare also up around 1%. Nifty Realty up 0.5%. Nifty Oil and Gas up 0.3%. But FMCG seeing profit booking down by about 0.7%. There's Nifty Energy, which is down 0.5%. PSU Banks also down by about 0.5%. Let's try to pull up the advanced decline ratio and see how broader markets have done. There you go, 111 odd advances versus that of 111.85 decline. So that ratio is now almost 1:1.
Yeah, it reversed a bit in fact at the end.
Yeah.
So that doesn't look pretty at all. And let's pull up the Nifty mid cap and small cap indices as well. We saw some of that steam being lost towards the fag end of this expiry session. Let's pull up the small cap index as well. There you go, clearly visible there. We've closed at the absolute flat line. The low point of the day in fact as well. So something to note that we've lost some strength towards the fag end. Going to be interesting to see how tomorrow plays out. But quickly on to some stocks which were really buzzing, and some of the insurers, Niva Bupa, Go Digit, New India, some of those did fairly well for themselves. Of course, towards the fag end again, some bit of steam lost, but let's quickly pull those up. Yeah, 2.5%. This one has done fairly well for itself till close, and this one too, decent outing for a New India. Also, then you had the likes of a Jupiter Wagons and India Cements, a Prince Pipes. So those piping companies, including an Astral, were in focus, and they also have done fairly well for themselves. Then there were some capital market plays as well. While that's coming on your screen, let me quickly tell you, the likes of an NSDL, a BSC, and Angel One, they were buzzing, not necessarily in the same direction. So BSE, of course, was one of the big casualties of the day. So was Angel One, very similar kind of chart structure. But NSDL, surprisingly, has done very, very well, 5% higher. Some of the other names are Nazara, a Delta, an HLE Glasscoat, a Carborundum, a Jamna Auto. Some of those names also have done okay. They've buzzed. So Nazara has recovered fairly well from the lows. Delta Corp still was down around 3% odd. Jamna Auto also saw around a 5% odd lower. You saw Carborundum, which is down 4.5%. Mind you, this one did very well in trade yesterday, so wasn't focused. And IDBI Bank was the last one on my list, so that one has done phenomenally well. It's had a great day, especially after what the DIPAM secretary said. The BSE 500 top gainers, top losers, some of those already covered, but that's the full picture for you. Out of time on this edition of the show. Quickly on to what we have to watch out for tomorrow. Let's quickly pull that up. There you go. So that's of course on the macros. Jackson Hole starts. That's the big one you want to keep your eye out on. Also, let's look at those dividend adjustments as well for you to consider. All of those. And with that, completely out of time on India Market Close. From Neeraj, Mahima, myself and everyone who puts this show together, thanks so much for watching. Market Express takes all the action forward.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the expert.
Welcome, you're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. So viewers, benchmarks indices ended a rather range-bound day of trade near their intraday low, closing almost flat to the day's opening levels. The Nifty sustained trading above 25,000 mark while the 30-pack Sensex concluded above 81,000 levels with a positive bias. ICICI Bank, Reliance and L&T uplifted the frontline indices. On the other hand, Eternal, Power Grid and HUL added the pressure. The sectoral picture at close appeared mixed with half the sectors in the red and half in the green. The top sectoral gainers of the day were Nifty Pharma, Realty and Finance, while Nifty FMCG, Energy and Auto emerged as the top losers. Advanced decline ratio ended skewed in favor of the bears. India VIX eased during today's trade. The group of ministers led by Bihar Deputy Chief Minister Samrat Chaudhary concluded its second day of discussions endorsing the centre's proposal for a two-rate GST structure of 5% and 18%. Now the panel supports scrapping the 12% and 28% slabs, introducing a 40% rate for sin goods, high-end cars and online gaming. The group of ministers will submit its final report to the GST Council, set to meet on September 18th and 19th to finalize these reforms. The group of ministers on GST rate rationalization has proposed scrapping the existing 18% of GST levied on insurance premiums paid by individuals. The measure is aimed at making insurance products more affordable and boosting penetration during the discussions. Some states expressed revenue concerns and differing views on the proposal. Questions were also raised over whether the benefit of GST relief on premiums would be passed on to the consumers. So stocks of insurance companies have gained between 2 to 3%. Shares of Clean Science and Technology hit a 52-week low on Thursday after a broker to a block deal erroneously sold twice the equity on offer. The promoter sold equity via large trades. The dealer to the transaction, Vendis Sparks, sold extra shares in the open market. Sources have told NDTV Profit that the broker will compensate for the extra shares sold in the trade. Around 90 million shares were traded in block deals compared to 25.5 million, which is 24% of the equity planned. So the floor price of the offer was 1,030 rupees a piece, nearly 13% discount to Wednesday's closing price, and this is according to Bloomberg. So the promoter stake is 74.97% as of June. SEBI may launch a pilot pre-IPO trading platform, says Chairman Tuhin Kanta Pandey. Now it aims to help investors trade shares with better disclosures. The platform will simplify fundraising and reduce investor issues. It targets new products and asset classes to boost capital markets. Parliament has passed the Mines and Minerals Amendment Bill 2025, updating the 1957 Act. Leaseholders can now add critical minerals like lithium and gold to existing leases without extra cost. The bill removes 50% limit on mineral sales from captive mines. It also sets up an authority to regulate mineral exchanges. This is positive for stocks like GMDC, NMDC and Coal India. Palm oil prices are climbing, with the Malaysian crude palm oil up 16% since May 2025. Weak production in Indonesia has tightened supply, driving demand. Malaysia's improved inventory offers some relief, but prices remain high. The snacking industry, heavily reliant on palm oil, faces margin pressures. Ather Energy surges to number 2 in electric two-wheeler sales. The latest Vahan data reveals a major shake-up in the electric two-wheeler market. Ather Energy has climbed to the number 2 spot, driven by strong expansion in North and West India. TVS Motor retains its leadership with a 25% market share. Meanwhile, Bajaj Auto has slipped to number 5 with a 12% share, while Ola Electric holds a steady at number 3 with 16%. Hero MotoCorp makes a notable leap, securing the number 4 position for the first time. Kaveri Seed stock surged 7% intraday, boasting 91% gain since listing. In Q1 of FY26, the company reported a 7% revenue rise to 859 crore rupees. EBITDA climbed 14.5% to 338 crore rupees, with margins expanding to 39.4% from 36.8%. Net profit has grown to 12.6% to 326 crore rupees. Growth actually was driven by higher volumes of non-cotton hybrids, with rice, maize and vegetable segments performing strongly. New cotton products are expected to boost the volumes in FY26. Jefferies has projected a 24% potential upside for Bajaj Finserv on initiation, as it regards the company as grooming financial venture. The brokerage has rated the stock buy and given a target price of 2,240 a piece. Bajaj Finserv is also holding the company over the financial business and is set to gain advantage from the lower interest rates and improve profitability in its insurance business. The company is also investing in new businesses like healthcare, mutual fund and technology, which will add option value, according to Jefferies. GAIL expects a pipeline tariff hike to 79 rupees per unit by September. South Korea and China plan to cut petrochemical capacity to boost the margins. Now, these changes could revive the struggling global petrochemical sector. GAIL's petchem business, loss-making in 8 of 12 quarters, may benefit. Coffee Day Enterprises is brewing a strong comeback, with its stock hitting an intraday high of 19%, gaining 23% over 5 days and an impressive 118% over 6 months. The latest earnings show a revenue of 269 crore rupees, which is up 3% year-on-year, and a robust EBITDA growth of 77%, reaching 76 crore rupees. Net profit has turned positive at 28 crore rupees compared to a loss of 11 crore rupees last year. This is boosted by 18.58 crore from loan settlements and 16.4 crore rupees from the sale of invoked CDGL shares. Nuvama Institutional Equities has initiated a buy rating on Hexaware Technologies with a target price of 950 rupees, highlighting the company being in a sweet spot of growth and value. Hexaware's revenue growth is expected to outpace the industry, which is driven by its strong presence across multiple verticals and a loyal list of coveted clients. Now, the company maintains stable margins and a robust cash flow profile. Following a recent correction in its stock price, Hexaware's shares are now even more attractive to investors, making it a compelling opportunity in the tech space. Syrma SGS recently approved raising 1,000 crore rupees through a qualified institutional placement at 699 rupees per share on August 12, 2025. Now, the company has entered a joint venture with Shinyu Electronics, which is holding a 75% stake to manufacture multi-layer printed circuit boards, including flexible PCBs. Now, additionally, Syrma has formed a strategic partnership to manufacture Dynabook laptops, a leading commercial PC brand from Japan, producing diverse range of laptops in India. Zee Entertainment is currently facing a lawsuit filed by Aditya Birla Finance in the Delhi High Court. The dispute centers around loan of 134 crore rupees granted to City Networks, an Indian cable television and broadband service provider. ABFL seeks enforcement of a letter of comfort which Zee Entertainment reportedly issued. However, Zee contests the claim, arguing that the letter of comfort does not constitute a legally binding guarantee. Now, notably, an arbitral tribunal rejected all the ABFL's claims against Zee Entertainment on May 12, 2025. The monsoon session of Parliament has come to a close. Parliament's monsoon session passed 26 bills despite frequent disruptions. Lok Sabha cleared 12 bills, Rajya Sabha approved 14. Key bills included those for mining, sports and taxes. Opposition protest over voter fraud caused adjournments. Meta has paused hiring in its artificial intelligence division after bringing on board over 50 researchers and engineers. The company says that this is a routine planning move to build a solid structure for its super intelligence efforts and align budgets. However, reports suggest that the freeze may be due to budgetary considerations and the rapid pace of recent hirings. Air India and Air India Express reported a combined loss of 9,568 crore rupees in 2024 to 25. Now, Akasa Air and SpiceJet also faced losses, while Indigo earned a profit of 7,587.5 crore rupees. Air India's debt has reached 26,879.6 crore rupees, with Indigo's at 67,088 crore rupees. Federal Reserve officials expressed worries about the job market and inflation at the July 2025 meeting, but decided against cutting interest rates, according to released minutes. Two Fed governors pushed for a rate cut, highlighting a split in views among policymakers. The central bank agreed to keep rates steady while closely monitoring economic risk. Policymakers noted rising threats to the economy that would warrant monitoring, though they largely agreed that their current stance was the appropriate way to go forward. The MPC minutes were published a short while ago and show members exercising caution amidst continuing economic uncertainty because of the tariffs, while monitoring transmission of the cumulative 100 basis points rate cut so far. The neutral stance will provide monetary policy the necessary flexibility to respond to the evolving domestic and global economic conditions, according to the minutes of the MPC meeting that was published yesterday. RBI Governor Sanjay Malhotra also said that GDP growth is certainly lower than what we can achieve. Uncertainty in external demand driven by tariff and geopolitical uncertainty remains the major drag on growth, as it also hinders private investment intentions, which is yet to show visible signs of improvement, the governor said. A parliamentary panel has recommended affordable cancer insurance and standardized pricing for diagnostic packages. The panel suggests extending price caps on essential anti-cancer drugs to vaccines, immunotherapy, and oral chemotherapy. It also recommends establishing more cancer hospitals and dedicated screening centers. The goal is to make cancer treatment more accessible and affordable for a wider population. Sony has announced a $50 price increase for all PlayStation 5 consoles in the US, effective August 21 of 2025 due to rising cost and a slowing video game market. The PS5 base model will now cost about $499.99, while the high-end PS5 Pro will retail at $749.99. Isabel Tomatis, Sony's Vice President of Global Marketing, cited a challenging economic environment driven by fears of US tariffs on Japanese goods, currently at 15%. Accessories remain unaffected, with no further price hikes planned for other markets. Other companies like Nintendo, Microsoft, Home Depot, Adidas, and Nike have also raised prices due to tariffs. The Cabinet Committee on Security has approved the procurement of 97 light combat aircrafts for the Indian Air Force. The aircraft will be manufactured by Hindustan Aeronautics. The procurement includes associated equipment and will boost the Indian Air Force combat capabilities. The move is part of India's efforts to modernize its defense forces and enhance national security. Delta Airlines and United Airlines have been sued by passengers who claim they were charged extra for a window seat but found themselves sitting next to a blank wall. Now, the lawsuits filed separately against the US carriers seek millions of dollars in damages for more than 1 million of customers of each airline. They said that the companies do not flag that the seats are windowless during the booking process, even when charging a premium for them. Russia has launched hundreds of drones and missiles on western Ukraine overnight in one of the heaviest bombardments in recent weeks, Ukrainian officials have said. Strikes were reported in Zaporizhia, Dnipro, Petrovsk and Lviv, where one person was killed and others injured. Foreign Minister said that strikes highlighted why diplomatic efforts to end the war and stronger air defenses were critical. It comes as Ukrainian President Volodymyr Zelensky suggested Switzerland, Austria and Turkey as possible ventures for potential peace talks with his Russian counterpart Vladimir Putin. A federal appeals court has ruled that President Trump's administration can terminate temporary protected status for over 60,000 immigrants from Nicaragua, Honduras and Nepal. The U.S. Ninth Circuit's decision, made without legal reasoning, allows the government to end these protections while a legal challenge continues. Protections for Nepalis ended August 5, with Hondurans and Nicaraguans losing theirs by September 8. Now, the Department of Homeland Security claims this restores immigration system integrity. Critics call it a power grab. Big news from Indian cricket. Shreyas Iyer has been named the new ODI captain, set to replace Rohit Sharma. The stylish middle-order batter, known for his leadership in the IPL with Kolkata Knight Riders and Punjab Kings, is poised to lead India in the 50-over format, potentially starting with the Australia series in October. With Shubman Gill focusing on Test and T20 duties, Iyer is seen as a long-term choice to steer India towards the 2027 World Cup. Newcastle United's pursuit of Brentford striker Yoane Wissa has hit a snag as their £40 million bid, including £35 million up front, was rejected. Brentford are holding firm at a £60 million valuation for the 28-year-old who scored 19 Premier League goals last season. Wissa, keen on a move to St James Park for Champions League football, missed Brentford's recent defeat to Nottingham Forest. Hockey India has announced an 18-member squad for the 2025 Men's Asia Cup, set to take place in Bihar from August 29 to September 7, with veteran drag flicker Harmanpreet Singh as captain. The tournament, a qualifier for the 2026 FIH World Cup, sees India in Pool A with China, Japan and Kazakhstan. The balanced squad aims to secure a direct berth in the World Cup, with matches starting against China on August 29. US celebrity judge and social media star Frank Caprio died at the age of 88. Over a 40-year career in Rhode Island, he famously used compassion and humor to make judgments that took into consideration the personal circumstances of the people in the dock. Videos of Judge Caprio presiding over cases on his hit TV show Caught in Providence have had billions of views on social media, earning him the title, the nicest judge in the world. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours.
This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Benchmarks rise for the sixth straight session to clock the best winning streak since April. Broader markets and sectoral indices end mixed. Nifty Pharma finishes as the top gainer. Group of Ministers favours the two-slab structure for GST at 5 and 18% as the centre proposes to scrap 12 and 28% slabs. The final report to be presented to the GST Council. Clean Science loses over 1% at close after hitting a 52-week low on Avendus Spark erroneously selling double the equity on offer in a block deal. The company then bought back the extra shares sold. SEBI chairperson Tuhin Kanta Pandey says the market regulator is looking to improve tenure and maturity for equity derivatives. Also hints at a pre-IPO trading platform where companies can trade with necessary disclosures. The decision on LIC's minority stake sale will be made in consultation with SEBI and the life insurer, says DPAM Secretary Arunish Chawla, adding at an interministerial group and investment bankers are working on the process. Ramdev Agrawal bets big on Diwali dhamaka as he expects markets to touch record highs around Diwali, seeing GST rate cuts boosting corporate profits. Astronaut Shubhanshu Shukla reflects on his experience of visiting the International Space Station, says it will be useful for the Gaganyaan mission. Good evening.
you're watching Profit 360 on NDTV Profit, and I'm Sanjana. Let's take you through our top stories this evening. First up, a key meeting of the group of ministers on the GST has concluded with the panel proposing for 2 tax slabs. The GOM, led by Deputy Chief Minister of Bihar, has reached a consensus and is proposing to adopt the tax slabs of 5% and 18%. This could mean the scrapping of the existing 12 and 28% slabs as proposed by the centre. For more details on what transpired on day 2 of the meeting, let me go across to my colleague Shrimi, who's standing by with more details. Shrimi, over to you.
Clearly a significant development. A crucial meeting of GOM on GST rate rationalization on Thursday ended with states agreeing to centre proposal to restructure the GST tax system by reducing the number of slabs to 5% and 18%. In fact, the 6-member GOM chaired by Bihar Deputy Chief Minister Samrat Chaudhary accepted the centre plan to replace the current 4-tier structure of 5, 12, 18 and 28% with 2 rates, that is 5% and 18%. And along with that, the higher 40% special tax rate will remain for certain items, including tobacco products, etc. Now, the panel, what we are also picking, that recommended that high-end car, the luxury car, online gaming, maybe high-end motorbike should be also taxed under this 40% special rate which centre recommended. Now, what will happen now? The move will see, of course, 99% of item in the 12% bracket reclassified to 5%, while nearly 90% of the goods which is currently in the 28% bracket will move to 18%, which has some, aspirational goods, white goods, etc. That will see rate reduction for sure. While on cars specifically, centre proposed keeping small car in 18% and high-end car in the 40%. In fact, two-wheelers also mostly move to 18% from currently 28%. So it's a distinction between the small cars and the big and high-end car. Now, Finance Minister, if you remember, addressing the GOM earlier, said the rate rationalization will provide greater relief to common man, farmers, MSMEs, and while ensuring that a simplified, transparent and growth-oriented tax regime will shape up after this overhaul. Now, GOM has also reviewed centre proposal to exempt GST on the health and life insurance for individual, which could lead to some revenue impact, but most states actually also, back that plan as well. So with all these recommendation of GOM on both rate rationalization, compensation cess as well as insurance will be now sent to GST Council, which is expected to meet on 18th and 19th September, where they are going to discuss, and we will see perhaps a major decision coming in the upcoming council meeting.
Right, Shrimi, thanks so much for that. And these new GST proposals are drawing very sharply divided responses from state ministers. Bihar's Deputy Chief Minister, who heads the GST panel, has confirmed the group's recommendation to eliminate the 12 and 28% tax rates. Uttar Pradesh's Finance Minister Suresh Kumar Khanna welcomed the centre's move, asserting unanimous state support. But in contrast, we're seeing West Bengal Finance Minister Chandrima Bhattacharya demanding an amendment to permit an extra levy above the proposed 40% slab for sin goods. Let's hear what they all had to say.
देखिए, हम लोगों ने जो केंद्र सरकार के प्रपोजल आए हैं उसमें सब लोगों ने अपनी अपनी बात रखी है। कुछ ऑब्जर्वेशंस हैं कुछ स्टेट के, इसके बावजूद हम लोगों ने केंद्र जीएसटी काउंसिल को रेफर किया है। अब जीएसटी काउंसिल उसमें निर्णय लेगा और जो केंद्र सरकार के प्रस्ताव हैं 2 स्लैब को समाप्त करने के लिए, उस प्रस्ताव पर हम लोगों ने विचार किया और समर्थन दिया है और हम लोग इसको रिकमेंडेशन दिए हैं। अब जीएसटी काउंसिल इसको फैसला लेगा। सर, क्या रिकमेंडेशन है सर? हम लोगों ने जीएम के तरफ से स्पष्ट तौर पर ये निर्णय लिया है कि जो गवर्नमेंट ऑफ इंडिया के 2 प्रस्ताव आए हैं, स्लैब 12% टैक्स को ख़त्म करने के लिए और 28% के टैक्स को समाप्त करने के लिए, उस प्रस्ताव का समर्थन किया।
केंद्र सरकार के प्रपोजल का सभी लोगों ने स्वागत किया कि ये कॉमन मैन के इंटरेस्ट में है और लोग ये ज़रूर मांग कर रहे थे कि वो किसी न किसी रूप में उन्हें कंपनसेट किया जाए, लेकिन हर एक ने, जितने भी स्टेट्स थे उनमें सब ने उसका स्वागत किया कि ये कॉमन मैन के इंटरेस्ट में है और आम आदमी को राहत दी जा रही है। मैं प्रधानमंत्री मोदी जी को विशेष रूप से बधाई देना चाहता हूँ कि उन्होंने कॉमन मैन की इस भावना को समझते हुए इस प्रकार का प्रपोजल लाए।
को कॉम्पनसेट कैसे किया जाएगा? स्टेट को कैसे कॉम्पनसेट किया जाएगा?
28% कुछ प्रस्ताव जो हैं 18 के जो हैं 12 के 5 में आ गए, कुछ 12 के 18 में चले गए।
लेकिन जो 28 वाला है जिसके लिए 40% का स्लैब बनाया गया है और आगे कुछ प्रोडक्ट्स हैं
जो अत्यंत लग्जूरियस गुड्स हैं या सिन गुड्स हैं उसके ऊपर 40% का प्रपोज किया गया।
ये जो रेट रैशनलाइजेशन के लिए जितना लॉस हो रहा है, सेंटर का ये प्रेजेंटेशन के जरिए हम लोग ये नहीं जान पाए हैं कि ये कितना लॉस हुआ है। तो ये लॉस को तो कैसे रिकवरी होगा इसको भी सोचना है, क्योंकि आम जनता को राह देने के नाम पे फिर घुमा के उनके ऊपर कुछ इतना कोई छापना तैयार है हो, ये बारे में सोचना है। यही हम लोग को जितने भी लोग थे हम लोग बोले हैं और they have noted it.
Ma'am, how much loss are we looking at?
No, we do not know. They have not actually quantified the loss. That is what we have said, that while you give a presentation, you must quantify whatever loss you are having. So that has not been quantified.
Now let's hear from Ramdev Agrawal, Chairman and co-founder of Motilal Oswal, as he weighs in on the GST reforms and predicts that the market will reach new record highs around Diwali. He also believes that successful implementation of these reforms could embolden the government to pursue even more ambitious policy changes in the future.
My question to you, sir, were those reforms and that upgrade and the global peace talks, are they the much needed necessities in a currently growth starved world and a slowing down Indian economy?
Yeah, Neeraj, good morning. I think Indian economy itself is slowing down in relation to what it was doing last year. If you look at the lot of high frequency data, there is a slowdown in the economy, and it needed to be kind of brought back into the right track. Say so I think it started with the monetary policy. Sorry, it started with fiscal, with the budget giving a bit of boost. Then monetary policy where credit flow became better. Then came the rate cuts, and now comes the GST Diwali dhamaka, and I don't know what all is there, but I think these are all leading to corporate performance picking up maybe in second half, and then from there I think it will be full blast maybe next year.
Got it, sir. Is this enough, Mr. Agrawal, or do you think we need to do more? Because we've always been, as a country, spoken about as a policy environment which does incremental reforms, not big bang reforms. There have been some attempts made. Was this the first of the big bang reforms that is needed?
Yes, I think by Indian standards, it looks to be pretty good. And it all depends on how much ifs and buts we put in the reform itself, because what happens is that whether all the 12% will go to 5% and all the 28 and above will all come to 18%, do they do that cleaner job? That is very important, that we only have two rates, and I think why should I have even 40%? I think just club every damn thing on 18 and keep it very clean, because GST is about the very, very simplified tax system, digital tax system. So the moment you have more complicated rates, maybe it might be a little more tax accruing or something, because I'm interested in making it so simple that the compliance increases. With the compliance increase, you get more taxes. So I am not meaning that you should have lower tax collection. Actually, it will lead to higher tax collection if on a sustained basis you keep lowering down the GST. So this round, say 518, I think next round we should do 515, then we should come down to 510, something like that. So that, as the economy responds to the lower cost structure, consumers benefit, and it is much more affordable to consume in India. Because right now, when you go to buy consumer goods, I think it is, the taxation on the consumer goods, particularly hotel rooms and all, are so high that it pinches, So I think this is going to be a big one. And I think the success of this will encourage the bureaucracy and the politicians to take even more bolder step. Because right now, America is setting the trend that they're just throwing all the rule books to in the air, and they are showing that yes, things like Dodge, where they are cutting the government expenditure, they're negotiating very hard with every trading partner. So I think those are good part of what is happening in the world right now, and I think those things will prevail in other economies also.
Got it. Mr. Agarwal, from an investing lens, how do you look at that perspective, that piece, that a very strong relationship that existed for such a long time, there are some how do I say, differences around that, and India and China are warming up to each other as well. How does that impact an investor's mind in Mr. Ramdev Agarwal?
Yeah, I think these are two different things. Warming up to, improving the ties with China is a good thing, and I think we should strengthen the relationship with America also. Why the two relationship has to be at the cost of each other? So I think there is enough scope for US relationship to be strengthened on its own merit, and China, in any case, they are our neighbor. So we have to have a very strong relationship to, the peace at the border leads to a lot of peace and kind of a focus onto the domestic economy rather than on the borders. So clearly, I would say real priority is the strengthening the relationship with China, and equally at the same footing, because ultimately America is the biggest consuming market in the world, and their market economy. So you can't do without them. So I think our very healthy relationship, which has been going on for decades, I hope we get over this current hump, and there is any permanent damage to the relationship.
And now let's look at more expert reactions. We had EY's Uday Pimprikar believing that the two-slab GST structure is a positive for the Indian economy. Let's listen in.
I think this was kind of expected, okay, but I think this is moving at frenetic pace. Perhaps it's required to move at this pace. And I think it's good news at a broad level. I saw some of the other comments that also came in that the states have kind of asked about what happens to the revenue. The states have also kind of considered, some bit of kind of ask on some of the other aspects of anti-profiteering. Those are the aspects that would need to be kind of discussed and debated at the GST Council. But I think this seems to be almost a done deal. It might be useful for us to kind of look at whether this 12% could be an exceptional, some amount, some bit of, let's say, services can remain there or not. I think that's something that one would want to go through some amount of nitty-gritties as we go along. But great development.
Also, don't forget to catch NDTV Profit's in-depth coverage on how the GST cut will impact your insurance premiums. Tune in to Your Money Matters at 5 p.m. this evening, and then later the big question at 6 p.m. on whether the GST cut will lower your premium. More on that later this evening. And let's take a look at how the markets fared today. The benchmark indices closed in the green for the 6th consecutive day, with Sensex up by 140 points, closing at the 82,000 mark. The Nifty also gained 0.13%, ending at 25,000. And sectorally, it was a bit of a mixed bag, with auto and FMCG down almost 0.6%. Pharma and realty emerged as sectoral winners. And my colleague Puneet joining us with more on this.
Well, it was another day when we saw the benchmark indices largely outperform the broader markets, and this was led by gains in some key stocks for the Nifty as well. But it ended above 25,000 Nifty 50, and that's a key positive trigger that the market will take for tomorrow's session. We've also seen, the Nifty close above this 25,000 mark for the second consecutive day, and while it's still early, the bulls will hope that this could be a key support level in the near term. When you look at some of the key stocks, we did see Cipla as well as Dr. Reddy outperform and be in the green essentially for the Nifty 50, while we've seen the broader market indices, both mid cap as well as the small cap index, largely underperform and end in the red. We've seen stocks like BSC as well as JK Cement fall the most in the mid cap 150, and for BSC we largely saw those comments coming in essentially that the weekly expiry could be moved. That is going to be one of the key negatives for that index. We also seen the Nifty Pharma gain nearly 1% for the day, and that was led by Mankind Pharma as well as something like a Cipla, which supported that index. While on the sectoral indices, they did end with a slightly mixed note with essentially the pharma snapping its 3-day losing streak, but the others like the realty gained for the 4th consecutive day as well. Apart from that, we also the Nifty Financial Services snap its 2-day losing streak, continuing its positive momentum for that index. Finally, we've seen for the small cap as well, Lemon Tree as well as TV18 had gained the most, but we did see some pressure on that index largely in the broader markets today. Going tomorrow, we will have a new weekly expiry, and that'll be with 25,000 as the key level that will open above. Hopefully we can maintain that as a key support going forward, but it does we will need some kind of positive trigger and a positive pivot to sustain those levels in the medium term.
Right, Puneet, thanks so much for that. Meanwhile, India is expected to enter a strong phase of outperformance. This is what Nilesh Shah, the founder of Envision Capital, is saying about emerging Indian markets. Also mentioning that while foreign investors have been sellers, a change in their stance is right around the corner. Let's listen in.
The case for India is getting stronger. Emerging markets have been underperforming for a very, very long time. It's not just about the last 1 year, or probably it's a story of the last decade as well. But clearly believe that the era for emerging markets is now arriving. And emerging markets are expected to have a very, very strong outperformance going forward. And within that, India, on which foreign investors have been so underweight and have been net sellers for the last few years, I clearly believe that a change in stance could kind of be around the corner, given the kind of various developments that are happening. And based on that, I expect India to kind of get into a very, very strong mode of outperformance.
And an update on the dispute between MobiKwik and Dam Capital coming in. The Delhi High Court has now directed MobiKwik to furnish invoices within 24 hours. Dam Capital will then release the undisputed escrow funds. The disputed amount, remember, of 1.5 crore rupees will remain in escrow. Now, the court has ordered both the companies to submit compliance reports on September the 2nd. And moving on, the DPAM secretary has stated that the decision on LIC's minority stake sale will be made through a consultative process involving SEBI, LIC and other key stakeholders. An interministerial group is already examining the matter, with officials noting that LIC's market capitalization remains substantial. Regarding the IDBI State Bank sale, IDBI Bank stake sale, the secretary has confirmed that the expression of interest process has concluded. Due diligence is in process and documentation is being finalized. Let's listen in.
We monitor both corporate performance, sustained capital investment, fair dividends, as well as strategic disinvestment. We have undertaken a review of all the listed public enterprises, and wherever we, are above the minimum public shareholding norms, we are in touch with the regulator, and we have done our homework. We have appointed the merchant bankers where necessary, and depending on the market conditions, the liquidity, the market appetite, the volume weighted average and market research, we'll be coming out with both OFS and FPOs and during the course of the year, and we'll be we've already completed one major transaction in the last few months, and we'll be hopefully coming out with a few more, and you will hear it at the right time.
And speaking on the sidelines of FICCI's annual summit, the SEBI chairperson has revealed that the regulator is reviewing the tenure of derivatives contracts and has also proposed a pilot project for pre-IPO trading. Let's listen into that.
See, improving the tenure really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So
and
we'll have a consultation paper
yes,
coming?
yes. Nothing will be on, this part of the.
Meanwhile, SEBI whole-time member Anant Narayan added that the framework for the derivative segment will be developed through an analytical and consultative approach. He emphasized that the market regulator's focus is on deepening the cash markets.
SEBI's approach to arriving at the optimum regulatory regime around derivatives has been and will continue to be analytical and consultative. On one hand, we are looking to deepen the underlying cash equities market. Indeed, average traded volumes in equity cash markets have grown rapidly by over 25% compounded annual growth rate over the past 5 years to well over 1 lakh rupees of trading volumes per day today. However, there is more to be done, particularly given the even sharper rise in short-term derivative volumes. On the other hand, we are considering ways to improve the tenor and maturity profile of derivative products so that they better support sustained capital formation and foster all-round trust in the ecosystem. This may also need to be achieved in a calibrated manner, giving the system adequate time to adjust.
Now on to the monsoon session of Parliament, which ended in chaos. 19 bills were passed, many without discussion or debate, as opposition MPs staged relentless protests over the Bihar voter list controversy and explosive allegations of voter fraud in Karnataka and Maharashtra. Among the bills that were bulldozed through Parliament were two landmark proposals: a sweeping overhaul of the Income Tax Act of 1961 and a constitutional amendment enabling the dismissal of ministers facing criminal charges. The online gaming bill too was passed in both houses. Government sources tell NDTV that the opposition's refusal to engage led to minimal scrutiny of these critical reforms. But now let's turn to my colleague Danish Anand for a detailed report on the bills that have been successfully cleared in Parliament and those that are still pending. Over to you, Danish.
If we overall look at the monsoon session, it was rather disappointing because there was a lot of opposition stir, which we noticed in both the houses, and there were various political reasons. Because of that, we saw a lot of productivity being hampered by back-to-back protests. But like you mentioned, that this particular session saw at least 15 to 19 bills that were discussed, and certain bills were also returned back. But if we look at the major bills that were passed, the online gaming bill was a recent one, which is really big, and we saw that both the houses passed it within a span of 1 day, and we are seeing that the disruptions that are happening in both the houses of the Parliament, it is something which has become a thing for every back-to-back Parliament session, and overall, if we see, this impacts the overall productivity of the entire Parliament, and ultimately the important discussions that is supposed to take place on certain bills, that doesn't really happen, because we see that the opposition usually walks out. But when it comes to important bills, even at that time, even like just yesterday, when the Lok Sabha had passed the online gaming bill, the opposition had created a bit of ruckus, but still that bill was somehow passed. But I have some important aspect which has been released by the Deputy Chairperson of the Rajya Sabha, and he has clearly indicated that how disappointing it is that the overall House functioned for just 38.6 hours, and the Lok Sabha, on the other hand, functioned for just 36.1 hours. So getting back to you, it was this monsoon session was extended by a week, but still there were like 15 bills that were taken back to the parliament, and certain bills were returned to the president. But overall, if you see, the productivity of both the houses of parliament was not as much as it was expected earlier.
Thanks so much for that. These bills, like you rightly said, have been passed amid Parliament chaos, and that puts an end to the monsoon session of Parliament amid a lot of chaos. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandani, and we're going to talk about a company which has done 30% or given a 30% return over the last 2 trading sessions. Of course, today it's down 6%. So that's still a very healthy 25% return all through this week. We're talking about HLE Glasscoat, and it's on the back of an acquisition which they've done. But they've done this back on the 14th or the 15th of August, if I recall right. So it's quite a few days back, but the stock has been on a tear since that point. Omera's is what the acquisition is that we're talking about. Now it's a It's a company which gives presence or a footprint to HLE Glasscoat in Europe, or a larger footprint if I can call it. Now what I want to know from this Omeras transaction is, what do you expect from an Omeras in terms of top line, margins and bottom line? It's a loss-making company. It's a company which is in equivalence in an IBC situation or a bankruptcy situation in Europe, which HLE Glasscoat has acquired. It's a 270 odd crore rupee acquisition which HLE Glasscoat has done, and HLE Glasscoat itself is around a 3400 crore market cap company. So it's a decently large kind of acquisition for the kind of size that HLE Glasscoat is. And therefore the second piece I want to understand is, how are they funding the acquisition, and whether any further capex on Omeras is required or not. Mind you, Omeras' top line in 2024 shrank versus the earlier years, and it's actually a loss-making entity there. So I want to understand whether there is any change to the way they are doing business, and what will that likely change be. In terms of any other additional capex required also will start to hurt the balance sheet, because they've got a reasonably sized debt already sitting on the balance sheet, which they were planning to pay back. But this transaction may well change the metrics. So a lot of those guidances may change, and I'd want to know all of that. How does the acquisition aid the existing business? Mind you, this gives tailwind to the existing business as well. You have a footprint in Europe. Not only does this add to the product arsenal in terms of new products, but the existing products in terms of selling it to Omeras' existing customers, those will get added very well to an HLE Glasscoat, and that may aid the top line. The top line guidance is roughly late teens, so an inch up there on the existing business, I'm saying any inch up there would be an indication that that is being contributed by Omeras to a certain extent, and I'd want to know that, because that will also be a lever for future growth. Now in terms of therefore the target top line and PAT margin for FY26 and 27, and this is on a consol basis, I'd want to understand the current business plus Omeras, how is this shaping up, because they had given certain guidances and we'll put it out, but does that at all change for an HLE Glasscoat, a stock which has run up 25% this week, and therefore all of this will become relevant. In terms of the late teens growth on the existing business, what is it being driven by? Because this has been a key overhang, especially in the businesses in which they supply their products. They haven't really seen that kind of growth, so I'd want to know and understand whether specialty chemicals in terms of a business is picking up or not, because that will hold the key. Then there's the filtration and drying business. In that business, the pickup was expected in FY26. I'm trying to understand whether they're already seeing signs of that, because that will aid both top line as well as margins. Last off, they were planning also to cater to the defense space. Are orders coming in, and what's the outlook of that? So plenty to discuss, and that's probably all that I want to know. But Varsha, I'll toss it to you with regard to explaining to viewers all about the company.
Yeah, thank you for that. HLE Glasscoat. So what it does is they manufacture glass line equipment, filters and dryers equipment for various industries. So be it chemical industry, pharma industry, talking about the business segment, let us start with filtration and drying division, which contributes almost 40% to the overall revenue, and glass line equipment division, if you see, contributes almost 46%. Now what are the uses of this glass lined equipment? If I were to talk about, they are used in chemical manufacturing for highly corrosive reaction. They are also used in pharma, to maintain product purity and prevent contamination. Also used in agrochemicals and pesticides and specialty chemicals. The third business segment that they have is heat exchange equipment, which contributes almost 13% to the overall revenue as of Q1 FY26. Over here you have shell, tube or plate transfers heat, which is used in the chemical process. So basically they manufacture in a very easy language. they manufacture certain equipments, glass line equipments, which are used in your agrochemicals, in the specialty chemicals, and in pharma segment.
I'll just pause or just interrupt you here for 1 minute. First one, with regard to your filtration and drying equipment, just trying to probably ease it up for viewers. It's basically a filter which allows the separation of solid and liquid post a process. So that equipment is the filtration and drying equipment which allows that separation. So that's on the filtration and drying piece. On heat transfer equipment, it basically transfers heat in chemical processes which is required. A portion of this business comes from Kinam Specialty. That's another acquisition that they had made in 2024. Some of the guidances of Kinam have turned out to be okay, not up to absolute scratch, and that is the other piece which will likely drive numbers as well going forward if that were to play out. Of course, the glass lining equipment, I believe Varsha covered, but it's basically corrosion resistant vessels and largely used in chemical pharma processes and in the manufacturing of API and pharma. So a lot of that is linked to the chemical and the pharmaceutical business. If the chemical business does well, the HLE glass coat business will do well. If not, then you will see a drag with regard to business. So very, very linked with regard to the chemical business. Sorry, Varsha, please go ahead.
Sure. I was just speaking about the revenue mix. Then moving on, let's see, 68% of revenue comes from India and rest comes from international business. So you have, mainly Europe, US, wherein 32% of the business comes. This is just a revenue breakup. For example, from for API and pharma, so 65% of their business is coming from API and pharma, 23% from specialty chemicals, 4% from agrochemicals, and 8% from others. So if something happens in pharma industry or specialty chemical industries, that's going to affect them, and that really happened. If you see in the last 3 years, we'll of course speak in income statement, the growth has not been that fantastic because of the slowdown that was seen in the specialty chemical segment, and which management has also highlighted in their con call. Well, moving on, let's talk about order book detail, because this is important. This gives us a revenue visibility for the future quarter. So order book as of June 25 stand at around 738 crore, and this gives a revenue visibility of 8 months for international business and 6 months for India business. So they have quite a good order book which will take care of the future quarters. Now
but broadly this is normal,
yes.
Viewers. So if you feel that this is something which is low, not really. It's fairly normal in their line of business to have this kind of revenue visibility. Sorry, Varsha, please go ahead.
Then talking about clients, who are the clients for this company? You have Bayer, you have UPL, Sun Pharma, Atul, BASF. So mostly chemical and pharma companies and agrochemicals companies are their clients. You have PI Industries, SRF, Zydus and Sanofi, who are the clients for this company. Now the important segment of this company is Omera's acquisition, which Harsh was speaking about. So they've acquired Omera's assets, so Omera's is into glass lined tanks, facade cladding and animal panels. So basically what HLE does is similar kind of business this Omera's has. And so what is in business for HLE glass coat, if I were to talk about, there's an immediate diversification to infrastructure, renewables, and opportunity to cross sell. So now see, so we all know that chemical sector and pharmas, so mainly problems in chemical sector has affected HLE glass coat. Now because of the diversification into renewables and infrastructure, this overhang will go away. This pressure because of some user industry will go away, and maybe we can see good numbers going forward because of this Omera's acquisition. So basically they've done this acquisition just to diversify their portfolio from chemicals and pharma. And
let's analyze the key metrics now.
Yeah, exactly.
Let's start off with that. We're gonna look at income statement, balance sheet, cash flow, return ratios, shareholding, street cred. There's no street coverage, so we will look at valuations and outlook, and thereafter we'd speak with the management who will join us very, very shortly. Varsha, 30 seconds, income statement.
So income statement, Harsh, in the last few years, if I were to talk about a net profit, there's been pressure in the net profit. One of the reasons is, of course, higher interest cost and depreciation, and pressure in chemical industry has affected this company. So overall, a neutral rating when it comes to income statement. Because of the industry problem, this company has been going through problems.
Perfect. So numbers on your screen, margins will also come up on a YOY basis. The last 5 years, it's been on a shrinking trend. It's currently at 14%. Let's look at the balance sheet, and you'll see that there is decent amount of borrowing sitting on the balance sheet, both short term and long term. You cumulate that, it's nearly 70 to 80% of your equity, your total equity, and therefore may be a bit of a concern. You'll have to wait and watch as to how this plays out, and outlook, of course, we will ask the management. But for the moment, we've given this a neutral, given that it's a 3,500 crore market cap company, and they have relied massively on acquisitions, and therefore it's understandable as to why the debt is slightly on the elevated side. But we'll be cautious here. We've given this a neutral. Cash flow, Varsha.
Yes, moving on to cash flow from cash flow statement, if you see operating cash flow in 23, it was 5 crore to 134 crore. Now, one of the reasons is because of the lower cash, tied up in receivables. So that's a good thing when it comes to cash flow, and that's one of the reasons why we have given, thumbs up. CFO to PAT, if you see, good numbers when it comes to FY25 at 216%. So overall, yes, considering the pressure that the company has gone through, cash flow statement is a good one.
Okay, return ratios, they were elevated above the 20% number, but they've fallen off, and we kind of explained as to why that is so when we discussed the income statement. Largely this is linked to the income statement. The potential is there to do a 20% ROCE. That is what we're really looking for when we're giving this a neutral, but otherwise a 12 to 13% is what it's clocked over the last couple of years. I'd want to see when this quickly turns around, and that will be linked to profitability as well as pay down of certain amount of debt. So keep your eye out on both of those metrics. Shareholding pattern, Varsha.
Yes, so overall, the one good thing about shareholding pattern is the 66% that the promoter is holding. So good skin in the game. Even FIIs, if you see, they've not decreased their holdings. Again, a good thing. Same goes with DIIs. Even DIIs have increased their holding as of June 25. So overall, a thumbs up when it comes to shareholding pattern.
Also, DSP Small Cap Fund is one of the big investors here. They hold 3.5% stake in this company. So you want to keep your eye out on that one. So that's the other piece regarding shareholding you should know. Street Cred, it's done very well over the last month. Over the last 6 months, it's been a doubler, but the last 4 years or 4.5 odd years since listing, it's not given an outstanding return. So we've been cautious here as well. The short term, it's done very, very well. The longer term, it's been a bit of a drag, and that's understandable given the kind of numbers that have played out, and therefore we've given this a neutral. Let me also try and cover outlook. Now, in terms of the outlook, I'll quickly try and highlight what the goals were for FY26. Growth guidance was high teens. EBITDA target was around 14 to 15%. PAT margin was around 6 to 7% as per guidance. The PAT aspiration is to get to 100 crore in the medium term. The likelihood of that, in case of an 18% top line growth on a 6.5 odd % PAT margin, will be that by FY27 or mid of FY28, you'll have an annualized PAT of 100 crore. Now, in terms, but that changes with Omeraz as an acquisition. Order book levers, well, there is traction, both pharma, chemical. There's a ramp up in oil and gas as well. And so some of those are what's aiding the numbers. Of course, there are risks both on the macro front as well as on the raw material front, which HLE Glasscoat is not able to fully pass on to its customers in terms of price hikes. But talk to us about valuations, Varsha. How do those stack up?
Valuation, comparing it with peers, you have GMM, Pfaudler. So on a TTM basis, pretty much same valuation that the company has. Now, these are on the premium side because of the lower EPS that you are seeing. So, on the neutral side, we'll give when it comes to overall valuation, considering GMM, Pfaudler.
Okay, let's therefore stack up all of the ratings. That's how it stacks up. No real thumbs down here. That's the one thing that stands out. But it's been a phenomenal run for the stock. What's the potential here? Like 5 out of 8 on the KYC final rating. Let's go across. We have the whole-time director of HLE Glasscoat, Harsh Patel, joining us. Also, Alap Patel joining us, who's the ED at HLE Glascoat. Hello, gentlemen. Welcome. I'm Harsh. With me is Varsha. Want to first start off by understanding, Harsh, from you first, to try and get a sense as to what does the Omera's transaction bring to you in terms of top line and in terms of PAT margin for the full year FY26. Is it going to be a loss-making entity for you where FY26 is concerned? So will it drag your numbers?
Hi, thank you, Harsh, for having me here. Omera's, basically, we acquired the assets of Omera's. The company was not acquired. And with the, also I just heard your segment. I would like to maybe give my bit. Somebody said on the show that we acquired the company for some 200 crore. The company was not acquired for 200 odd crore. It was acquired for about 2.75 million euros, which is roughly 28 crore at the most. So for us, Omera's is a very, very good acquisition from a valuation point of view. Omera's basically had a top line of about 20 million euros, which is around 200 crore last year. And it had actually turned profit last year. Omera's was on a self-governed bankruptcy, so it's not the bankruptcy in the true sense. So the way it works in Germany is that even if you run out of cash for 1 year, you have to declare bankruptcy. So from the point of view of valuation and from the point of view of top line, we feel this is a very, very good acquisition for us, especially also because it is in the same technology segment that we are present. Omera's will not be a loss-making entity for us in this year. Maybe it will turn only a very small profit. But in 3 or 4 quarters from now, we expect Omera's also to be on a double-digit EBITDA margin business.
I stand corrected, Harsh. That's my error. So yes, Omera's was a 28 crore acquisition. Now, let me talk about the funding of the transaction. Are you going to fund it largely through internal accruals? Shouldn't be a big challenge, right?
Yeah, that is correct. We have a very strong balance sheet and we have enough internal accruals to fund Omera's. And we are not looking to raise debt for this acquisition.
Does the total growth in terms of your FY26 numbers look like, both on, and Alap, let me come to you with regard to this one, both on the top line as well as on the PAT margin? What's the revised guidance for FY26?
Yeah, so first of all, thanks for having me. When you say revised guidelines, I'm assuming it is on account of acquisition of Omera's.
That is correct. That is correct.
So for FY26, we feel Omera's will get us an additional, let's say about 100 crores worth of top line. And like Harsh said, we will have, a very modest profit in the Omera's business for this financial year. But from next financial year onwards, which is about 3 or 4 quarters from now, we are aspiring to have a double-digit EBITDA there as well.
Right. Thank you for that. Hi gentlemen, Varsha this side. Pleasure to have you on NDTV Profit. Harsh, my question would be to you, because company is also exploring, possibilities of expanding business when it comes to aerospace and defense. Have you seen any kind of orders, or what's the on-ground talks? Have you, done something there? Have you received any order?
Yes, hi Varsha. Yes, we have been working on certain projects on defense. We have made headways on some defense projects. Unfortunately, I may not be able to divulge much details, but yes, we have taken some initial steps in the defense. Of course, everybody knows that 2 years ago, we delivered some diving vessels for the Navy, which were then installed in the Nistara vessels, which were then launched from Visakhapatnam. So that is already done. We are continuing to service such more inquiries, but we have also made headways in the army, in the vehicle segment. So you will see some action in future. Right now, I have not much to say there.
Understood. And also, Alap, coming to you, if you could give us sense on how chemical and pharma sector, especially chemical sector, is evolving, because we know that currently the industry is under pressure. But talking to your clients, are you getting a sense that is there a growth, volume growth, or has pricing pressure settled? Anything on ground reality that you're getting?
Yeah. As you very rightly said, the chemical sector was struggling to a large extent for the last 6 or 8 quarters. What we are seeing now is that a lot of projects which were on hold for many quarters at a stretch, they are now all coming through. We have, finalized quite a bit of these orders which were not moving at all. What we are also seeing is a revival in demand in the sense that our reliance on a few large inquiries or projects has gone down. So maybe even in months where we don't have any large or very large project orders in the pipeline, we are still, meeting or exceeding our revenue booking targets, as is evident from our order book. To that extent, we are seeing let's say a revival of demand in the chemical sector as well. And as you know, pharma is doing quite well. Pharma is kind of the growth driver for us at the moment, both a demand and a growth driver for us at the moment.
What is the kind of strength in that recovery? Are you seeing extremely strong demand, or are you expecting that? Is that what your customers are telling you? What's the expectation like?
So I think we are definitely seeing an uptick in the demand and the sentiment both. I would still not call it an extremely strong demand.
And what about filtration and drying? That business was expected to do well or pick up well in FY26. Are you seeing green shoots there, Alap?
Yes, absolutely. Absolutely.
Okay, and is that on course? Is that in line with what you were penciling in when you gave that guidance at the end of Q4 FY26?
Yes, it is very much Yes, it is very much in line with our expectations.
Understood. So, Harsh, you would have penciled in around maybe 16 to 20% kind of growth for FY26 in your existing business. Now that you've acquired Omeras, how much does Omeras contribute to the existing business in terms of opportunity? You get to cross-sell to maybe some of Omeras' clients. How does that add to your top line? And over and above that, of course, you're expecting 100 crore kind of a top line coming in from Omeras as well, or Omeras' assets as well. How does that work out? Give us that perspective.
Right. So Omeras is broadly operating in, say, 2 segments. One segment is the architectural facade segment, where there is no real cross-selling or possible. But Omeras also caters to the storage segment. So Omeras manufactures large glass-lined tanks, which actually currently we cannot manufacture. It's a different size of tank that they manufacture. And a lot of our Indian customers, for example, all the customers that you had listed in the pharma and the agrochemical space, they buy such tanks. Currently, there are 2 things. One is currently this demand is serviced by a different kind of tanks, which the tanks that Omeras makes, the glass fused tanks that Omeras can serve, give a better result with. And it can also create more markets where it was not there. So yes, there is cross-selling possible from Omeras to our existing customers.
Right. So if I were to just try and extrapolate the numbers, 1300 crore would be the rough top line for FY26. FY27 would be closer to 1500 crore. Would those assumptions be right? And would you still continue to be constructive with regard to margin? Just yes or no, Alap. Would a 15% margin be reasonable on that kind of top line number?
Yeah, those kind of numbers would definitely be a good target for us to have, and not unrealistic.
Perfect. Thank you so much, both of you gentlemen, for joining us. We'll let you go on that note. And viewers, that's all the time we have on KYC today. From Varsha, myself, and everyone who puts the show together, thanks so much for watching. Stay with us here on NDTV Profit.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom.
To
make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold?
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. There's quite a bit to talk about today. In fact, last night, you had a meeting of the group of ministers that's talking about GST. And specifically, one of the items on their agenda was health insurance and life insurance premiums that are paid by individuals. And there was a consensus in that meeting that it should be exempt from GST. That GST amount currently stands at 18%. So if this is to be exempted, and this is only going to take place once the council of the GST meets and decides it, But if it is to be exempt, what happens to your premiums? If you've already got a health insurance policy or a life insurance policy, does that mean that your next premium payment will reflect this change? And if you are to buy a new policy, will you actually see your premiums come down? That's what we're going to discuss at the start today. But before we get to our first guest, who is Aditya Shah, who is the founder of Hercules Advisors. And Aditya, thanks so much for joining in. I want you and the viewers to listen to a conversation that we had with an ex-member of IRDAI, Nilesh Sathe, about how this works, because there's a question about input tax credit and what the implications of that would be. Listen in.
Initially, the premium, suppose, was 1,000 rupees for 1 crore term insurance premium. 1,000 per month, let us say. Now, premium was 1,000, but 18 rupees was going from his pocket towards GST. So indirectly, he had to shell out 1,180 rupees for the cover per month. Now, what will happen? This 180, he doesn't have to pay. So the premium will be 1,000. But the insurance companies used to get input tax credit on this 180 rupees. Now, what is input tax credit? The expenses which are incurred by insurance companies, they have to pay GST on services, while they receive GST on account of premiums that they receive. Let us work out to what extent the premium will go up. Insurance companies have been saying that premiums have to go up because we had factored in the input tax credit while arriving at premium of, say, 1,000 rupees. Now they are not going to get. So let us see to what extent the premium may go up. How 1,000 is calculated? There are 3 assumptions, basic assumptions. One is mortality, which is a major assumption. On 1,000 rupees, if the premium is 1,000, the mortality assumption may be about 700 rupees because that is a major assumption. The second is expenses. Third is for solvency margin, for profit and all that. Now, for expenses, suppose the provision is for 100 rupees. On 100 rupees, they used to get 18 rupees as input tax credit, which they had factored in. Now they are not going to get this 18 rupees. So on 1,000 rupees premium, there is a possibility that premium may go up by 18 rupees, which will be hardly 1.8%. Bear it in mind. It's not going to be that significant.
So there's nothing to worry about. That was the sum and substance of what Mr. Nilesh Sathe was telling us this morning. But what does that mean, and what does Aditya Shah think about it? Aditya, thanks so much for joining me once again today. And I was speaking to you before the show, and you said that you don't think that premiums will come down by that much. Why do you say that?
As the other gentleman was explaining, the input tax credit, as I said, as he also said, input tax credit will not be available for companies. And if input tax credit is not available for the companies, there's no material calculation as to how much that will affect the expenses of the companies. And if the expenses of the companies continue to increase each year, ultimately what will happen is the premium will then tend to be equal to what the premium is today, or maybe even higher. So a smarter solution would be to either put insurance at about 5 or 12% GST, and then take an input tax credit so that at least 6 to 7% of that premium increase is passed on to customers. I don't think at 0 or 5% GST, there will be a material decrease in the premium that users end up paying. And mind you, this is very, very significant for senior citizens, because senior citizen premiums are tending to go towards 1.5 lakh rupees for a 10 lakh cover, and there a GST reduction was immediately needed. So from my perspective, this is good news for the industry, but I don't think the full 18% impact will come to the consumers. It will be somewhere close to 5 or 7% is what my guess is.
So at this point, we don't know the nitty-gritties of it. So you have a more conservative estimate than a lot of other people, Aditya. And some people are saying that a 15% reduction could potentially take place because 18% is going to 0. It may be less than that, as you pointed out. So, but in a range of 7% to 12 to 15%, let's call it that, right? So how is this going to work? Is it going to only reflect on new policies, or will it also reflect on existing policies where you're paying a premium, say, every month or every year?
So there are three aspects to it. One aspect is if you have bought multi-year policy and you've already paid GST, the GST will not get refunded to you. And if you have paid a 3-year policy, if 2 years are left, you have already paid GST and you will not get a refund on it. The second aspect comes from here on, from the day the GST change is implemented, from there on, all existing and new policies will have to move to a newer tax regime. And if that is 0%, then your existing premium will also get readjusted for GST. So in every policy, there is a component. Premium will not get revised. It will only get revised if the taxes are revised. So here, if taxes are revised, all new and existing policies which come up for renewal after the effectiveness of the tax cut will get the new policy. But at the same time, insurer will also have the right to increase the premium if they see the expenses moving up.
Now, therefore, the tendency is, and you've just described that if you've already paid, then there's no refund. But there's a possibility if you have an existing policy that you can see an effect. So the question that I have is, like you saw with the announcement on the potential GST cut in the consumer durable space or in automobiles, because ultimately the move is gravitating towards two slabs by and large. And we're not talking about insurance here, we're talking about a 5% slab and an 18% slab. So the tendency or the desire would be to get a better rate down the line, to say, I will defer my purchase. If I was in the market for a car right now, let me see if I get the benefit and a fall from 28% to an 18%, if at all, because that's a pretty substantial drop. Is there a tendency, or will there be a tendency in the insurance space as well, to say, let me defer buying an insurance policy if I get a better rate? And is that a good idea, in your opinion?
See, there are 2 or 3 aspects to it. One is the risk that you already carry. On a health insurance policy, your risk of hospitalization. On a life insurance policy, your mortality. Irrespective of the fact GST is there or not there, those risks need to be covered day in and day out. So from my perspective, the best time to buy any type of insurance was yesterday. The next best time is today. Now the second aspect of it is GST. You see, what will happen is, as ITC credit will not be available, the cost for the insurance companies will keep rising. So my guess is, in the near term, the premium will get cut, but slowly and steadily, as the expenses keep compounding, in the first year they will compound by 18%, the next year they will again compound by 18%. The premium increases in the coming years will be far more than what they have been before. So from my perspective, there is no case for deferment of deferment of insurance because of GST cut. I think in the near term, as the cuts come in and the insurers still not raise the premium, that would be the best time to lock in your 3 or 5 year policy term.
I guess it depends on how you look at it, Aditya. From my perspective, I would say that the benefit, if there is a reduction of the tax to whatever extent, and the total effect, whether it is 7% or more than that, is cumulative in nature, because as you've pointed out, the risks keep going up and the quantity of premium will keep going up, and we're talking about this as a percentage of the whole. And so as a result, if that percentage is dropped to 0, I no longer have to pay the tax on that larger premium amount as it goes up. That's another way to look at it. Would you agree?
Yes, that's another way of looking at it. But then the central point always remains that you cannot ignore risk just for the sake of buying just for the sake of saving 5-7% tax. I don't think if the government was really helpful, it would find a solution to get the input tax credit in. That would be a win-win both for the insurance industry and the government. In the near term, the government will lose out on some amount of revenue, but in the longer term, it will increase the penetration. So from my perspective, what I think is people should continue as normal with their insurance buying as per se. But I think whenever the tax cut becomes effective, 1 year from there on would be a great time to buy insurance policies, because after that, if the ITC is not available, the compounding of the costs for the companies will come in, and the companies will be forced to increase premiums.
Important points that you're making. Aditya, thanks so much for joining in and for clarifying these aspects. The bottom line, of course, is that you shouldn't defer your purchases, irrespective of what is happening on the GST. Now, that was the first topic that we were discussing today, and I've got another one that I have lined up for you, and it's an interesting one. We speak often about building a stock portfolio, and we discuss what stocks should be in that portfolio, but on this program, more often than not, we're talking about your mutual fund strategy. Today, I'd like to talk about the pros and cons of building a stock portfolio, whether a dividend portfolio, as some people desire to build, is actually something that you should consider doing. Joining me is Mohit Gang, who's the co-founder and chief executive officer of Moneyfront, and Sudhir Kaushik, who's a chartered accountant and chief executive officer and co-founder of Tax Spanner. Thanks so much, gentlemen, for taking the time. Mohit, I'll come to you first. A lot of people desire to have a multi-bagger portfolio. It's easier said than done. What are the pros and cons, in your opinion, of building a stock portfolio?
Thank you, Alex. Thank you for the opportunity. Always a pleasure. Look, I'll just start with a small analogy. If you go out in the market and pick up a fruit for yourself, you need to know the right contents, the right nutritional value, the right seasonality, the right thing, the ripeness of the fruit to pick it up. If you think you can't manage all that, then you perhaps rely on an expert who can serve you a fruit bowl or a fruit salad, and then you might just not like a few things in it, but you will still on a whole be satisfied with it. So that's the difference between a stock picker and a mutual fund guy. It's a crude analogy, though it serves the purpose in a sense that if you understand the nitty-gritties of what drives the market, liquidity, emotions, fundamentals, valuations, everything, then yes, by all means, you should have a direct stock portfolio. But if you think you can't do all that along with a job or a side hustle, you can't manage the rigors of being on the screen, tracking the ups and downs, tracking the movements, tracking the ratios day in and day out, then you perhaps rely on experts whose job or whose daily bread and butter is about delivering good returns for you, and that comes through a source of a mutual fund, right? So again, it's anyone's call out there, but if you think you can manage, do it yourself. If you can't, then yes, by all means, just go ahead and rely on the experts through a mutual fund.
Got it. And there's no reason why you can't do both, right, gentlemen? So you can have a small portion if you want, if that scratches the itch, so to speak. Sudhir, from a tax perspective, and that's the primary reason why I have you on today's show, is there an effective way that you can use the benefits that are provided for you in law of, one, your long-term capital gains, where you have a certain amount, a certain buffer, and also the setting off of losses that you might have in your individual stock portfolio or your equity portfolio to set off long-term gains down the line?
Yeah. So yes, definitely there are ways to optimize your taxes. So up to 1.25 lakh per person in a family. So suppose there are 4 or 5 members in a family are there, and you invest in all those names, those who are above 18 years of age. So you can definitely make a 5 lakh plus kind of a money, tax-free, legally and officially. So there is no hitch, and we do recommend and we do help our customers also to do so. We call it kind of a gain harvesting. So this is a common practice people do, and there are ways to manage this also. Before March, you have to manage this activity. Ideally, January, February month are good for this. We call it around budget to do this harvesting. The second thing is this SWP, which has come up over the years for the people, those who are in the retirement stage and they need regular income, they can also leverage this income of up to 1.25 lakh, which is exempt. And thereafter also 12.5% is the tax rate, which is now very, very lucrative. It was earlier 10%, but 12.5 is comparatively low if you see the income distribution and capital withdrawal comparing 30% tax if you are in a higher bracket. So we do recommend that also.
Yeah, I want to talk about that a little later in the conversation, because the next point, Sudhir, has to do with a dividend portfolio, and we'll also discuss the IDCW, or the dividend option in a mutual fund scheme, and whether that is better, or the SWP that you've just mentioned, which is a systematic withdrawal plan. But we'll come to that in just a bit, even from the tax perspective. But Mohit, a dividend portfolio. This is something a lot of people have dreamt of, have thought of, have aspired to have, because the dream is to have a stock portfolio that pays you regular dividends, and this takes care of all of your requirements in a year. Is this actually practically possible, or is this too good to be true?
Look, it is doable and possible. Having said which, in India, the dividend yield is pretty low, Alex, right? The current dividend yield of the index is around 1.3 to 1.6% at best, which means that you need a pretty hefty amount of capital to be deployed to be able to run your household only through dividends, right? So it could be a good means, but it can't like really serve your full purpose unless you have a massive portfolio in equity, which is not possible with everyone, right? So yes, you can have dividend payout option in a mutual fund, which is also popularly, or which is now regulatorily called an IDCW option, and you can choose the dividend yield funds. Typically, these funds have a decent payout ratio. They give a monthly payout of 1 to 2% depending on the nature of the fund. And the whole mandate is to invest in high dividend yielding stocks which have a higher dividend payout. And per se, the fund will also give a regular dividend, though it's not a mandatory condition. It's not an obligation on them to pay out dividend. But yes, the endeavor is to give dividends every month. So technically possible, but practically it's very difficult to build a solely dividend yielding portfolio in a country like India, which still is a growth economy, and there are more growth companies than dividend paying companies.
Points that you're raising, and so just very simply, if you put a number to it, if you're talking about 1.5 to 2% dividend yield, if you have 1 crore portfolio, every year you can expect to have 1.5 or 2 lakhs that you receive, which is not necessarily very much if you think about it. Sudhir, the other aspect to consider is the tax, right? So what is the kind of tax treatment on dividends, both from your stock portfolio and IDCW, which is your dividend option on mutual funds?
Well, nowadays this has been simplified. It would be taxed as per your slab. So up to 12 lakh, if your income is low, so you can opt for dividend option also. But those who are in the higher bracket, we don't recommend them to choose dividend option or ICDS. So we don't recommend that also, income distribution, sorry. So we don't recommend as such because the tax level makes your returns of post-tax. You have to calculate post-tax returns.
Yeah.
Right? 30% versus 12.5%. So clearly we can see there is a 2.5% kind of a difference in the return.
So just to simplify this further, if you don't have a regular source of income and you are looking at this dividend as a primary source of income, if you have up to 12 lakhs of earnings, then it's beneficial because you're not paying any tax then. But there is an element of advanced tax, isn't there, Sudhir? If you're earning dividends above a certain threshold, you have to pay advance tax. Is that right?
So yes, if the income overall is not taxable, up to 12 lakh, there is no tax, no?
Yeah.
And after also, if you are saving some ATC or other investment, up to 12 lakh in new tax regime. But those who have home loan, other things, we have to see overall tax liability. If it is more than 10,000 tax liability, then you have to pay advance tax.
So if the overall liability on the dividend that you receive is more than 10%, 10,000?
No. Overall tax liability.
Yeah. So on the dividend that you receive, right?
Total income, total income of an individual. If it is only dividend income, then of course dividend only. But generally people do have interest income also. Sometimes they have salary also. They have pension also. So the total income tax liability is about 10,000. Then once tax liability comes.
Got it. Okay, so fair point. All right. So let's talk about the other options, since the sense that I'm getting, Mohit, and also what I've heard in IDCW, which is your dividend option. I keep saying that interchangeably because a lot of people keep thinking about this as a growth and dividend. They call it the dividend option, but it's called IDCW now, which is income distribution cum withdrawal. But in that second option, Mohit, is it guaranteed that the mutual fund will give you a dividend on a regular basis?
Alex, it's a promise. It's not a guarantee. There is no guarantee in the world of mutual funds. In fact, I think the regulators hate the word guarantee. So there is no guarantee in any of the products which are financial products which are available in the market. So yes, it's kind of a unsaid thing from the fund houses that they will give a regular dividend at a fixed frequency. Having said which, if they run huge losses in the scheme, they are under no obligation to pay the dividend. Only dividends can be paid out by the fund houses only from the profits on the scheme, right? So and typically they have some profits always, so they are in a position to pay regular dividends, but there is no guarantee, and investors should be well aware of the fact that even though they are applying into an IDCW option in a very high dividend paying fund, there is a chance or a potential risk that they might not get dividend for a few months or for a period of time.
Okay, so therefore, the sense that I'm getting from both of you gentlemen is that the SWP or the systematic withdrawal plan option is better from a mutual fund portfolio to pay yourself a regular salary, especially when you don't have a source of income. So Mohit, first to you, how does this work and what are the benefits? How do you arrange for this? Is it better to go towards an equity mutual fund or like a hybrid fund with equity taxation when you're looking to pull money out on a regular basis down the line?
Look, Alex, I think it will depend on a lot of variables in your portfolio. It will depend on your age bracket, the kind of portfolio you have constructed. There is no harm in putting up an SWP option from an equity fund or an hybrid fund or a liquid or a debt fund, right? So it all depends on the profile of the final investor. Let's say if I take an investor who is about to retire, let's say you are at age 55, 56, your complete portfolio, or let's say bulk of your portfolio is equity, and you are about to retire in next 2 to 4 years, you might gradually want to shift that portfolio to more conservative options, and from those conservative options, and primarily that conservative option could be a balanced advantage fund or a hybrid fund. From there on, you can set up an SWP, which is a monthly redemption of your units, and take out the amount of capital plus profits, whatever you need for your monthly sustenance. The good part about an SWP is that when you redeem some portion of capital and some portion of profit both. So you're not paying full taxes on the entire amount of redemption. Let's say if you redeem 100 rupees, there could be 80 rupees or 70 rupees of capital and 30 rupees of profit. So that 12.5% long-term capital gain tax will only be paid on your capital gains, and that too after 1.25 lakhs every year, basically. So there is a lot of tax saving element involved out here, rather than taking a dividend option, which in case you were in the highest tax bracket, then you would have got it clubbed into your marginal tax rate and you would be paying a full tax on that. So SWP is a great option. You have a great tax advantage. The choice of fund will totally depend on your profile, risk appetite, the age cycle, and multiple other variables.
Yeah, but important fact. Sudhir, from a tax perspective, for those people that are in the know, it's called FIFO, what Mohit just spoke about, first in, first out, and that's one of the biggest advantages of the systematic withdrawal plan. You were making a point earlier about this very fact, I think. You want to make that point now?
So my point is, keeping money equity oriented will give you more tax advantage, because the tax laws are different for debt funds. So if you are keeping in debt funds, the tax rates would be different. The holding period would be 2 years minimum. So otherwise in equity, after 1 year, you can start your SWP. So that's the other difference. And generally people have a kind of a fear of equity market. The better returns if we can get in long term, 5 years, 10 years, 20 years, money has to be there, because life is not going to be end after 55 or 60. We have to live, generally people live 70, 80 years. So why look for a safer or I would say suboptimal return? So just leave that fear out and take benefit of equity, and SWP makes that kind of a risk also reduced, because you are using your capital growth.
Important point. Just to close out this conversation, Mohit, incidentally, I must inform you that we had a conversation yesterday about equity savings schemes, and a lot of mutual funds have the use of equity, pure equity. They use arbitrage as well to complete that equity component of the equity savings scheme, and then they use fixed income. But you get that 65% and you get that equity taxation. And so would you say something like this is okay to consider for somebody who's relatively risk averse?
Oh yes, absolutely. Look, equity savings fund, aggressive hybrid funds, balance advantage funds, asset allocation funds. These are great choices for having your STPs going through. A, it gives the advantage of equity taxation, which Sudhir was alluding to. And B, it is more a conservative and a relatively safer way of parking your funds, because look, your ultimate objective is to have regular stream of income, and that regularity with some safety, some conservative allocation can only be ensured with this category of funds. Full safety and full conservative allocation, then you go to debt, but you lose the tax advantage. So to get the tax advantage with some safety, then this is by far the best choice.
Great. I think it's been a fabulous conversation. Mohit, Sudhir, thanks so much for joining me today. Pleasure speaking with both of you. And that brings us to the end of this edition of Your Money Matters. Let us know what you think, and also don't forget to tell us what you'd like to hear on this program. From myself and the team that put the show together, thank you so much for watching, and this is NDTV Profit.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Oh, wow. Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India.
Well, thanks everybody for tuning in to yet another episode of Profit Insights, and it's absolute delight to have Mr. Ramdev Agrawal speak to us today. And not for any other reason, it's always a delight to talk to him, but I think we are talking to him after a week of a lot of developments. And Mr. Agrawal, it's great to talk to you because until, let's say, until the 13th or the 14th of August, the markets and the hopes were looking in a bit of a disarray. And then the S&P upgrade happened. 15th August, Prime Minister Modi unleashed those GST reform conversations. And today we just learned that the HSBC manufacturing PMI numbers are at record high levels for services, and manufacturing too has inched up. My question to you, sir, were those reforms and that upgrade and the global peace talks, are they the much needed necessities in a currently growth-starved world and a slowing down Indian economy?
So, I think Indian economy itself is slowing down in relation to what it was doing last year. If you look at the lot of high-frequency data, there is a slowdown in the economy, and it needed to be kind of brought back into the right track. Say like, so I think it started with the monetary policy. Sorry, it started with fiscal, with the budget giving a bit of a boost. Then monetary policy where credit flow became better. Then came the rate cuts, and now comes the GST Diwali dhamaka. And I don't know what all is there, but I think these are all leading to corporate performance picking up maybe in second half, and then from there I think it will be full blast maybe next year.
Got it, sir. Is this enough, Mr. Agrawal, or do you think we need to do more? Because we've always been, as a country, spoken about as a policy environment which does incremental reforms, not big bang reforms. There have been some attempts made. Was this the first of the big bang reforms that is needed?
Yes, I think by Indian standards, it looks to be pretty good. And it all depends on how much ifs and buts we put in the reform itself. Because what happens is that whether all the 12% will go to 5% and all the 28 and above will all come to 18%, do they do that cleaner job? That is very important. That we only have two rates, and I think why should I have even 40%? I think just club every damn thing on 18 and keep it very clean. Because GST is about the very simplified tax system, digital tax system. So the moment you have more complicated rates, maybe it might be a little more tax accruing or something, because I'm interested in making it so simple that the compliance increases. With the compliance increase, you get more taxes. So I'm not meaning that you should have lower tax collection. Actually, it will lead to higher tax collection if on a sustained basis you keep lowering down the GST. So this round, say 518, I think next round we should do 515, then we should come down to 510, something like that. So that, as the economy responds to the lower cost structure, consumers benefit, and it is much more affordable to consume in India. Because right now, when you go to buy consumer goods, I think it is, the taxation on the consumer goods, particularly hotel rooms and all, are so high that it pinches, So I think this is going to be a big one. And I think the success of this will encourage the bureaucracy and the politicians to take even more bolder step. Because right now, America is setting the trend that they're just throwing all the rule books to the in the air, and they are showing that yes, things like Dodge, where they are cutting the government expenditure. They're negotiating very hard with every trading partner. So I think those are good part of what is happening in the world right now, and I think those things will prevail in other economies also.
Got it. Mr. Agrawal, from an investing lens, how do you look at that perspective, that piece, that a very strong relationship that existed for such a long time, there are some how do I say, differences around that, and India and China are warming up to each other as well. How does that impact an investor's mind in Mr. Ramdev Agrawal?
Yeah, I think I mean, these are two different things. I mean, improving the ties with China is a good thing, and I think we should strengthen the relationship with America also. Why the two relationship has to be at the cost of each other? So I think there is enough scope for US relationship to be strengthened on its own merit, and China, in any case, they are our neighbor. So we have to have a very strong relationship to, the peace at the border leads to a lot of peace and, kind of a focus onto the domestic economy rather than on the borders. So clearly, I would say real priority is the strengthening the relationship with China, and equally at the same footing, because ultimately America is the biggest consuming market in the world, and their market economy. So you can't do without them. So I think our very healthy relationship, which has been going on for decades, I hope we get over this current hump, and there is no any permanent damage to the relationship.
Yeah, much needed. The one small macro policy question, Mr. Agarwal, is the belief that some quarters of the market have now, that because growth has slowed down a bit, and because inflation might come off as well, the RBI has more room to cut rates, and the terminal rate could be 5%, which could actually be good for growth. Do you second that, sir?
Yeah. See, it's a Lollapalooza effect in the sense that credit flow, cost of credit, the regulators becoming much more accommodating, lower fiscal rates, lower monetary kind of a thing, and then lower GST. So you keep throwing to the this thing whatever is required for consumers to come out and consume, because without that the private capex, which is one of the largest engine for any economy to happen, is not happening. Because the private capex is saying that, boss, if there is no demand, why should I put up additional capacity? Because that will become a big burden on me. So the moment consumption starts, you don't have to tell them, they'll put up the capacity. So I would think that it's a start of the engine, and I hope this GST is a good starting point. And as much as they can do it in this, since Prime Minister has already said that he is going to give the Diwali bonanza, actually they should load even more than what market is expecting. So this is a good time to really go whole hog into reforming this policy.
Okay, well, I hope somebody out there is listening, and I'm sure they are listening. Mr. Agarwal, what does that mean for the markets as well? You've been on record now saying that after that initial spurt post-COVID, the earnings growth has kind of come off a little bit. And the real wealth only happens when we move to 1,500 to 2,000 rupees EPS on the Nifty. Does that happen in the next couple of years, sir?
Yeah, so we are at about 1,000, 1,100 kind of EPS, 1,100 rupees EPS. Now I think we are stagnating at about 9-10%. This quarter actually is better than what the analysts they expected. That is, at my end, our analysts were expecting about 6-7%, and actually turned out to be 9-10% of the earnings growth. So clearly, analysts are really little behind the what to expect. And as you said, PMI and other things are somewhat better. Oil is holding out at 65, 67. So I think there are a lot of backdrop is very good. Just that little bit of push in from the credit growth particularly, that will lead to the better consumption. But credit growth is yet to pick up, and there is no reason why it will not pick up. As the RBI and even the Finance Ministry, they are on the job to see that credit growth picks up, and at a lower rate and lower prices of the products, I think consumption will pick up. So, but then we have to have patience. 6-7 months it might take. But so my sense is, by the time it is third or fourth quarter, you will really see impact on the earnings growth. But then markets will be smarter, because companies will be working 3 months, 4 months in advance. So the mood is going to be much better. So I won't be surprised if the markets start going to new highs more just around Diwali time. And once, I think on the day of announcement of GST, actually, when you say that, okay, from today onwards, instead of 28, it is 18, I think numbers will be very different. The index will be very different. Now, where it will go, how much it will go, domestic flow is so strong, and foreigners are kind of not interested in India. And I don't think they'll be interested because, for whatever reason, global reasons, they may not be interested in India because the valuations don't fit into their scheme of things. And they'll keep missing out on India because India's domestic flow is so big that we'll be able to take the market ahead on the back of earnings growth.
In the past, you've told me, Mr. Agarwal, that जो फिरंगी बेच के गया है वही ऊपर के भाव में लेगा. Can that happen over the next 3 years?
Yeah. It looks like, because we are running ahead so fast that they want to catch up. Whenever I go to Singapore, Hong Kong, they all tell me that they love India. They have whatever little they have invested. Some guys, they have left. How do we re-enter? I said, India is a decadal story. It's a compounded story. And bereft of any kind of recessions and all. There is a slowdown, but there is never a recession kind of situation. So it's a market which is very compounded, anywhere between 10 to 15% per year, and with a very limited drawdown unless there is some global problem. So, but then you can't be in and out because when it will explode, nobody knows. So I think. They will come back. Of course, they sold at 20,000, 25,000. I think they have to come. If this earnings blast happens post-Diwali, I think they may relook at it. But looking at the kind of underweight they are in, I believe there was some note that 60-65% of the FIs are underweight on India. So that is also creating another bazooka kind of situation that whenever they turn, everybody will turn positive. And at that point of time, domestics also want to buy and foreigners also want to buy. So what is going to happen? So I think if the earnings pick up, quite possible P will also go up. So if earnings comes to 15-20% kind of growth next year, say 26, 27, I think the P multiple might go from 22 to more like 25 or so. So that kind of a situation is also possible.
Wow. Well, it will be amazing. Okay, so viewers, the first half of the show, we've discussed the macro and Mr. Agarwal's view on what shapes up the environment going ahead. He's clearly constructive on the GST cuts and the monetary policy actions that have been taken. I would love to know from Mr. Agarwal how to play this as well. Mr. Agarwal, the common lamenting that people do when it comes to India, that there is no AI story. There are very few globally competitive stories in that sense. So do we look to create NVIDIAs and Googles, or do we search for our versions of NVIDIAs and Googles?
Yeah, so see, basically NVIDIA and Google means what? They have a very high rate of earnings growth. Okay. So that's why I ended up saying that our NVIDIA could be, say, Zomato kind of a company. See, one thing is that internet is a magical thing, and internet is there in full force in India. Whether there will be internet technology companies or internet using companies. So, because internet is very democratic, it is spread across and it is a real time. Kashmir to Kanyakumari, you can do it in a kind of flash. There is no gap. So, it has that tendency to create businesses or accelerate the businesses very, very fast. So, basically, if you look at NVIDIA, which is the most valuable company and most, I didn't know the name 3 years back, and today it is the company. It has grown about 35-37% in last 25 years. It is almost 5,000 times from the issue price. So what I'm saying is that is there a company or is there a business in India which can grow at more like 40-50% and with a massive TAM, in the sense that the addressable market is very large. And that's where I see the quick commerce or all the internet businesses, where actually it's a value migration from a traditional source to the new source of delivery or buying through internet platforms. So in that case, what happens is that large opportunity get satisfied by these new platforms, and hence the growth rates can be 100%. All these quick commerce companies are growing at close to 100% per year, and it looks that they can grow, forget about it, 100% for a very long time, but at least 50, 60, 70% they can grow for next 3, 4, 5 years till they become 10% of the total grocery market. Now, if that were to happen, right now they're not making money. But when they start making money from 0.5% to 1% to 2%, 3%, I think the earnings growth will go at more than 100%, 200% because of operating leverage. So we are into a massive. So for me, NVIDIA doesn't mean internet company, AI company or whatever. every country will have a different business which will grow at a very rapid pace. Somewhere it might be banking, somewhere it might be quick commerce, somewhere it might be tech companies, somewhere user of the tech. So what really matters in investing is where is the tailwind? Where is the tailwind which can propel the company at a very rapid pace for many years to come? So that's where I think India will have opportunity of building internet's best businesses the way it is in US and all. I think in next 10 years out of top 10 companies, at least 4-5 of them will be digitally oriented companies.
And Mr. Agarwal, there is no telling what will those be, but you reckon that from amongst the listed crop of internet-backed or internet-based companies, there could be some of them which could be in the top 10 companies over the next 10 years?
Yeah, I don't have any doubts about it. It will be. It will be, and they will lead the pack. Right now, since they are ahead, they are large, they are capitalized well, and they are consumer facing, so they have a great chance. High probability that 99.9% they have the chance to be in the top 5-10 of India's market cap as we go forward. And how exactly India's market cap will grow at about 18% per year for next 10 years? This will be led not by my old businesses. It will be led by these businesses because they not only grow the top line, they also grow the bottom line. So I think the complexion will change. Say, private sector banks in 95, there were no private sector banks. Today, large market caps are coming from private sector banks. Like that, in next 10-15 years, you see digital companies coming from various businesses will dominate the market caps.
Viewers, I must recommend, Mr. Agarwal had recommended me to read Value Migration by Adrian Slywotsky to prepare for a show on value migration. I sense some bit of it in the conversation that Mr. Agarwal is making right now. Mr. Agarwal, we should do a repeat of that series for sure, on value migration, on compounding and more. But I would love to I would love to ask you my next question, sir, and which is on consumption. So because this internet bases are based on consumption, this GST reforms help consumption. Do you think this ushers in the near term a growth in consumer facing businesses, discretionary or staples?
Come again?
The GST cuts that have been announced, can they spur consumption, sir?
Yes. Yeah, it will, no? Because if, say, in automotive, which is 50% of your manufacturing, see, Neeraj, our manufacturing is growing, struggling to grow at 3.5%. My GDP is growing at 9%. So the whole growth is coming from services. So how do I grow at 6-7% on manufacturing? So we have to go and ask ourselves, what is keeping us back? Why we are importing so much of manufactured product from outside? So not all the reasons, but one of the reasons is also the taxation. We have to make our goods much cheaper and affordable to the masses. Masses have very limited income, so the only way you can make it affordable to them is to make the goods only cheaper. And the propensity to consume is very high, and you give them credit. So then when the goods become cheaper and you give them credit, obviously the consumption will pick up. And we will see, as aggressive you are in giving the concessions, keeping your fiscal balances in mind, I think markets will respond. And I think once they respond here, then all the government officials, they will know that, okay, in 3 years' time, we are again back to collecting more than what we were collecting earlier. Let's go and do it from 18 to 15. So the whole objective should be that how do I collect X amount of taxation and grow the economy at a rapid pace. Just that somebody is rich, so my objective should be to collect more taxes rather than punishing any class of consumers, because the purchasing power in India is confined to the top 20-25% of the people. So if you don't make the consumption attractive for them, I think you will miss the bus.
Yeah, don't single out. Okay, that's a valid point. Sir, autos, consumer discretionary, they've struggled for the last 6, 9, 12 months, if you will, broadly. I may get the timelines off here and there, but they've largely struggled in the recent times. Can this change the fortunes? Do you expect a meaningful uptick there?
Yeah, I would think that, to my limited understanding, of course, you have to speak to the companies, but the credit availability, credit flow, don't stop the, you have regulators have responsibility to see that credit flow is very smooth, and actually it is their responsibility to, instead of blocking the credit, have the macro level kind of a control. Now everything is flowing digital, so of course you have to see how the banks or NBFCs who are handling the credit are doing in aggregate rather than micromanagement of this you do, that you do. I think sustained credit flow in the economy at about 15-16% is very important, but then of course it is all wishful thinking. What actually regulators will do, that time will tell, but good credit flow and reduced GST, meaningfully, very clear. I think it will be wonderful combination.
Mr. Agrawal, the other question is on whether you would believe that the portfolio, your portfolio or an average portfolio should be more domestic oriented currently because the global piece is a bit unknown, or do you find value in the exporting sectors?
Exporting sector. So I would be giving more value to the domestic oriented profit than export oriented profit, particularly to the US, because now the policies are such that we don't know which way the wind is going to blow. I mean, there could be a breakdown for at least a quarter or something, or there could be, because I don't see tailwind. It is how much is the headwind? Is it going to be the same or headwinded? We don't know. Right now it is headwinded. So we don't know what is going to be happening in next 2, 3, 4 years. So I would, in my mind, 100 crores coming from Indian consumers and 100 crores coming from, say, US consumers. For me, 100 crores coming from Indian consumers is almost 1.5 times more valuable than US consumers.
Wow, okay. The other thing is, sir, because you look at cycles and the profit pools so consciously, if the last 25 years were dominated by banks, IT services, and some others, do you think, while you are constructive internet, but non-internet IT or banks, pure play banks, do the profit pools and their weightages in the Indian markets change decisively? And are there other sectors beyond internet-backed businesses that could become larger as a pool over the next 5-10 years?
Yeah, I think bank and financial services and now capital market services. Neeraj, people are undermining. I'm telling you, this capital market services, you might club it wherever you want to be. It will become very large. Right now, approximately, see, the way to think about it is 0.5% of the total market cap. So market cap is about, say, 5 lakh crores or say, 480,000 crores. So the total addressable services brokerage or commission and fees is about 160, 170 on the free float. Actually, our free float is about 2/3. So on the free float, the revenue base for the industry is about 0.5%, which is about 155, 160,000 crores. Now free float is growing at, so the market cap is growing at about 15-16%. But since promoters are selling, now that's the only block left to be sold to the investors who are coming in day out. So now promoters blocks are coming. You might be seeing so many promoters blocks coming. So promoters are selling a little more. So I think the free float market cap in India is growing at about 18%. So in 4 years flat, it will double. So the addressable commission or addressable market is growing at about 18%, which goes from 1.5 lakh crores to 3 lakh crores in 4 years flat. And it is the nature of the business of the capital market is very consolidating. I mean, you have only about 10-12 meaningful brokers. 10-12 brokers have 80-90% market share in asset management, in wealth management, in the broking, and in other market intermediaries. There are only 1 or 2. So it's very, very consolidating. So, and asset light, very, very asset light. So I think there is going to be a lot of wealth creation from this particular segment also.
And sir, if I can just, last question here today, and which is that in this cohort, because it's a wide cohort now on the listed side as well, are the service companies a better bet, or are the ones which are giving those platforms, if you will, and those services a better bet? So if you were to, do you pick and choose, or do you believe it's good to buy the entire cohort of businesses?
No, then you have to get into, kind of entire value chain, figure out who is good in manufacturing, who is good in distribution, and who is good in integrated kind of thing. But even just pure distribution, but very powerful distribution companies are also going to be very valuable. So I think you have to see who is good at what level. And so my sense is that this is the era, like the next 10, 20 years, this will give birth to one local Morgan Stanley, one local Merrill Lynch, one. So I think we have created world quality, world size, and world class, global size banks. I think now the time is to create world class asset management companies, world class broking companies, and I think you need a lot of support from the regulators for that to happen. Of course, they have been very helpful, and that's why we are seeing some emergence of this large houses. But as we go forward, I think we can see emergence of few very large companies.
Well, and we'll be here talking about that with you. I have no doubt your company would be one amongst those because of the kind of feedback that I get from people who interact with your firm in various capacities. And we love talking to your firm as well, sir. But thank you so much for talking to us today. And we are at 21st of August, Mr. Agarwal. Diwali is 2 months around. I'm sure we'll get a chance to talk to you once more ahead of Diwali.
Yeah. Sure.
Thank you, sir. Thank you so much for talking to us.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up.
Good evening, you're watching The Big Question. I'm Sanjana. Now, as you're probably aware, we've been reporting this last week about the government's proposed GST 2.0 structure. Now, this one promises to simplify slabs and cut costs across sectors. But one of the biggest potential winners, you and me, the policyholders. Because health and life insurance premiums, currently taxed at 18%, could soon be fully exempt. Now, on the surface, that looks like a 15% drop in what you pay for protection. But here's the catch. If insurers lose their input tax credit, they may pass on hidden costs in other way. There's another crucial question that consumers are asking, and we're asking it too this evening. If the exemption, say, starts October 1st, will it apply to only new policies or also to renewals? For term and health insurance, which are renewed every year, the renewal date will decide the benefit. So that could mean real savings for millions already insured. So this evening we ask, GST exemption on insurance, true relief for families or a hidden burden for the future? To discuss this, I'm joined by Najib Shah, former CBIC chairman, Narendra Bharindwal, president of the Insurance Brokers Association, and Kanan Behl, founder of FinGrowth Media. Thanks so much for joining me. Welcome to NDTV Profit. Let's start with what everyone watching actually wants to know, including myself, whether premiums will actually come down and who benefits first. Kanan, as a consumer finance expert, do you see this translating into immediate savings for families, especially since renewal dates are deciding eligibility?
So, thanks, Anjana, for having me. First of all, to answer your question, will this lead to savings in the hands of consumers? So, right now, there's not much clarity as far as the rates are concerned, how they will be shaping. But there's one critical thing that we need to understand, that is the inverted tax duty rate structure, which you already mentioned.
Correct.
There's this, if you look at the tweet from the Ministry of Finance, there's one reform that is being talked about, which is, not being talked about on the internet at all. They are saying that the reforms will correct inverted duty structures to cut input tax credit accumulation and boost domestic value addition. So we can really hope that this problem gets solved of the inverted tax rate duty structure, which will help eventually the insurance companies in passing on the benefits of the reduced rate to the consumers.
All right. Narendra ji, from the industry side, is there clarity yet on whether the exemption applies only to new policies or renewals too? What are you hearing?
Thank you, Sanjana, for having me today. See, any government reform that is initiated, it is generally prospective in nature, not retroactive in nature. So assuming hypothetically the message and speech had said that there's going to be Diwali bonanza. So we are hoping that it's going to be prospective, and from the data, assuming that from 1st November it's going to be implemented. So all new policies that policyholders are going to buy and all renewals post 1st November, all policyholders will get this benefit of reduced GST, reduced or zero GST, whatever it is going to be.
All right.
Coming to input tax credit, so we need to look at holistically. See, the IRDA has got a 30% expense of management regime for insurance companies in place. So if an insurance company is collecting 100 rupees in premium in a year,
they can spend 30 rupees on all their expenses. The remaining money goes into the loss reserves for paying claims and goes into investment income for getting investment incomes. So these two things are there. So I don't think that for every rupee of GST collected by insurance companies, 100% input tax credit is availed by them. There is a significant portion which goes as payment of GST to the government of India. So this is going to have, we have to look at this from standalone health insurance companies' point of view and general insurance companies' point of view. Standalone health insurance companies, their revenue is pure health insurance premium. So, of course, if assuming government makes zero GST on health insurance, it will impact them. So whatever input they were taking, that is going to marginally increase the premium for the policyholders. We believe still after this, policyholder will get at least 12 to 14% reduction in price because the 18% GST will straight away go away. And for general insurance companies, since they have got a significant book of non-health premium on which they collect GST, they can get the input tax credit over there. And there, I don't think the impact of input tax credit is going to be major if they are not getting input tax credit on health insurance premiums.
All right. Okay. Very well explained. And I'm actually going to prod you a little bit more. But before that, I'm going to get a quick word in from Najib sir. You know, from a policy making lens, do you think that we potentially need a little more clarity? And I'm sure that we'll get that once there's a formal announcement. But just to avoid any kind of misleading expectations.
Thank you. The excitement which has been caused by the Prime Minister's announcement across the trade and industry is phenomenal. And mind you, this is a proposal which has gone through to the GOM, and the GOM from today's feedback one gets has recommended to the GST Council. Now, obviously, there's going to be a lot more debate and discussion in the GST Council. And from the state's perspective, there'll be serious concerns about revenue. They would like to be assured by the center, which I'm sure the GOM has had occasion to look at. They will need to be assured by the center that revenue will not be seriously impacted because of these reductions proposed. Having said that, there's no doubt that these recommendations of the Prime Minister and the GST Council are very, very welcome. This is something which the industry was asking for it. And now that it has come, I think we should just be a little more patient for the GST Council meetings, which will happen very soon, I'm told. And thereafter, it goes to the center for the necessary formulations, which is when we will get to know the finer details. And in all these matters, the devil always lies in the details.
Okay, so I think the consumers, so what I'm understanding is that the consumers may cheer, but like all of you are saying the same thing, that the fine print obviously matters. So I want to now turn to the insurers themselves. The technical worry is that without this input tax credit, insurers are facing new costs that could cancel out some of the consumer benefit. Narendra, how big a dent will this ITC loss, if it happens, create for insurers? Will they be forced to hike base premiums later?
See, generally, insurance companies, when they arrive at the underwriting price for health insurance or the premium, they factor in to a certain extent the input tax credit that they are receiving. So now if, the hypothesis is that 0% GST on health insurance. So as I said, for standalone health insurance companies, yes, it's going to impact because there'll be no ITC available. But we have to see that all premiums collected by insurance companies don't go in expenses. There's a cap of 30% of EOM by the regulator. So only 30% of the premium earned can go towards management expenses and other costs on acquisition of business and everything. The remaining 70% is for loss reserve, payment of claims, investment and getting investment income so that they can honor the future claims and everything. So for standalone health insurance companies, I believe there is going to be between 4 to 5% cost that they will transfer to the policyholder in due course. Immediately, the day this is announced, assuming that 1st November is going to be the date of implementation, all policyholders, whether new or renewing, will get this 18% reduction. Insurance companies will go back to their drawing boards and understand what's the impact on the ITC and then calibrate their premium pricing, which will come into effect hopefully in the next financial year and not in the current financial year.
Okay, all right. So then, Najib sir, in your view, does the council then, or even, those that are creating and actually raising this policy, do we risk creating distortions in the market by going for a 0 instead of a lower slab like a 5%?
Look, the industry always wanted lesser slabs, lesser rates, and now that you've got it, or apparently you seem to be getting it, other concerns
we're poking holes in it. Okay.
Yeah, absolutely. And mind you, the challenge which another friend had mentioned earlier in the program of input tax credit is precisely this. An ideal situation would be when you have lesser slabs for all inputs which go in a final service or goods, which inputs will be used to discharge a liability, and you will have to pay by cash only a small portion, having exhausted all your credit which has gone in the various inputs. Now that's an ideal situation, and as a former tax administrator, I can tell you is extremely challenging. What is an input for one may be the final product for another. So trying to factor all inputs which go in a final product and trying to ensure that there's a smooth, seamless flow of credit is very challenging. And any such proposed reduction, as we are hearing, of 18 to 0 will have consequences on the accumulation of credit, because there would be multiple services or inputs which have gone, on which now they'll not be able to utilize it for any discharge of final liability because there's no liability. So that is always going to be a challenge. But I think, look, we have got what we always wanted. And again, as a former tax administrator, I can tell you, we wanted to have such a reduction in slabs. But when the GST itself was being formulated, obviously the revenue concerns were far too serious for us to look at this sort of collapsing of slabs. It has happened now. We should welcome it and wait for the GST Council and further developments.
Absolutely. I think everybody is keeping their eyes and ears peeled. But Kannan, could this affect efficiency in the system? I think that's also something that Najib sir rightly raised, and it's bound to happen, right? When you announce something new, there is going to be the teething issues. There is also going to be everybody trying, getting used to it and getting the relevant knowledge. But could this affect efficiency in the system with slower claims, reduced product innovation, if insurers then are absorbing too much of a cost?
So, like Mr. Narendra said, right, it would be largely available on the general insurers which are offering other products than health insurance as well. So, for example, if I have to take an example of a general insurer which offers health insurance as well as, say, marine insurance or home insurance and other kind of insurance products. So we need to understand this, that eventually the input tax credit would be available to the insurer, and the cost can be passed on to the customers. While in the case of standalone health insurers, this can become a challenge for them to pass on the cost, considering the competition as well. Now, as far as inefficiency is concerned, obviously, when initially a few changes are brought in, there are hiccups in the system and as to how it is changed. But I don't see, like, it is a very competitive market. I don't see anything becoming lesser competitive because of a tax rate structure in terms of claims and other innovations.
All right. Okay. Well, I would say that's reassuring. Let me just zoom out a bit and talk about the broader picture and what this says about India's tax policy and how we compare globally. And Najib sir is nodding because I'm going to raise the same issue, because most countries don't go to zero. The EU, South Africa, I believe, Mexico, all levy between a 5 and 20% on insurance. So should India really take that exemption route? Najib sir, as somebody who shaped tax policy, then do you see this as a bold move for inclusion, or what is the risk with something like this?
Look, it's obviously a very, very bold move. I don't think anybody anticipated such an announcement.
Right.
We all thought there'll be some reduction in rates and a reduction in slab, but not such a dramatic announcement. So yes, it is a very, very bold move. You kept mentioning costs. Let me just say it is not so much of cost as much as lesser profits if you have to absorb a little bit of your credit which cannot be passed on. I think the industry kept asking for an exemption right through, and correct me if I'm wrong, my other two friends from the industry, you kept asking for exemption and stating that health is a very critical factor, which is a very critical aspect of every single individual and family. So health insurance, everybody felt, should not be levied to any such GST. And, as a general policy in tax administration, every exemption distorts the flow of credit. Because what happens if there's an exemption? It means that whatever credit has been accumulated till that point of exemption gets accumulated. It cannot be utilized. So again, from a tax policy perspective, all exemptions are bad because they distort the entire flow of credit across the value chain. Because remember, GST is a tax on every value increase which has taken place along the chain. So I think we are jumping the gun. We need to be a little more patient because there is so many unknown factors here. We do not know how the GST Council will look at it. It may say that, look, don't bring 18 to 0, bring it to 5. I don't know. I think we just need to be a little more patient.
All right. And I think that is useful because it will definitely serve us to just wait and watch because the formal announcement is around the corner. Narendra, will a GST exemption truly deepen insurance penetration, or is there a potential of it backfiring if base prices creep up again?
No, certainly this GST reduction is going to enable insurance penetration. There's no doubt about that. Specifically, if you would see the senior citizen segment, because of this GST component, many senior citizens decided not to take insurance because it became very expensive for them. So from our association, it has been constantly been asked in the past that reduce GST on health insurance and if possible, at least exempt GST for senior citizens. Because that will be a great service for the senior citizens because they can plan their insurances, health insurances appropriately and take increased cover for them because that's the time when they need increased cover for themselves. So this reduction in our waiver of GST, we strongly believe is going to make it more affordable and penetration is going to increase. The need of the hour is that all the industry partners create proper awareness and take it to the policyholders.
So if I were to ask you, what is that line of awareness that you would like to create, and you can use this evening's program to say exactly that. If you had to answer a couple of questions that most policyholders or potential policyholders had in mind with regards to renewal, new policies, about existing policies, what would you say? What would be your 2 to 3 key points that you'd like to share?
I would urge policyholders to think about insurance as risk capital because the moment of truth of insurance, nobody knows. This is all in the realm of the future. When you may fall sick or when you meet with an accident, that's the time when your policy has to respond to you. So don't consider insurance as an expense. Investment in insurance is risk capital, which will be made available to you in the hour of need. Second thing, it's important that we use our insurance policy very judiciously. There may be insurance companies and policies offering you, no room rent capping and everything. Let us use the insurance policy as though we had to fund that healthcare cost when it had to be used because it's